you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, my son. No more knuckleheads, just the two of us. And then there were two.
Oh wow, I feel so loved. I'm not a knucklehead. It's only a knucklehead when Vanetta's here. I hope she's not listening.
It didn't elevate you to star status when you're the last one left. That's how it works. That's how it works.
I don't know if it's like last man standing, like the last available, the only available.
Best available.
Best available. That's right.
Best available. Well, how are you, son? I hope you had a wonderful night. I'm going to talk about myself for a quick second. Because
sure, I got something for you afterwards too.
Do you?
But yeah. Go ahead. Do your spiel.
I was going to say, well, Chandler, your sister's coming in on Sunday, so wife is in full, do not bother me mode. I got to get the house ready for your own child.
What does that entail? Do you do some of the cleaning, the cooking? Do you set the bed?
No, it means I had to make sure that I ordered the Chinese food from Lan's because we couldn't dirty the kitchen.
There you go.
It's coming on Sunday, but we couldn't dirty the kitchen on Thursday. You want to see how that works?
At least you're getting Lan's. I haven't had that in quite some time.
Quite good. Little Lan's in
Winnetka,
Illinois area. Very, very nice. Very, very nice. Mm-hmm. Good stuff. So that was our whole evening last night. That was it. That was it. Planning for the coming of the child to the home.
Riveting. Well, yeah. I have a friend who went on a little hunting excursion. He is quite the hunter. I have acquired 22 pounds of elk meat. He's friends. He is a hometown friend of my girlfriend's, and he says to me, he's like, "I'm giving you a care package of meat." I'm like, "Okay, great." I have an entire. It is filling my entire freezer. I have ground elk. I have summer sausages. I have some brats. I have a little bit of everything. So I'm trying to see if you are interested in any meat.
I am not interested, not in the least.
I feel like this is right up Vinny's alley. He wants to chef it up. Elk meat?
Okay. Now that you, I was thinking selfishly just about myself. I'm not the connoisseur of game meat. But yeah, your brother would probably enjoy that. Yes. Yeah, your brother would probably enjoy that.
Okay, so I'm going to put you down for a pound of meat. And I'm going to bring that sometime next week. So you're going to
bring it. Are you going to bring it in such a timely fashion, like when you brought my money, which took you about two
Maybe
months.
I'll come on Sunday and I'll bring you 5 pounds of it.
No,
okay,
please don't.
I have more meat than I can ever eat.
Have you ever had elk?
Yeah, it's good.
Yeah, it's good. You had an elk burger, right?
Yeah. I mean, it's not like it's no different than a beef. If you were to make it, you probably wouldn't notice all that much of a difference.
Fair.
I mean, it's a good red meat. It's a little gamier, but
lean.
Yeah.
Yeah. But we don't I don't like even the Chinese food that we had last night, which is probably that and pizza is probably the only thing I will eat the next day, pretty much. Like, if I was hungry for lunch or dinner or something like that, I would probably warm that up and have it again. Yeah.
You're not going to eat this again, but you're going to have it once. It's perfect.
Right. As if I put it in my freezer, it will remain there until I clean out my freezer again.
Yeah, now imagine if you had 22 pounds of it. They have summer sausage. I have like Slim Jim style things with it, kielbasa. It's the whole thing. It's my whole freezer. So you're getting some, Mike's getting some, Gus is getting some. I got to get rid of this. And then the crazier part is he has like a family compound in Montana, like a farmstead. And he has a bunch of like cameras set up like in the woods, like tracking all the game.
Oh, sure. Oh, these guys are professionals.
Professionals. He's been tracking a bear. He has a bear on the compound that he's seen like multiple times. So he's flying out in the next couple weeks to go hunt this bear. And he says, you have to eat the rest of the elk meat before I catch this bear, because when I get this bear, you're going to have 40 pounds of meat.
Oh, because the bear's bigger. Sure.
Yeah, the bear's bigger. And I was like, can you, I didn't even think you could really like eat bear meat. I feel like it would be like really gamey and disgusting. I had wild boar one time.
You had the ass of a wild boar. I remember you showed me the picture.
No, we had the whole thing. We had the whole wild boar because we thought when we were doing this, like there's a place, it's called Frontier. I don't think it's still here anymore on like Halstead or something, kind of like in Wicker Park.
They do all kind of game.
You can get anything. You can get a pig. You can get a wild boar. You can get an alligator tail. You could get like, whatever. So we picked wild boar because we're a bunch of idiots. And we were thinking, okay, well, it's in the pig family. It's got to be like pretty decent. It's something a little exotic, like should be fun. And we get it, and it was the toughest, gamiest, like it had like a stink to it. It was just disgusting. It was horrible. And so I was thinking bear would be in that realm, but he said it was a bear is the best meat you can get, especially bear, but there's two different kinds of bear meat. There's trash bear meat, like the ones that are like eating out of garbages.
Oh, yeah.
You don't want those bears. But this bear that's like in the woods, that's eating like berries and nuts and like, animals, that sort of stuff. That bear is going to be a tasty bear.
All right. Well, I've got peeps who, don't know anything and say, oh, don't worry about it. It tastes like chicken. Like, that's been the feedback so far. Don't worry. You'll like it.
For the bear or for the elk?
All of it. Tastes like
chicken. Tastes like chicken.
They don't know anything. And then I got my buddy John from Florida. He knows, and he has sent me pictures. He goes out into the Everglades and hunts alligators, and he's a hunter. All right, he goes all the time, like on those boats that just skim the ground, the water and stuff like that. He's a guy. He said boar meat is awesome. So that's the first grain of salt that you have to take this with, but he did say skip the bear meat. He
did.
Yeah.
Okay. I'm a little, the bear meat kind of freaks me out a little bit.
And the boar meat you might have had a male. There's a lot more of adrenaline in the male boar meat than in the female boar meat. So did you specify what kind of boar you want?
We go gender neutral. We don't assume it's gender. I'm not sure which it was though.
You weren't sure what it identified as?
I think also the problem was that we had like the whole boar and they cook it like over a spit for like 24 hours. Mm-hmm. And so it was cooked to well done. It was not a good experience. And the best part is we had all our girlfriends and wives with us. So they're there and they're like, this is disgusting. Like it was just.
They went out for sushi. They probably left you, went down.
They were like, you guys can have this. We're not touching this. It was disgusting.
I would have been with the ladies. I'm not going to lie.
Okay. So the bear meat, I'm a little skeptical of. But you'll get some of that too. I mean, I'll text Vinny right now. I'll tell him I got some, no preservative, fresh caught, fresh killed elk meat for you. I got it in all variety of ways. I'm sure he'll be a buyer.
Okay, I think he will. I think this is right up his jam. So please, looking forward to it.
I see some comments coming through on the YouTube chat. If you guys are there, you can throw some questions in the chat. We'll try and answer them throughout the morning session, phone in time while Vanetta is gallivanting through the woods. Maybe she's going hunting. What do you think the chance of Vanetta coming back with an elk is?
Did you? I asked her where she was going. She wouldn't even tell me where she was going. Which leads me to believe that she's probably emptying out her basement a little bit of some unwanted leftover
bodies.
Trophies, trophies. Those are the same trophies that she has lying around.
Like modern day Dexter.
Yeah. Maybe.
But there was one question in the chat I would like to, because there was a video that went out with you and Tom doing your testing of the
Coffee versus tea.
Coffee versus tea.
Yeah.
And they were a little disappointed that, you only got one right.
I was over.
Yeah, and to Baba, so Baba, my dad was drinking coffee. Tom was drinking the tea.
Yeah.
But they would like to know if it was rigged.
It was definitely rigged. They cut it out. On the bottom of his cup, it was the Dixie cups. And on the bottom of his cups, he had DD for Dunkin' Donuts, S for Starbucks. I mean, it was a 7 for 7-Eleven. They cut it out. But he kept the $20, just so everybody knows. He kept the $20. That was real. He did not give me that back.
Okay. All right.
He did cheat. There's no way he goes 5 for 5. I knew after he got the second one right that it was rigged. I mean, they cut it out. Of course.
Yeah, you knew just by probabilities. There's no way.
Yeah.
The question is, what do you do next? How do you best him?
Well, we talked about waters, and then we talked about burgers. We talked about burgers, but I don't think he has the budget for burgers because I don't think Lost Dog is doing that good. So we might have to just do waters.
Waters would be good.
Yeah.
I think you could do that one. You just need like a moderate judge, a non-influence judge.
In fairness, the coffee was ice cold, basically room temperature.
Yeah,
and I haven't had a 7-Eleven coffee in 30 years. I haven't had a Dunkin' Donuts coffee in 25 years. So it was not something planned. It just happened when I went to go visit him, and he uses my talents because he has pictures of me in compromising ways. So he got me on there.
I have some other people. Frankie is telling me the bear meat is awful. I got some people telling me that, some people get seriously sick from bear meat. It's not this was my thought too, but my friend was very convincing. He said it's the best meat in the world. It's sweet. It's amazing.
I mean, I take his word for it. This guy sounds like a serious hunter. I mean, serious. I will tell you this, though. A little known fact. Our friend Josh, who happens to be paralyzed. He's in a wheelchair. His last meal while he was still walking was bear meat. But I don't think.
That's what happened.
Yeah, I don't think it had anything to do.
You're going to trigger him here.
Yes. Yeah. Just probably a coincidence. But enjoy the bear meat.
They're saying
you're evil.
I'm laughing at the chat because the Griffin's like, he's saying that you'd be taking Vinny to the doctor and the doctor would be like, how did Vinny, a Chicago Burbs kid, get trichinosis? It's from the bear meat. So good.
It's gonna happen. Hey, you know what just happened just now? The NASDAQ turned green. Are you surprised?
Oh, shocking. Oh my God!
Yeah, the NASDAQ
thank God
were red. The Russell's up 7, and the NASDAQ's up 12 or 13. Even the S&Ps are up 24 going into.
Oil just moved $2. Somebody give me what's happening.
Yeah, give us a look see, will you?
Is the war over? I mean, isn't this par for the course? You get a Friday Axios report. Negotiations are going great. The ceasefire is almost, the war is almost over. The ceasefire continues, something like that. I think it's about that time that we get that into the weekend festivities where things start popping off.
My Taiwanese sources who ate the bear meat said that Iran delivered on Thursday to the U.S. through the Pakistani mediators its response to the latest U.S. amendments on the agreement to end the war. Regional sources tells me, blah, blah, blah. I don't know.
Is it from Axios?
Yeah. Yep.
It's from Axios?
Axios, yes.
I swear the Axios has been like they've been taken as a government source at this point. That is not a news outlet. That is like it's just the equivalent of like CCP propaganda. Because there's going to be 4 or 5 more of those that come in the next like 15 minutes. What kind of game of telephone is that? The Iranians talk to the Pakistanis, who talk to the Indians, who talk to the Chinese, who sent it over to the Israelis, who gave it over to the United States. What is that? What does that mean?
Axios is owned by called Cox Enterprise, a private family conglomerate out of Atlanta, which acquired the company for $525 million in 2022. Yeah, that's like this is the they also own like Auto Trader and Kelly Blue Book.
Those are bullshit too. I mean, you look at those, it tells you your car's worth, 30 grand.
They should have. You
go to Carvana and they're like, we'll give you 10.
They got like excellent, good, and fair condition, and then they should have the price you're going to get at the dealer.
They should put
the real price.
Yeah, the real price.
This is my argument with my Taiwanese source. I always say, listen, you get your news from Iran now. I mean, we're in a war with them, and you're going to get your news from them. They say they don't like the deal. Yeah, what do you think they're going to say? You're negotiating something. I love it. I mean, it's whatever.
Well, that's good.
My buddy Frankie just said we had a Cox family out of Kentucky that was a trader, great guy. Charlie Cox is his name, still alive. He is not related to the Axios people.
We won't group you in.
Otherwise, I would have called Charlie up myself and asked him what the hell's going on.
We did. I mean, it's not a shock that the market's a little bit strong. You got Apple up $10 here, but some of the memory stocks.
Yeah, what's going on with Apple?
About $100 billion buyback. Raising guidance. It's become a utility.
It has become a utility. Yeah, it has become a utility. Even the S&P's at a relatively tight range. Matter of fact, they just broke that range a moment ago. They're up 20 in change right now. They only had about a 20 handle move top to bottom last night. But we'll go through all of that in a moment. But so far, you've got much to do about the same as yesterday, right? Or really, like this whole month. My other Taiwanese source said the S&P gained. How much do you think the S&P gained?
I saw a stat that it was the second best April ever.
Yeah, a little over 10%. The NASDAQ climbed 15%. The SOX index, which you've been talking about the stocks in there, that was up almost 40%, 38%. And the Dow only climbed 7%.
Unbelievable.
That's the biggest monthly gain since November of 2024 for the Dow.
Unbelievable. I mean, an absolute face ripper. I think today's going to be interesting. I mean, I shouldn't be surprised, but I guess I'm going to say I'm surprised that we're getting the Axios reports already. They usually wait until like towards the end of the day. You get like that kind of 50-point face ripper on a he said, she said headline. So they're starting early. I'm sure we're going to get a handful of those, but it'll be interesting to see what happens into the close here. Volatility at the lows. I would think that it would get bid into the close today, and you'd have some sort of weakness, but that would certainly be abnormal relative to this market. I mean, we've been just straight up every day, basically. So, be interesting to see.
Yes, it will be. All right, let's take a quick 90-second break. We'll come back. We're going to do a little bit about yesterday. We're going to talk a lot about today.
Yes. If you got questions, put them in the chat, too.
We got a bunch of confirm and send questions. Love to go to the YouTube chat there, too. Love to see you guys figure out what's going on for today. Volatility in by 17 cents, but we'll take a quick 90-second break. We'll come back. We got more to talk about. I'm going to fill up my coffee, turn these machines back on. We'll be back in 90 seconds. Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nicky from the powers that be. We are back, my son. Before we talk a little bit about the market went on yesterday, I do have to give you an update on a couple of emails myself about your game.
Please, I need this help. I need a bipartisan source, because my friend is very adamant that the bear meat, it's the best meat. No problems, going to be all good. So what are you hearing?
Well, from my Greek sources, who go to the homeland and have family members who are big hunters, they said you really got to cook predator meat make it really well done, because they got deep muscle tissues and lots of trigonosis.
Yes.
So it's going to be a little chewy for you. So, so there's that. And then my buddy Sean came in. He's not a hunter, so take that with a grain of salt, but he's had several friends who are, and as long as it's field dressed correctly, elk meat is delicious, he says, but feed the bear meat to your dog.
I think I'm going to take the meat as just like a, like a bro thing, I'll be real excited about it. And then I think I'm just going to kind of get rid of that.
I think that's probably the safest thing.
Maybe just do make like a little slider, like a slider burger, just to give it a try, take a bite, be like, oh yeah, I ate a bear, apex predator. And then the rest of it, I think, is going to go away. It's probably the smart thing to do, right?
Smart thing to do would just hurt his feelings and not take it. But if you're not able to do that, the second best thing to do would be probably just, like you said, just a little something and then be done.
Oh, so good. Well, thank you to the Taiwanese sources. I appreciate that.
You're welcome. You're very welcome. It was our pleasure. It was our pleasure. All right. You want to take a quick look back at yesterday?
Sure. We can pull that up. I see a couple questions coming through on the chat. We'll get to those as well. I got one here on 0 day from Divine Light Lounge. I like that. Sounds like a very calming place to be. How do you guys decide about your 0DT SPX trade? It seems you decide pretty quickly and then you just let it play out. I've just been curious about the timing, the strikes, the strategy, how you guys decide.
Yeah, I mean, we just go really to our research, and we're around, if we have no opinion, which typically we really don't have any opinion on the day, because who can have an opinion on a day that just started kind of thing? You know what I mean? We go right to the 20 delta with our short strikes. And then I would say, and not towards our research, this is something that you and I have just kind of done, is you get more risky, you go wider. You get less risky, you go tighter. With your buy. Like yesterday, I think you did a $10 one. We've done $20 wide ones. We've done $15 wide ones. So somewhere between $10 and $20 wide, depending on what our feeling is. But you really should probably just keep it to the $20 wide, so that when you don't have a feeling, which is all BS anyway, you maximize your returns, and obviously your losses will be there too. So at least they'll be equal. Sometimes when you do a $10 wide one, it works very quickly. And if it was $20 wide, you would have made, a lot more. So that's how we do it. But it's up to you. I don't remember yesterday's. How did yesterday's go?
Not good. I mean, E-minis were up 80 points by the close.
So you had a chance to close it.
I didn't. So it just went right through. It was a max loss, gave back a couple good wins from our butterflies. That was the other point I was going to put in there, was that sometimes, the omnidirectional / lotto ticket type trades that we've been doing, butterflies, broken wing butterflies, those have been just pretty subjective. And to be quite honest, they've been opposite to where a lot of our delta was. So it was kind of like, you put the trade on for 70, 80, 90 cents. And if it doesn't play out, it's probably a good thing for the rest of your portfolio. So that's another angle that I've kind of been trading them. But to your point, the 0 day trades have been pretty subjective. I mean, we've done tons of research. We have one coming today on jade lizards, which will be good. But the iron condor stuff, it's kind of set it and forget it. A lot of people just do this pretty mechanically. We've been a little bit more subjective with it as kind of just an engagement trade for us. It's not really a core trade for us to do throughout the session.
That's fair. I mean, I think you're. I think but a lot of my emailers are Thursday nights, professional nights, so they drink and they don't type as fast as some of your emailers. But they're coming in now that the popular consensus and I think everybody would agree that you should probably stick to beaver and not boar meat. Is what they're. All
That's true. I am well versed in the beaver meat.
Sure.
Quite tasty. Quite
you got
tasty.
the big tongue.
I will say,
as you told us,
I'm seeing some really. This is, you don't get this everywhere. You don't get this kind of knowledge sharing in all places. But I am getting a whole bunch of bear related comments in the YouTube chat here. Apex bears are like giant pigs. They'll basically eat anything. Bear meat is good, but yes, you have to cook it to 160 degrees minimum. So that's some good. Okay. I also am seeing from my friend Lance, a bear that has been feeding primarily on fish like salmon can have meat that tastes fishy or oily. It's unpleasant.
You are what you eat.
Yeah. So, and then I'm seeing the other ones, which I think this is the case for this bear because of the location of the ranch in Montana. But spring bears that are berry eaters, yum. So
there you go.
So I'm getting very mixed here.
Got it. Okay. All right.
It looks like we're going to be flipping a coin on whether I get some, paralyzing disease or not here. So I don't know if that's good or not.
Enjoy.
As for yesterday, let's go through some of these. I actually put together a couple news slides, very interesting points that I think we've been looking at throughout the week this week and talking about really, which I think you'll be interested in. But first, we'll go through what just happened yesterday into the end of the month, the second best month The second best April of all time, as everybody would have guessed, as things were playing out throughout the month. It was a strong session throughout, 1% to the upside across the board here, with the Russell and the Dow catching up a little bit. The Dow had a huge move on Caterpillar earnings. Eli Lilly was in there as well. John Deere, IBM was strong. So you had some big moves in the Dow kind of catching up. And then the Russell was a shockingly strong move despite bonds that have been sitting around the 113 handle. Been a very, very weird move there. And we're actually going to talk a little bit more about the Russell versus kind of the NASDAQ, the S&P on some of those extra slides that I have here for us today. So face ripper of a day, a wild day. We were down like 20 at one point to up 80 by the close. It seems like every dip is bought regardless of anything happening. You just got to have them.
Yeah, and it's been probably the hardest roll up of trades if you're defending Delta. Trying to find more Delta if you're buying it on the cheap, which would be like, stocks that were not participating, or you were waiting for a downtick in the S&P. I mean, you got a downtick for 15 minutes each day almost. If you know what I mean, it was not, there was not a lot of two-sided action, which I think we both thought we'd see a lot more two-sided action than we've seen. Although we are 100 handles over where we thought we would hang out at 7150 on a revised number. Yeah,
there has been. You've had pockets of like 20 minutes of two-sided action, but after that, it's been. And if you're not quick to get out of stuff, you're getting murdered.
Yeah, and it is a lot like we've talked about. Like the first time you see a downtick, you're gonna say, all right, which I thought would be a lot longer and a lot more sustaining, like a day or even two, where the top is in, the move gets a little violent, volatility gets bid, and then volatility kind of goes stagnant for a couple of hours, and then the market catches a bid and goes higher. We didn't get any of that. We got volatility doing nothing definitive one way or the other, and the market just stair-stepped higher and higher.
For sure. When we looked at the Mag 7s, I think that was kind of the story of the session. Google, a lot of these moves are on earnings. Google, huge move to the upside. I haven't looked at it this morning. Let's see where it's
Google?
Down about 2 here, but reaching new highs, up 10%. It was the outperformer of the group here. Amazon had a huge move from, down 7 or 8 to up 3 or so at the end of the day. Just an incredible move there. Apple was relatively flat going into its earnings after the close yesterday. You had Microsoft and Meta, the weaker of the earnings, both to the downside. And you also had NVIDIA back at 200. That has been one wild ride. We've gone from 170 up to fresh all-time highs in a week of like 217, 218, back down to 200. That has been quite the move there. It was down almost 5% yesterday. And bucking the trend.
And it's 201 this morning. It's up maybe $1.50 or so. But this 200 area is where it was in the middle of April. Just to give you an idea on what we just talked about what the market did. For the month of April, 10%, 15% for the NASDAQ. And here's NVIDIA right where it was in the middle of the mark. Now, of course, it had its big rally from April 1st, where it was, in the 160.70 handle. But it's sitting right where it was in the middle of the month. It made its move early, is what I'm saying, and has sat, except for that big pop-up 2 days ago. We'll see what happens today.
Yeah, it's been a pretty wild one.
Yeah.
I wish I did this in my added research, but the correlation of NVIDIA to SMH and kind of the chip sector has not felt that strong. You had
it's felt random. I'll give you that.
It's felt pretty random, and it's the biggest component. It's the biggest name of the group. You have things like the memory stocks, which we've talked about ad nauseum here. But some of these other smaller names, your AMATs, your LRCX, ASML, these stocks have had these huge moves while NVIDIA kind of stayed flat. Like it was kind of, the SMH being up 40%. I think maybe a fraction of that is NVIDIA.
Right.
Most of it was pretty much everything else. It was a pretty, pretty diversified rally when you look at it.
Yep. Agreed.
So when we look at the sectors themselves, it was a strong day across the board here. You had metals having a nice move higher after being very, very weak. Those caught up a little bit. You had some of the mining stocks to the upside. Healthcare stocks were moving a lot because you had Eli Lilly that reported earnings. I think it was up like $80 or something, 10%. You got some of the consumer staples, obviously semiconductors in there, tech, energy was up because you had oil reaching new highs and then it sold off a little bit. So it was a very, very strong day yesterday.
You almost look at it and you say, what wasn't up?
Not a lot. When you look at our downside numbers, it was basically everything that was up.
Yeah, I mean, that's what I mean. Like what was down? More here.
The ones that were down were Meta and Microsoft and Nvidia. Those were the three stocks down. Three of the biggest stocks in the world. Those were the ones to the downside. Everything else was up. Which is
and end of the month window dressing.
Oh, is that what it was? It's a good story. I could buy that story.
There you go. We'll see. It's May 1st, so it's May Day. So
it's when we start to sell.
That's right.
Sell in May and then go away, or you can follow Vecchio and buy through July.
That's right.
One or the other.
Yeah, it's going to be one or the other. That's right.
Pick your fighter.
We'll figure out. We'll find out in July.
Yes. Biggest movers to the upside. Qualcomm had a big move to the upside on earnings. You had Teradyne, which was down like 20% after its earnings. It bounced right back, or bounced a lot of it back. Ciena has been a whippy ride here. You have Google, obviously, to the upside, a huge move there. Cat and Eli Lilly, two of the bigger components in the Dow, if not the biggest, having a 10% move to the upside, leading the Dow there. Very, very strong day. I mean, you're seeing 10, 15% moves in some mega cap stocks here. Yeah. Just an incredible move to the upside. When we look at the downside, it was some of the mega caps as well, but really just some of the earnings reactions. You had Meta down, 8%. You had Nvidia down almost 5%. Microsoft would be on this list if it was just a little bit bigger of a move, but big moves to the downside as well in some of the mega caps. Everything else, all the mid cap stuff has just been flying to the upside.
Agreed. Yeah, I mean, I don't know. I'm trying to look through here, and you want to say to yourself, which one of these do I have a position in? Now, I do have a position in Nvidia that's a little bit. It's a diagonal spread. It's a little bit short diagonal spread, which was suffering, 2-3 days ago, and now is back in the fold of the family today. But all the rest of these here have been, besides Meta, are really, not really the stocks that we trade.
For sure.
You do see some financial stocks in here, and I put on a bullish hood position yesterday, just trying to see what's happening in there. A little bit omnidirectional, so I went all the way out to 80 days, son. I think I did my first ever 78-day trade in hood. Given a lot of time to be right.
78 days. That's a lot.
Well, that's my long strike. I went with like a synthetic kind of covered call strategy.
The market as a whole, when you look at the heat map here, a very strong day despite the move in Nvidia and Microsoft and obviously Meta in there too. But a strong day across the board here. A lot of green, heavy green. Market yesterday. We'll see if that continues here into the weekend. I have a couple extra slides for you, which I found interesting. I put these together because I've gotten a bunch of questions, and we've done a couple of segments on the Russell. TP focused on that for the cherry picks this week, where he's kind of talking about some of the outperformance that you see sometimes from the Russell. So I put together these two scatter plots. I don't have an N on here. I don't have like a, give you a significance to it, but visually you can see, I'm comparing the percentage moves in IWM versus the Qs, which have been kind of the two most opposite in my opinion, because you've had the Qs. I mean, you could probably do like the Qs versus the Dow, but the Dow I kind of group in with SPY as just like an overall market, indicator. But here, just as like a tech versus small caps, you'll see the IWM Qs chart. It's certainly skewed, like you certainly have a pretty linear regression here. I don't have the N regression on here, so I can't give you the exact number, but it's pretty linear. Really wide deviation though. You have days where, NASDAQ up really, really significantly and the IWM is unchanged or vice versa. On the right side, you have SPY and the Qs, which basically move in tandem here. You can see this really, really linear movement here, and it kind of tells you what we know about markets, right? IWM, Russell, a lot more volatility, a lot more randomness, not as much of a high correlation to the overall market when you look at the Qs and SPY. And that correlation, I think some people kind of take it for granted, right? So you say the Russell might have a couple points less of a correlation to SPY, but when you think about beta and just volatility and all those other things that go into correlation or that, you have to consider with correlations, you can really see it visually here that not only is the correlation not, perfect like it really is with SPY and the Qs, but the velocity of the moves in either direction are very, very random. Like you might get a 1% rally in SPY and IWM is up, 10 basis points. It's very, very scattered in that regard, that correlation. And we'll look at the correlation a little later on here. And you'll see that, IWM and SPY, they have a very high correlation. It's just not the beta and the volatility is where the big difference comes from. And that there is a little bit of a difference to that in the Qs versus SPY, but it's not as significant. And that's really what you're seeing here.
Agreed.
So the next one I put together is something that we've kind of been talking about ad hoc, but I wanted to put some data around it. And we've been talking about this move in oil, and how we're basically at the highs in oil and the highs in markets. And I
know I'm going to stop you before you go on.
Yeah, go on, please.
To the facts here. Let's talk about this just from conceptually. If oil was going higher, I think we're all going to, shouldn't say we all. The majority of the people are going to say, it's probably not bullish for the market. And the market just said, it doesn't matter kind of thing right now anymore. And that is indicative of what happens to news-related markets. Like I always talk about on this show about how I hate artificial markets. Like I like when there's no news, nothing going on, and the market is just doing its supply and demand. The market's just doing the will of the people, so to speak. And not being, swayed in one way or the other. We have a market right now that gets swayed one way or another. You just saw like some silly headline, move the NASDAQ 75 handles top to bottom so far. It's down 22 right now. You got oil moving in a direction because of people watching, the tracking of the ships through the strait. It's ridiculous.
Yeah, they're like at-home weathermen.
It's not ridiculous. It's not natural. Like it's not natural to the market. And I don't like unnatural markets.
I hear you. I also, I kind of go on the other side a little bit and say there's a lot of opportunity to that. Sure. There's a lot of scalping. There's a lot of, quick profits, quick losses, of course, too. Big moves. There's an aspect where that can be advantageous. I think the volume of the news-driven market is what is really the problem. It's exhausting because it's every day, essentially, for months, where it's flip-flop, back and forth, back and forth, back and forth. It is a lot. So I agree with you there.
The heading is the same on the top of both of these.
Yes.
Go ahead.
So the two things that we're looking at. So on the left side here is a 1 year look back at the price change of oil and SPY together. And what you'll see is there's a lot of randomness here. This is not a linear, you can't gather a correlation here. Essentially what you're looking at is a scatter plot mostly around the middle where, SPY might be up and oil might be up small. There's no conclusive kind of correlation here. But when you look at the SPY versus the Qs, it's a linear regression. It's very, very highly correlated. It goes in one direction. It's all the same pretty much every day. IWM kind of deviates from that a little bit. When you look at SPY versus oil, there's really no correlation here, which is what you would expect in quote unquote normal markets. And over the last year, we'll say that, it was quietly normal or somewhat normal in recent times.
Yeah.
On the right side is the last 2 months. So I've just isolated kind of the situation that we're in. Incorporates a little bit of pre-Iran situation as well as, the last month or so, which has really been the heat of the moment. And what you'll see here is a lot of the outlier occurrences in terms of the last year have occurred in this period of time. This is even more scattered. Yeah. And that's even more indicative of kind of what we've been talking about with this weird kind of correlation, non-correlation with oil and SPY. In the downside move, you had what felt like a 1-to-1 inverse correlation of market up, oil down, oil up, market down. Like that was kind of in the heat of the start of the war, that was the MO. It was almost a perfect correlation. In the last couple weeks into this massive rally we've had, we've seen that completely go the other way. You've seen, oil up 10%, market up, 4%, 3%, 2%. We've had these huge moves where the correlation has kind of moved in that direction. And altogether, when you look at those 2 months, you can see that the outliers have been this last 2 months. If I took these last 2 months out of the 1 year occurrence, it would be all, most of the occurrences, if not all of them, would be inside, the 1% square, the two boxes right around the center of the axes here. It just goes to tell you that, to your point, it's been a very news-driven market. It's been a very abnormal, quote unquote, in terms of like all the things that traders look for from correlations. The macro people are in complete freaking shambles because nothing has been what it should be, quote unquote. And so that's really what I was trying to highlight here, that the moves in oil have become, they've been so volatile, even though volatility in oil is actually coming down, but they've been so volatile along with the market, which has been so volatile from a realized volatility standpoint, which is why volatility, I think itself, has stayed relatively big. We're not looking at a 15 handle, vol future, despite new all-time highs, best April of all time. And it's because you've had these crazy moves in both equities and oil, which is not typically what you see. You typically see these kind of, have a more inverse correlation here.
Good little scatter plot.
So I got one more for you to kind of emphasize this too. So on the top here is a 12-month correlation of price, and we do this on a 1 month rolling, or on a 3-month rolling correlation. So on the top, you'll see everything for the last year has been exactly what the textbook is going to tell you. You have a pretty high correlation with all the major indices. I actually put SMH in there just to kind of outline this as well. You SPY, Qs, IWM, SMH, all moving in the same sort of direction, pretty highly correlated. This goes to my point about IWM and the Qs and SPY as well. 0.79 correlation, you look at that and you say that's pretty high.
Yeah.
When you look at the scatter plot, it's pretty wide in terms of your beta and your volatility of those two products. Then you look at Bitcoin. Bitcoin has been, over the last year has been somewhat correlated. And we're just talking price here. Correlations are just up or down. It's not the magnitude of the move. But on a day-to-day basis, it's pretty highly correlated. You get into bonds, gold, oil. there's basically no correlation to the market. It's essentially zero, which is exactly what you expect from the textbook, right? Like, and from what you see in the scatter plot for oil over the last year.
Old school trading. This looks like the 12-month correlation.
That's what it is, and it's played out.
Yeah.
I then went and I took the 1 month correlation, and so the 1 month correlation, you see exactly what we were kind of talking about. Oil has been has really deviated from the correlation here. It's been highly negative. Everything else has been positively correlated together. So when you look at bonds are going up, market's going up. Gold is going up, market's going up. All the major indices, even Bitcoin has a higher correlation here. It just kind of goes to show you of this news-driven market where it's been very, very volatile. Everything kind of moving in tandem other than oil. It's been the very kind of, one or the other every single day, essentially.
That's a great slide. Just showing you really that, things have correlation and they certainly change too, right? And to have a correlation, they have to do the opposite sometime. And right now you have just a buying of assets everywhere.
Everywhere. And it tells you that when things get messy, you can't go and say, oh yeah, well, if gold's a flight to quality, I'm going to go buy gold.
Yeah, there'll be no place to hide except for size, is what you're saying. But you can't play for that, right?
You can't play for it, and then in the moment, it doesn't work for you. Like if you had in the last year been allocating to gold and bonds, and all of a sudden you have this event where you think gold and bonds are going to be the safe haven. It hasn't really played out. It's been a correlation of one, basically. If the market was down 10%, everything else was down 10% too. Market's up 10%, everything is up, a handful of percent. So it's just been a very, very news-driven market here.
Good. Nice.
That's all I got for you. That's it.
Very nice. Good job. Good job out of you. You did a lot. Even the S&Ps are up 16. Nasdaq's down 9. Russell's up 2. The Dow's up 153. We'll take a quick 90-second break. We'll come back. We got confirm and send right after this. We'll be back in 90 seconds with Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
First thing about tastytrade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
There's a beast in the financial world. and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
We are back, son, and you know what that means. Time to take a look at, a little bit of confirm and send on May 1st, but really what the market did last night. Let's take a look at it right now. Even the S&Ps are up 16 handles. You see here they've been almost, let's call it a 25 handle move, top to bottom. I guess that's what we should look at. And even the S&Ps are up 16, right in the middle of that range. You can see here at new, as Vanetta would say, highs. NASDAQ basically unchanged, down 13. Russell up $1, basically unchanged. And the Dow up 140 and change. Volatility finally sold off last couple of days, reaching new lows to 1925 last night. 1940 right now, but you saw volatility collapse most of the day yesterday as the market caught itself a bid. Bonds hanging out right here, 112.31, up 4 ticks. Made lows yesterday in the overnight session and have been hanging out right here at 112.30 for what seems like the last 3 days or so. Bitcoin up 1,600, back to 78.5. It's right there right now on its highs for the day. It's been a little bit higher, as you can see here, but it's been moving steadily higher. We'll see if it can hold on to these rallies. Ethereum's doing the same, up 44, although as you can see here, it hasn't had quite the move to the upside as of late. Both of these products kind of, I don't know, overnight session seems to be bid a little bit more than the day session. Day session seems to get a little bit softer for both of these over the last 3 or 4 days. Yeah. Oil, I think I'm surprised. I remember when it was like 101, 100, 101 in that area. I didn't think it was gonna rally. It certainly did, up to 110. Had no effect on the market one way or the other. You did a great scatter plot just a moment ago, outlining a lot of that, how it's just basically random.
Yeah, and I would like to call out Jackie in the YouTube chat here, asking if I have an executive assistant making these slides for me. Let me tell you, Jackie.
Jackie, I want to thank you for recognizing my work. I appreciate it.
Ooh. Well, I will give a shout out to the research team who they do a amazing job on all of our research segments. But those are all me, baby. Those are all me.
That was all you. Yes, you did.
And I'm getting better. I'm getting better in our research database. I'm not exactly, a Python dev yet, but I'm doing my work. Claude is very helpful. I'm learning new tricks. I'm learning new tricks here.
Very nice. Very nice.
I just had to call that out.
Good. What do you think about a gold trick here? Gold 46.03. You could see here that gold has really been going sideways to maybe even lower. It caught a bid yesterday, selling off a little bit today. Silver's doing the exact opposite. It's actually up 1%. But if you put those two charts together, you can see that they're quite. What are you doing?
I scalped out of some of my gold yesterday. The rest of it. So I scalped some lower. I mean, I closed some at, I closed some at 46.45, and then towards the end of the day, or right at the end of the day, I closed at 46.32. So I had 2 contracts. So I'm just buying back one here at 4,600. Right on the dot here, maybe get a little long gold. I kind of like that. I also wanted to call out, I know you were going through the market, but
so this is a close though. What you're doing?
No,
right?
This is an open.
Oh, it's an open. Oh.
Yeah, I closed out of all my gold yesterday.
Got it.
At 430, at 45 and 35. So I'm buying it back 70 handles net.
Nice.
But I'm only buying half.
Got it. So you have another toe in the water.
Yes, a toe in the water. here
So
at a nice round number of 4,600. You do have silver outperforming today too. That gold silver ratio, which is something that we once upon a time used to look at all day long.
Well, I still look at it all day long. Just haven't done anything with it. I mean, it's been
it really hasn't gone anywhere.
61. I mean, for the last I don't know. I mean, since early this month or last month. I mean, it's around 61. It gets down to about 59 on a low dip, up to around 65, and it's right here 61.80.
Yeah. Couple earnings that just came out this morning, XOM and CVX. Both of them look to be basically unchanged here. Should work out nicely for us. We have some diagonal spreads in XOM. That short-term volatility was nice and juiced. Those should be good trades. You have Apple up at just under 280, which should be perfect for our diagonal spread. We're long the 75, short the 80. And then you have SanDisk and Western Digital, both slightly lower. I mean, SanDisk down $40 on earnings. That is going to be an epic vol crush, along with Western Digital. That one's down about 30, a little bit bigger of a move to the downside. But SanDisk is going to be one for the ages. That vol crush.
Let's hope so. Let's hope so, for sure. For sure.
I'm going to be interested. I was chatting with you privately, not on the show. I was looking at SanDisk and I was like, dude, the straddle in December.
Yeah, we talked about that. Go ahead.
It was trading at $6,400 or $64 when I was looking at it and texting you. Into the up move, it moved to like $660, which is the stock's at 1,100.
Right.
If you sell that straddle for $660, your risk is if the stock goes to 300 or 2,000. That's like where your risk is. Into the down move, it moved like $40. Today, I'm guessing that is going to trade for less than 600.
We will see. We'll put it up there on the
December
screen.
straddle, and it uses in a portfolio margin account like 16 grand. You're selling $66,000 in premium. I think that's going to come in $4,000 today. I do not have the trade, unfortunately.
We shall. Well, you're not big enough. You're just a little dog.
No, I'm big enough, but it was one of those things. I was thinking, yeah, it could be interesting.
Let's go
confirm it.
Friday, May 1st, and then we'll get our friend Jamal coming on this week in stocks.
I have a very high win rate this year, and I'm up a good amount of money. However, I have just a few losers that have made a significant dent. Since I'm new to trading, is this common?
Yeah, I think it's very common. First of all, congratulations on your wealth, my lord. So good job out of you. I mean, I shouldn't say I think it's very common. If you put on trades, if you trade like us, and you put on trades that have a 60 to 70% probability of success, you're going to have more winners than losers. It's managing those winners and managing those losers that gives you the opportunity to have a good amount of money, as you put up here. So yeah. I think you're trading and it's been working well. You're probably leaning a little bit longer, as most public does, especially as new traders, and the market has cooperated with you. Now, if you started this before that big down move, you might be unchanged or still down. You know what I mean? So market has to help you too to win.
Yeah, I mean, just from and obviously this last couple months has been filled with tail risk in both directions. Sure. You've hit some very volatile patches where a lot of things have moved significantly. Vol has expanded. I mean, I think this is pretty normal. Sure. I think if these losses are a little too big, maybe we change up the strategy a little bit, especially volatility is a little bit lower. Maybe you look to be a little bit more directional, less short vol, that sort of thing. But yeah, I mean, that's kind of the MO.
Yeah, that's the MO. Good job. Next one, please. Is there any validity to sell in May and go away? You were just talking. I'm glad you got this one.
Not according to Mr. Vecchio. He is champion. He's championing
Chomping.
He's I don't know. He says buy through July. That's the new one. So no more selling May and go away.
The chat room said it's a very old saying, an old term that may have its origins in London. The chat room has said. I do not know.
Yes, I got a follow up here to the last one from the YouTube chat. How do you guys get your mind off of trading? It's so weird. My first go-to topic in everything is trading. I would agree. It's very hard to get your mind off trading.
Yeah, it is.
I don't really stop ever.
I mean, I don't know how you can. I mean, it's the first TikTok. TikTok is actually modeled off of the market because you're always looking at it.
Yeah.
I don't have a TikTok account because I look at the markets. I don't have enough bandwidth to do both.
Yeah. The funniest part is I think about tickers like when I talk to people. So I was golfing with a friend of mine, Kevin, who used to work on the trade desk at Tasty, and he brought one of his buddies who I had met before, and we were just kind of chatting, and he was wearing a Charge Point hat, and I like had visceral remembrance. CHPT, yeah. And I was like, is that stock even still around? And he's like, yeah, kind of. I mean, we did just do like a 20-for-1 reverse split. And I was like, oh God. So, but that's kind of that's where it gets really, really fun because you can, if you're watching markets, all these, the movements and everything. I can basically chat with anybody about any company.
Yes.
Yeah. It's a sick disease that I have.
It is. It never leaves.
Never leaves. Next one, please.
Mm-hmm.
How do you roll a futures option when the underlying asset is also expiring and the new contract is trading at a different price? So, what do you think about when you're rolling futures?
Oof. I mean, for me, I usually do it. The Friday is when everybody gets very busy a week before or so. That's usually the roll date. That's when I usually want to do it. But I've done it on Wednesday, Thursday too. Markets are tight. I mean, as a matter of fact, the roll is half a pip, half a
tick.
Half a tick. Sorry. Thank you very much. From the normal tick. So that's when I do it. It means absolutely nothing. The direction is still the same.
Yeah, I normally, with different products, you can roll based on delta, and that'll flatten you out.
That's correct.
So 20 delta put, roll it to the next 20 delta put, and that'll be the same size, so to speak.
Yep. Wasn't meant by the term back month and front month. Well, here you go, a little bit more. You could talk about futures in this, and you could talk about options, but I think they mean options. But go ahead.
So the back month is like the next month or further out than what the front month is the most soon to expire monthly contract.
Yep.
So the front month right now in options and equities is May. The back month is June.
Yeah.
Is for our trading. You could consider, further out expirations as well, but that's just for our trading.
Yep. Very good. Cool. Good job out of you. Let's you want to do one more? I don't care if you want to.
No, we could. That's it.
Okay, beautiful.
Yeah, we'll bring on Jamal.
Yep. Let's take a quick 90-second break. We'll come back with my man Jamal right after this. This takes live. NASDAQ caught a bid up 18.
Yep.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February. And just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you, Rob.
appreciate it.
Your crypto needs a wallet.
And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expiration, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
We are back, son, but you know what that means? We're joined by this man, Jamal, my friend. How are you?
Hola, fellas.
Hola,
What's
hola.
happening?
This week in stocks, I know Nick and I went over it just a little bit a moment ago, but you're going to give us a little bit more of your take on this. So,
was the Ola you practicing for next week? Where are you going?
I'm going to the OIC conference in Palm Beach, so I'd say no.
Close. You're kind of close.
I mean, yeah, but that's a whole. It's a whole. There's different factions of Florida.
Yeah.
there's southern. There's Miami, which is a whole nother country.
Yeah.
And then there's Central Florida, and then there's Northern Florida. And trust me, all three are very different.
Yeah, you've
like three different countries, to be honest with you.
For a Miami guy, you are relatively tame. You know, like when I think Miami guy, I think of like
he could be like what is it, Sonny Crockett? Which I forget which one is which from.
Tubbs. Yes.
Tubbs. You should be Tubbs. There you go. I'm Crockett. You're Tubbs. Sorry.
It's interesting. I'd say I'm like Tony. Like if I'm back in Miami, I'm probably much more Miami. But I mean, I've been in Chicago 20 years now. Like, I truthfully am from Chicago. I just never say that, and I always say that like this, and it's true. If you walk to somebody and they're from Chicago, you're gonna be like, "What high school did you go to?" I didn't go to high school here. You know, like, so it's kind of the thing. So yeah, I trust me. I am Miami. There's the Miami in me. There's parts of that will never leave.
You can't repress that.
I'm a Midwestern guy at this point.
Okay, well, all right.
You know what I mean?
Yeah, and you're going to, you said you're going to OIC. That's the option industry conference.
Yes, sir.
What do they need? Somebody to run the slides? What are you doing?
Yes, exactly.
Jamal's a
moderating
headliner.
a panel. I am moderating a panel. I am. I don't know if I'm a headliner. I don't need to be a headliner. Would mean I'd have a whole talk. No, I don't feel like doing all that. But I am moderating a panel. Q's on the panel. Steve Quirk.
Oh, awesome.
Q's on the panel. A couple of other people, Spot Gamma Guy, Jessica Inskip. So it's going to be the three of them. We're going to have fun. We're going to do it tasty style. You guys know what time it is.
Sure.
Awesome.
Sure. Very nice. Yeah. Very nice. Good job.
Yep.
Good job.
You talked about it a little bit, you said, this week. I'm curious. What did you guys talk about?
Oh, just the craziness. I mean, we looked at correlations. We've been talking about oil and the move in the markets and just the craziness that we've seen in both directions. Mm-hmm. I think today is going to be interesting just to see what happens into the weekend. Weekend risk has kind of been a kind of takeoff risk into the weekend, a little bit of bid in volatility. It'll be interesting to see if that happens here with where
it's been
oil
real,
is.
hasn't it? I mean, the weekend risk. I mean, it's been real for the weekend. It seems to go away before the Monday opening.
Yeah, I mean, the war is only on while the market is closed. You can't have a war while equities are trading. How are you supposed to?
Is it still a war?
Is it still a war? That's a good question too.
I don't know, man. Look. What I saw in the last 24 hours as far as stats, I mean, first of all, we just finished April. April was amazing, 10%. Second best April ever.
Yeah,
unbelievable. Same thing with NASDAQ, I think. For S&P, that was the second best April ever. And I think the same for the NASDAQ. And they both basically yielded to 2020, the times in 2020. And when I think back, it was like, I think September or when I think back to April 2020, when I think back to that time period, none of us thought the market was going higher after whatever like rally we had. We thought, okay, this is going to be the rally and we're going to turn around. And I've been feeling like that all month, not going to lie. I felt like that most of April, even though I had some long deltas on, especially in the tech names. I had these different, I guess I don't like the word hedge because they weren't a hedge. I wanted my longs to win, but just little downside plays just in case, right? And obviously those didn't work.
No.
Obviously those didn't work. And so I guess my point is like, it's felt like there was at some point in time the legs were going to fall out on this rally, and it never did. And look, fellas, the VIX just closed below 17 yesterday. So I don't know if that doesn't say everything is over. I don't know what does.
Volatility in contango too. I was talking about this with Mikey. It's like, if you ignore the news and just look at what the market is telling you, it's telling you the volatility is no longer here in the now. It's normal. It's further out in time. Yeah. Despite all the macro, the headlines, the inflation, the GDP number coming in lighter, it doesn't seem to matter. Nobody seems to care.
Because you know what matters? Price is all that matters.
Yeah.
This is the lead. I tell you what, this is the least amount of news that I've read in the last month and change, and I am better for it. I really am. Like I just finally decided. Look, I'm not a war strategist. I don't know how to figure out if things are de-escalating or not. But what I do know is markets are going up and vol keeps coming in, and at some point in time, oil was coming in. Now that's the only thing I got to say that makes things a little weird, and that's one of the reasons I've definitely kind of, sort of de-risked a lot of deltas is because I still got a lot of shorts on. Like I'm still short gold, I'm still short oil, which sucks. I'm still short a couple of names here and there that are high vol, but the one circle that I can't square is again this rebound in oil, and then the 10-year being at 4.4%. 2-year just rose to 3.95 this week, which basically is saying we might have a rate hike before we have a rate cut. And those are the only things that don't make sense to me. And then obviously we got change happening with the Fed. And so I guess this is one of those times, it was funny. We talked to our guy Chris a lot, and he was so annoyed about this rally. He couldn't, macro wise, it didn't make sense. If you pay attention to macros going forward, though, which I don't really, put a whole lot of credence in it. But again, those things like oil being where they are and 10-year, I don't necessarily know if you call that macro. That's just indicators. But like for macro people, I would say their time might be coming soon because like you got all these different ducks lining up. We got high inflation. There's no question about that. Oil is high and the 10-year is up. And so usually that spells doom for markets, but it hasn't meant anything for this market. So I'm not really sure what to think about it. I don't know about you guys.
What do you think about the 30-year basically going nowhere, sitting here at 113? I only ask because I'm short some puts and I want to hear your take.
I have not traded any bonds for that reason because I can't make sense of it, Tony. Like that's what I mean. Like I would have thought if you'd have told me, at the end of March that we're going to have this 10% rally, I would have thought bonds would have been back at 116, 115, 116
for sure.
And that part is the hard part to understand. So I don't know, man. But look, the fun stuff. Look at these semis, big moves, man. They've been killing it more recently. You've seen the Intel moves, you've seen the Texans move, and then Qualcomm, the other one on earnings yesterday, massive moves there. These big earnings we had this week, massive week. It was we were all excited heading into it. Obviously, not only just because of possible movement around the Fed, which didn't really materialize in a way, but what happened with these big earnings names. I mean, Google seemed to be the lone survivor, but when I think about it so far, of all we'll see what Apple does today. Apple might be up, but Google was up. Apple seemingly up, even though it was down after market a little bit. But the rest of them have been negative when you talk about the Mag 7 on earnings. I mean, Meta took a fall, Microsoft took a fall, Amazon fall, Tesla back when it did. So,
Yeah, a little bit of funkiness there. I think also we kind of chatted about this earlier with the semiconductors. It seems to be that the move in the market has been less about the Mag 7 and more about these kind of like mid cap type stocks. Even when you look at the SMH, like Nvidia right now is trading back at 200. It had a wild ride. I mean, it went 170 to new highs in a week at 217, 218-ish, and then all the way back to 200. The SMH up 40% and Nvidia is basically flat on the month. And so it tells you that kind of it's been less about the big names. And I think you see that kind of in the earnings too with Meta and Microsoft down, Amazon basically flat. I know Google and Apple are kind of bucking the trend. Tesla at lows. If you took them all together, it's basically nothing out of those. And the rest of the market is up, 15%. So it tells you that you're kind of getting a little bit of a broadening out here, which I guess is another bullish cap, bullish feather to put in the cap.
Sure.
Yeah, it would seem so. I mean, and then I was curious to see how this WDC and SanDisk double earnings night was going to play out. I thought they were both going to be up like, like crazy numbers. But
I mean, why not?
Like
Everything goes up like crazy, right? Another 100-point move and a stock. Yeah.
I thought so. But they were kind of tame. Speaking of 100-point move, did you guys see Caterpillar yesterday on earnings?
It's unbelievable. Crazy, right? I saw a stat that Caterpillar is like one of the only stocks to average like a
20% almost year after
20% a year for like 20 years.
22%, something like that, maybe more.
Unbelievable.
Yeah.
Damn, I missed that boat.
But that's what I'm talking about. Is like it's not the big names right now moving. It's like the kind of, I mean, Caterpillar is a huge company. What is it? $500-600 billion. I mean, it's a huge company, but it's not like the one that that everybody talks about. Like nobody's talking about Caterpillar at the dinner table.
Right.
No. Yeah. And then it just quietly goes higher.
Unbelievable.
Yeah.
Unbelievable.
Well,
I don't know about you guys, but I've just tried to de-risk throughout the week, and now it's May. I guess we'll see what happens.
Don't sell in May. Don't sell in May. You buy through July, as Mr. Vecchio says. Don't sell in May. Okay, that's what the suits want you to do. Don't do it.
All right, on that note, I'm going to let you go so we can take a quick 90-second break. He gave you all the wisdom you need to know, Jamal, right there. Appreciate it. Have fun in Miami. We're going to take a quick 90-second break and come back. We got even the S&P's up 20 handles. You got NASDAQ up 20 handles. You got Russell up 3. You got the Dow up 160. You got volatility in by 15 cents. As Jamal said, you've got VIX now trading at under 17, 1680. We'll see where that opens. We'll see where volatility in oil opens as oil's down $2 and change. After trading up to 106.5, it's down to 102.5. Big move in oil, 2% to the downside. We got more Tasty Live after this with the opening bell. We'll be back in 90 seconds of Tasty Live.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, we are back, son, and you know what that means. Got about 2 minutes before the market opens. Pardon me.
DNR.
Say again?
DNR.
Yeah.
DNR.
No, I want to be resuscitated. I want to be brought back. I want to be held. I don't care. I just want to be. I don't even know if I'm talking. No brain waves. Just
yeah. I can imagine you.
If I'm gone, they took me. Okay. I want to be here. I want to be here.
The aliens, the UFO,
anybody, whoever it is, it is. I did not commit suicide. I am not committing suicide.
All right.
Yeah, we got to get back to what's important, like the Epstein files or something like that. But anyway, even the S&Ps are up 18 right now. NASDAQ is up 27. Russell up 4. They're all up slightly. And Russell and the NASDAQ have been going back and forth between green and red, but even the S&Ps and the Dow have been strong. Dow up 160. Volatility in by 18 cents. Bonds are basically unchanged, 113.30. Bitcoin up almost 2,000 now, keeping its head above water, holding on.
Wow.
Yeah, by
Did
this
it just move?
every day, it's usually sold off, but it has not this time. Ethereum's up 50. It's actually up in line pretty much with Bitcoin. Oil going to flirt with on the lows for the day, 102 and change, but I still think is elevated. Matter of fact, I think they would get over 100. So I was working. Well, there's your opening bell. Gold down $30. Silver doing the exact opposite. A big move in silver, up 1.5% on silver. Net gas. Remember yesterday talking about it. Started getting long at around 265 or so.
Yeah.
277 right now. Nice rally in nat gas, although it's a very small.
I actually got long some of the micro natty gas contracts. MNG.
That's the way to trade it. I mean, the options are kind of crappy. UNG's kind of crappy in my opinion still.
Yeah.
But you got to trade it with the micros. I agree with you.
For sure.
It's a nice way of participating in a product that's really too big for most people.
Yes.
On the downside, because it's got a feeling to me like we want to go a little bit lower, and I have based that on absolutely nothing. Sandus down 37, WDC down 27, Roblox, I don't know what happened there, down 13, Goldman Sachs down 10. There's the Dow only up 70 now, so it's come out a little bit. AAOI down around 6 or so. Google down around 5. USO down around 3 and change. That's going to be reflected in oil. AMD down around 2. Let's go to the other side of the coin here. Lilly still continues its rally, 950, up 24. LIT up 15. Reddit, man, I remember Reddit when it was $80. It's 166. Apple with a big move higher. I mean, you're not going lower with Apple up $10.
No.
Microsoft reversing its softness from yesterday. Palantir higher. I like that. I'm a little bit long. Palantir up 100, up at 144, up 5 and change. Meta reversing its sale from yesterday, up 4. I don't know. Usual suspects. Seems like much to do about the same thing as yesterday.
Yeah, I closed out of those Apple diagonal spreads. The shorter term. So I did them May monthly and then the May weekly 75.80. I did those at like $3 and closed them at $6. Just a mega
that's a home run. Yeah, it's trading around I think it did around 635 or so, something like that. Trading right there, oscillating back and forth as the stock goes higher and lower, but that was a home run.
Yeah, it was a home run trade, and that sort of setup is more all or nothing than my normal diagonal spreads. The good part about it is that it's really, really cheap.
Yeah.
So, that sort of diagonal, if you were to do the 270, 280 using June and then the weekly, like kind of what Kai was looking at yesterday, it's going to cost you like, $8, $9, $10.
Right.
This one costs you $3, but it's if the stock were to kind of go flat or down, you lose the $3. But it's an asymmetric risk profile still. If the stock were to go up 5, you're going to make $200 on that trade as well. So it's
definitely an all or nothing with limited risk and a potential to double your money like you did.
Yeah. Looking through some of my other positions here. BE down a little bit. That's nice. Let's see. We do have what's your assumption, which is nice because I do need some new trade ideas here.
Yeah, you say BE down. It's nice, but it's it's $6 or $7.
It's not down much.
Right.
All right. We have a long way to go until I feel good about that one. I don't know if I'll ever feel good about that one is the problem.
Yeah.
Gold moving a little bit. That's kind of nice. Do I do something here? I'm going to close some of these too.
Okie dokie.
I have some IBIT calls that I have left over from a ratio spread. I have actually quite a few of them.
IBIT's probably catching itself a little bit of a bid here.
It is.
Coin higher. IBIT up $1 and change.
All right. I will push these through. So these, I'm long shares, which is obviously, working today.
Yeah.
But I've been doing call ratio spreads against it.
So what does that mean? You're selling extra calls, right?
Yeah, I've been doing them on a ratio. I actually think I'm going to get a little bit spicy here and add some extra. Okay. So these are somewhat covered. I'm selling extra units on the upside here. I also have some of these leap calls.
Yeah, you bought those. You went off on your own there. You said, "Dad, it's time for me to do my own thing."
Yeah, it's time for me to make money. I've been watching you guys just not make money all year. I'm gonna have to give the people something that they want. I'm just kidding. You know what I'm going to take off to here? This junky IGV.
What was that?
IGV is the software ETF. I don't know why it's up today. Maybe is Microsoft moving right now?
In sympathy, yeah.
Yeah, Microsoft up $7. Okay, that's probably helping here. But those IGV diagonal spreads, I think I took like 100 or 200, 100, 150 out of each of those. A nice little bounce there.
I mean, that's all you really can play for those, right? I mean,
and IGV and those stocks have looked disgusting. So on any bounce, I am a willing seller.
Yeah, Nvidia up $2, Palantir up around $7, Apple still up around $9, Microsoft up $7. On the downside, you mentioned BE already. Marvell down about $3 or so.
Oh, I'm getting bailed out on this Qualcomm position too.
WDC down 24 or so. Just trying to pick out some big movers. Roblox is down big. I don't know why. I got my Taiwanese sources checking that out.
I mean, Roblox, it's like a breeding ground for sexual predators. So I think the world is better off if that stock goes to zero.
Okay. Fair enough. I don't know anything about that. But
it's because it's all the kids are on there.
But that's all right. Seems to go good with me.
There's all those reports of stuff, weird.
Yeah, no, I'm teasing you. I'm teasing. Yeah.
Okay. Let's see some of these XOM. My diagonals in XOM are kind of flat here. I'm just going to hold them for now.
Yeah, oil under 102 now. Just made a new low, down $3. That's a big 3% move. Net gas bucking that trend, going a little bit higher. Net gas and oil have seemed to be uncorrelated, not even friends. They're not even talking to each other.
Yeah.
Usually they moved in tandem with each other. They're not doing any of that right now. Quiet complacency right now as we're up around 0.5% everywhere except for the Russell. Volatility hasn't moved at 1940. It's in the middle of its range.
This is a good day for the good kids, though.
Yeah, I think a breather going into the weekend. You'll start trading on Saturday, Sunday numbers. If you're selling premium, that should work out for you.
Yeah.
So far, so good.
I have been scalping out of this MicroStrategy diagonal spread.
And by scalping out, you mean you've been taking the liberty of taking a leg, right?
Yeah, I've been legging. Yeah, I mean I bought back the 200 strike call in May yesterday at $1.65. I just sold it back out for $2.66. So it's moved $1 into this move. I just taking advantage of some of that.
Beautiful. Nike up 41 cents. That never moves to the upside.
Oh wow!
I got a little long delta there. Looks like I'm exactly flat on it. I've been holding it forever. It doesn't move.
Yeah, that stuff, like, it's good for an engagement trade, but it's really hard to look, to put energy into looking at like Nike. You know, it's
totally agree with you.
It doesn't move, and it's just not in focus right now.
Yeah, there's so many other places to go that have had so much movement to them and so much volatility to them, even in a low volatility environment, that I don't think you should waste your time in Nike. I did it after earnings, as you just said. Market were imploding everywhere, and I went with a little bit of like, all right, let's see if Nike can catch itself a little bit of a bid here, and it hasn't. I mentioned Palantir a couple of times, up $6. It does have earnings coming May 4th. Which is just about 3 days away. So Palantir rallying a little bit off of its recent lows by about $6.50, but still has earnings there. So tread lightly. If you don't have a position in there, maybe it's not the time to do something if you're leery of earnings.
Yeah, I'm interested to see what this December SanDisk looks like.
Sure, but can you put up on the screen? Or you want me to? What month you want to go to? End?
It hasn't really moved. I mean, it's coming like $30 today. But it's still at 640. I think this is going to be an interesting one. That's just me like thinking about volatility and just some of these products that have just gone nuts. I think if it had stayed down to where it was at like 1,000, that would have come in bigly. I don't have the trade on those, so it doesn't. It's not. I can't pat myself on the back.
Understood. And nor should you, son. It's like a nickname. You can't pat your own self on your back. You'll hurt your hand. Let somebody else do it.
That's right. Do I do something? Let's see. I've been scalping some of these calls in NVIDIA. I was buying back the 220s at $1. They're kind of the same here. I have some calls to sell in NVIDIA.
Mm-hmm.
Do I, though? Is the question. Do I sell them?
In NVIDIA?
Yeah. I think you got to wait a little bit.
NVIDIA up $3. I've got a diagonal in there. I'm pretty much flat delta in NVIDIA. IV rank is still high and going higher. It looks like earnings are May 20th. What month are you in?
I am selling premium in May, in the May monthly.
14 days to go?
Yeah.
Yeah, that's what I have on June, May. As a matter of fact, these Mays,
I have just net long delta there now.
Okay.
That's why I was looking at them. I was like, do I sell a couple here just to flatten out the delta? But it's been choppy. And
yeah.
You got to think. You got to think there's more upside there if the market's going to continue to grind higher, which it seems like it's going to.
Does.
Okay. Do I take some of these? I'm not there yet. And my oil position is like so perfect. I just need to fast forward 2 weeks.
Me too. I wish we fast forwarded too. Okay. All right. You ready to take a quick 90-second break? We can get to gas market.
Oh, my BE is now up $1. This freaking stock. Torture.
Can't keep a good stocky down. NASDAQ up 170. Even the S&P is right near their highs from the overnight session. Russell about $18 off of their highs from the overnight session, closer to their lows by about $5. The Dow is closer to their lows than the highs also. So you got even the S&Ps and the NASDAQ holding strong. Russell and the Dow oscillating back and forth. Russell doing the same, but a little bit weaker in the Russell. Russell down 1/3% right now. Bonds trading 112.27. They can't get out of their own way. They're sitting straight there. Oil over 102, about 30 cents off of its lows, down $3. It's almost a 3% move. Gold down 13, catching a little bit of a bid. It was down around 30. Silver staying strong. It's up $2. That's a 2 3/4% move to the upside. We'll take one quick little look here about the movers to the upside, and then we'll go. You got light up $75. That's an 8 or 9% move. That's a big move there. Lilly on top of its big move yesterday, up another $43.
Wow.
Lilly coming off of its lows, rallying hard after earnings. SanDisk up 17 now after trading 1,050. It's 11.17. Caterpillar continues its bid. MU, which was down around 10 bucks or so, is now up $12.
Unbelievable.
All good in the hood.
You cannot stop the buying. You cannot stop it.
Not even on May 1st after the window dressing of April. See that?
This market is unbelievable. I mean, some of these moves.
We did talk about not selling a creeper. I mean, I didn't jump on with reckless abandon.
No,
I haven't laid into it. I'm starting. I said it a minute ago, which has been quickly.
You're starting to get itchy.
I'm starting to get a little bit of ick, but volatility hasn't moved.
Yeah,
NASDAQ hasn't moved. I mean, we haven't made new highs since the overnight session, but still, at this moment, I'll miss the top. It seems like, and hang tight.
Yeah, unbelievable. Just an unbelievable market.
Let's take a quick 90-second break. Come back. We got more Tasty Live. If you missed yesterday, it's just like today. So if you missed yesterday's trading so far, the opening is just like today. We'll take a quick 90-second break and come back. We got Fast Market where we go to you, our viewers, trades. We'll be back in 90 seconds with Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was
awesome. Not a paid, you're not getting paid for this advertisement.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the Fast Market. You were very late.
Really late.
Yeah.
I'm just looking at things because things are moving. I close out of a Micron butterfly that I had.
I saw that $5 and change here.
I did it in all three of them.
That's got to be a good trade because there's no way you're paying $5 for a butterfly.
No, it was a double up. I mean, I debated if I was going to hold it
on a 0 day.
Yeah,
that's nice.
I have them. I'm losing on the SanDisk and Western Digital ones, so it's net basically a scratch. But I've got lottery tickets into the end of the day. I mean, the way these things move, SanDisk being at 1,200 at the end of the day today is all but a given.
Let me show you how perfectly priced these butterflies are. Here it is trading for around $5 and change. The expected move is something like $13. Your spread you have here is about $15. I mean, not about $15. It is $15. So it can go to $1,500, and we're about $3 or $4 under your mid strike. It's exactly perfect.
Yeah.
I mean, it's just a flip of the coin, whether you think we're going to rally and sit. Like, remember, if you go to 40, you only make $10. If you go down to 30, you make $10. It's a tough one to hold. That's why these butterflies look so great on risk graphs. And it's a great trade if you manage it and set it and trade it and forget it. Like, you can't look at it to the end of the day and say what coulda, shoulda, woulda.
Yeah. That's all I got for now.
Okay. It's okay. We played the music. You got your dime, your dance floor ready to go. Dow's a little bit weaker. Even the S&Ps are a little bit stronger.
NASDAQ just rallied 40 hand. This has been one for the ages.
This has been one, like we said. I mean, it's one of the biggest, if not the biggest, moves in a month. I know we're in a new month now that we've ever seen.
This has been just incredible.
Yeah.
Agreed. Okay, should we do it?
Yeah, I'm ready.
Fast market. Let's do the trades.
Yep.
First one.
We are looking at FCX. Got IV, great IV. I almost said rich IV, but great IV, rich premium, and low stock price. I'm keeping it simple and selling the 55 puts. FCX, also known as Freeport McMoran, a copper play, down 82 cents today. Doesn't sound like a lot, but it is almost a 1.5% move. And they are correct, Jake in Omaha. This stock has gone from 70 to under 60 to 57, where it is right now, without an uptick. What do you think about FCX? Once a beloved stock with a correlation of 0.75 to the equity market. So a high correlation to the market, has not participated. I kind of like his call here.
I like it as well. I mean, it's copper. I'm long metals in general, so kind of fits my assumption. So I did it. I also think, you've got volatility at IV rank of 54, but the options look pretty cheap here.
Yeah.
I think I might do like a little diagonal spread in addition. I guess you would call this a stupid.
Mm-hmm.
But I'm going to do the 60-65 diagonal spread using July and June.
Mm-hmm.
So a long duration. I mean, this trade, I did it at $2.48 debit. If you're in a Johnny-sized account and you like this assumption, that's how I would do it. Because the put is relatively capital efficient, but this diagonal spread, cheapy way to get some long delta here.
And look at you going out to 77 days.
Yeah. I mean, you're in no man's land right now.
And you paid $2.46 for it, right? It's got 20 long deltas, 21 long deltas to it.
If volatility was a little higher, I would probably stay in the May. But I'm talking market volatility. I mean, here you got a decent IV rank, but it's not high by market standards at this point.
And what you sold, did you do something with puts in FCX?
Yeah, I did the 55 strike puts. They were looking at. I just added a little bit of extra, a little extra kicker.
oomph, a little extra convexity.
Yeah, the Super
that we
Bowl.
like to talk about. Yeah.
Yeah, the Super Bowl.
Perfect. Awesome. Good job out of you. All right, next one, please. Even the S&P just made a new high. They're up 35 right now, about $1.50 off of their highs.
You can't stop it. You cannot. You cannot stop it. Some of these stocks are moving unbelievably.
Agreed. Highest IVR on the board here, selling the June Iron Condor 70-80 put spread and the 20-30 120 130. Never thought I would say that in Intel in my life.
Unbelievable.
For a credit of 337. Intel, go.
I'm not adding to my Intel position. I am locked and loaded. I'm net short Delta. That's all I got for you here. Yeah.
That's fair enough. I don't Matt, Atlanta, Georgia, I don't mind your Iron Condor. It certainly fits. You have all the criteria there. I might be a little bit directionally here too, with some sort of trade.
Yeah.
I don't mind the Iron Condor, but I would probably abstain from Intel too. Next one, please. USO, here you go. Bearish. Well, I hope you did this yesterday.
Something's happening. Oil's moving
down $4 and change. Market catching a bid here.
Did we get another Axios report? our inside source from the American version of the CCP.
Yeah, you're right. Go back one slide. You touched something, production. Sorry, we got to go to USO. We're on slide 3. Slide 3. Production might be waxing.
Oh, here we go.
There we go. Bearish in USO. We hope you did that. It is down about 4% right now. Oil feels a little heavy. Chris in Austin, Texas, you know your stuff. After that parabolic run, but I'm not pressing the downside too hard. A 120-200 strangle gives it plenty of room. I mean, now strangle's not usually a bullish strategy, but go.
So I am locked and loaded in USO. I'm long June calls, short May against them in a multiple of like 3. It's working obviously very well today. I actually, we're not there yet, but do I take some of this off? Yeah. All right. So I'm going to take some of the tail calls off the table. I don't hate the trade. I mean, oil volatility has come in really significantly, and I'm short volatility here with the front, but I'm not adding to my position here. I'm not adding to my position. So
yeah. OVX CGI, where do you think it is? It was 70 the other day.
65.
Not quite. It's still 73, but it is down almost 3%. OVX CGI is the volatility on /CL oil options.
Okay.
Good job out of you. Next one, please. SPX, we didn't do one. Yeah, PMI came out. My Taiwanese sources told me that didn't move anything. Bonds are 113. Market's rallying, I think, more out of oil going lower, although the market didn't go lower because oil was going higher. So maybe the market's just doing what the market wants to do, and oil's doing what it wants to do. PMI comes out at 840. What'd you do?
I just closed out of the gold 30 handles.
Scalpy?
Yeah.
Gold up $6. You horse.
I mean, things are just moving so quick, dude. I don't know. I don't know what to tell you. It's just I'm trying. I'm doing my best. You know,
you've been scalping. Great. What are you talking about?
It's just whew.
No, you've been doing good.
I'm not even reading the slides because things are just moving. I mean, you're looking at stuff that's moving $20 a clip. I got the
and not just the market. Bitcoin, by the way, 79,000.
Oh my God.
Yeah. Yep. Everything seems to be going a little bit higher. All assets is what I'm talking about.
Yeah.
What do we got here? PMI coming out at 8:45. Then I'm putting on a neutral iron condor. Happy Friday bats. What do you think?
Good luck.
We put one on at 9. What's that?
I said good luck.
Okay. All right. You're gonna hold that.
I'm not touching anything in zero.
You're not ruining your weekend?
No.
Well, let me give you a reason why maybe you don't want to ruin your weekend. Even the S&P's expected move for right now is $20. You remember when we did it yesterday, it was 34. It didn't work for us yesterday. Hopefully, it works for our friend here, Ryan in San Diego.
That was the Western
Digital. You're selling your.
Yeah, I'm gonna basically hit all these. This market. I mean, it's amazing. I love
Western
it.
Digital up $8 after being down earlier.
It's the stupidest thing I've ever seen, though. I love it. This market.
Western Digital has rallied $40 in the last half an hour.
It's unbelievable.
It really is.
I just closed the SanDisk one too.
SanDisk, 285 and 350 on both of those. Good job out of you. $5 and change on the other one. You got yourself a little bit of a monster there. So good job out of you. Even the S&P's up 50. NASDAQ.
Why not? They should be up 500. But the market's never going down again.
It is up 500, but that was for the month. A little bit more than that.
It's unbelievable.
Mm-hmm.
I mean, it's just.
Yeah, I mean, listen, you put on a neutral trade like our friend wanted to do an Intel in just about any stock that you have here.
You're getting murdered. You can't sell.
Yeah, because you have short delta. Yes.
You have to be doing diagonal spreads.
Well, you have to be directional is what it's coming down to. It's just the moves have just been too great everywhere.
You just cannot take the tail risk.
You just can't take the tail risk.
In either direction.
You are correct.
It's just you can't do it. Next one here.
Gold GLD up $2 now after being down $1 and change. I
wish I left my oil long on. My God.
Right. Unbelievable.
E-mini is going to be 7,300. Unfreaking real. Unbelievable.
Crazy move here across the board here in the whole market here. Can we interrupt this just to see what's
sure.
not participating in the market for just a quick second. Roblox still down about $10 or so, about $4 off of its lows, down 20%. That's a big move. Qualcomm down 7. USO obviously down 6 with oil now flirting with 100, 180. OKLO used to be a thorn on your side, down 2 and change. All the oil-related products are lower also. And then you're going to have just about everything else going higher here. It looks very broad-based. SanDisk now up $50. Light has been a leader in the clubhouse, up 60. Reddit up 11. Costco up 12. Apple up 13. Talked about the market not going down when Apple was up 10. Market's not going down when Apple's up 13.
No. This is just incredible.
It is remarkable.
All right, next slide here.
All right, next slide here.
PDD.
Oof, what do you think about PDD? They're Tyler's bullish, no earnings in the way, and I like the medium term setup. July, June, bullish diagonal. PDD, not one of my go-tos. It's actually down 50 cents. Hasn't caught itself a bid at all, ever.
Oh my God.
Correlation is actually negative to the market, so that makes sense.
Bullish June, July diagonal spread. Okay.
Mm-hmm. What do you think? What do you hear? What do you say?
I'm thinking the 100, 110.
Okay. Bang
them out. There we go. I did a 487.
Beautiful. You push that through. You're the
yes,
man.
It's going through.
All right, awesome. Next one, please. Good trade in PDD.
Thank you.
Oracle, kind of bullish here, but I wanted the short put down at 140. June Jade Lizard with the 80-85 call spread could work. Kyle, Boise, Idaho, Oracle, ORCL up around $7, $6.70. Well, I hope you put this on yesterday.
Yes. If you put it on yesterday, it certainly worked.
Yeah.
Give me 1 second here.
No worries. No worries. Go. Don't worry about it. Taking a look across the board here. There's no ick anywhere unless you're in the Russell. It's only up 5. Volatility in by 18 cents, about 10 cents off its lows.
Okay,
Bonds are
kind
up
of.
14.
They're looking at a jade lizard into earnings. We'd go in June. Okay. 140. Okay. It'll be a pseudo jade lizard. I sold the 140. I did the 180, 190 call spread.
Beautiful.
732. So you have a little bit of upside risk, but it's more neutral than it is anything else.
Very nice. I like it. I like it. Good job out of you. I closed my gold diagonal I had on. I needed that rally, so thank you for bringing it to my attention. Made a couple bucks in there. And I closed my bond short puts that I put on from about 2-3 days ago on my option trades today. All those trades every day. Forget about Tuesday and Thursday. You wanted it, you got it. Monday through Friday. EEM now. What are you doing in there?
EM. I have the most junky position there. I'm right at the money with a call ratio spread, a little tight one. June 58-68 strangle. I can't touch this.
I agree with you.
These markets are just not that great.
Market, I'm not going to EEM.
No. Next one, please.
UAL, betting the airline recovery soon. IV rank is good, but not extreme. So a June, July, 105, 100 diagonal fits the setup. What do you think?
I do have some short puts here. So I am long. These markets stink. Look at the July options. They're $3 wide. I don't know what is. I don't know what's happening here.
I don't know what's happening either.
So I got to pass on this one.
Okay. I don't blame you. You're allowed. Next one, please. CRCL be number 9 of 10 long term. I'm super bullish on CRCL. This is Luke in Kansas City, Mo. 100 covered call. What do you think about that? Capital intensive, relative, but what do you think? Maybe a poor man's covered call if you want to get super bullish with my man Luke, who's less buying power.
I actually am just going to close out of this diagonal spread that I had.
Okay. You can do that.
You want to do covered call in June, long term.
That's right, long term.
I will entertain this with a diagonal spread. I mean, the volatility is there. So I'm going to roll this. I'm basically rolling. I had a short-term diagonal spread. I did it actually as a crab trade. I took like $100 out of that into the rally today. I'm going to roll that basically the same amount of capital into a July, June 100, 120 diagonal spread. So basically just pushed it out in time, gave myself a little bit more more time to be right on it.
Okay. Me likey. Good job, buddy.
Thank you.
Next one, please, and the last one. We're looking at silver, neutral. Trying to stay delta neutral, but leave more room to the upside. Well, you are right there. Silver is up big. It's been up a lot more than gold this morning. It's up almost 4%, 2.79. That's a huge move. In silver, all of these commodities have really gotten themselves a little bit of a relief, not a relief rally. They've moved up with the market right now. They haven't been as of late. Selling the June 6078 strangle. What do you think? SLV, smaller product than /SI.
I am going to go to the 6080. Do it a little bit more neutral. I mean, there's still slightly short delta.
Sure.
Because of the call skew, but I'm with you. So I did the 60-80 at 291.
Okie dokie. Good job out of you. I mean, that's all of it, I believe.
Cool.
I like it. Nice.
Perfect.
Nice work out of you.
Thank you. Nice work out of you.
I mean, this graph or this recap doesn't do you justice. You were on fire. Matter of fact, you've made a bunch of trades already this morning. A bunch of scalps already this morning.
Yeah.
Good trading show. You've made over 20 trades today, taking a couple of profits in different places. Been very nice. Good job by you.
Some things are just moving very, very fast.
It's redunculous.
Crazy.
Let's take a quick 90-second break and come back. We got more Tasty Live as even the S&Ps are up 50 handles. NASDAQ up 290. I'm rounding up by 50 cents. NASDAQ not moving up 2. Dow up 238. Volatility in by 23 cents going into the weekend. Bonds up 16 ticks to 113.11. If you sold puts with me 2 days ago, those have all come to fruition. Do as you may there. Bitcoin up $2,400. Oil down $4.78. Flirted with 100. It's $100.28. Got down to 110 cents. Don't fill up your tank today.
Wait till Monday when they adjust it down by 3 cents.
That's right. We'll be back in 90 seconds with Tasty Live. Market measure next.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nikki, we are back, son. And you know what that means? Time for a little bit more Tasty Live. That's right, with the market measure. Don't look now. Even the S&Ps are up. Oil under 100, 99.74. Don't fill up your gas tanks. I don't know if you guys caught that before you went to maybe go get your coffee or something like that. Don't fill up your gas tank today. It's still going to reflect yesterday's prices at the pump. Wait until Saturday or Sunday when it goes down to 3 to 5 cents.
Thank you for that PSA.
Yeah.
Really good.
Saving your money everywhere.
Amazing.
Saving your money everywhere. But you do you.
God, gold's up 40 now?
Gold up 40.
Jesus.
46.70. It's an asset, all asset.
It is buy everything. You cannot miss today.
No.
How do they keep vol this high? How? Do they smash it into the close today? I mean, like...
Probably not going into the weekend is my guess. But hey, who knows? I mean, right now, volatility down 20. We haven't even made new lows on volatility. For the day.
It's crazy.
Yep.
All right. Market measure.
Let's do it.
Yeah.
Mm-hmm.
All right, so we're talking about short-term jade lizards. It's a little harder to do in SPX, but you can buy a wing and basically make it into a jade lizard in terms of defining risk, but we're going to take a look at that here. So obviously in the morning, you got a ton of liquidity SPX. We've done various strategies from put spreads, call spreads, iron condors. We've covered it all. We're now getting into the spicier trades, the jade lizards here. Jade lizard, it's basically a skewed iron condor. For the most part, nobody's really trading naked SPX short puts. I just don't think it's a very capital efficient way to trade. And there's probably a very small amount of people that even do it, if ever, because you can just reduce your buying power by buying a wing really significantly here. So we're going to be looking at a really wide put spread to a tighter call spread as a jade lizard here. So today we're going to look at the bullish to neutral strategy we call the jade lizard and give you a little bit of stats on that. So let's do it here.
I like jade lizards. I mean, I know Liz and Jenny get credited for
the creators.
There are some Taiwanese sources that say Tony from Mexico was instrumental and didn't have a mic or a camera in creating this too. So let's give him a little bit of props too. But it kind of makes a naked put, which at all-time highs I don't think is scary if you put any on.
No.
But in past markets where markets go both ways every once in a while, the jade lizard gave you a little bit more of a cushion than just the naked put. Remember, I know you're going to go through it in just a second here, but it's collecting more premium. The only problem with the jade lizard, and it's not really a problem, if the market moves in one direction, if you're putting it to the call side, means short a call spread, short a put, the put's the heavier part. If it moves quickly, you don't get the bang for your buck because that vertical spread starts to expand a little bit. But if it's a slow inside the expected move up higher, it really gives you a nice little boost. And if it goes slower down, it really gives you a little bit of a cushion. I like jade lizards when I'm on the fence for a bullish trade. You know what I mean?
For sure.
For all-time highs, I'd be looking at jade lizards if I was still bullish on a stock.
For sure. Neutral to bullish.
Neutral to bullish, yeah.
So here we're going to be doing 7-day jade lizards with short strikes at the expected move and either 20-point wide for the wings on the put side. We're going $20 wide on the puts, $5 on the call side, $30 wide on the put wings, and then $10 on the call side. So wider, a little bit wider spreads there. For winners are closed at 25 or 50% of the max profit, with trades being checked at the end of each trading day and then every 10 minutes throughout the day of expiration. So we're looking at end of day and then the day of expiration, we're using the 10-minute data. So we're not doing these. There's going to be a little bit of variable here because we're not getting the 10-minute data intraday. It's just too much to look at. there. So we repeated the analysis with the beginning trades at 5 days and then 10 days for the comparison. So we're looking at 7-day, 5-day, and 10-day. And then all these trades are assumed to execute at mid-price, which is about as good as we can get here.
Mm-hmm. That's correct.
So the $5 wide call spread with the $20 wide put spread closed at 25% of the max profit. That's what we're looking at here. Very high win rate. Again, this is a bullish strategy in what has been a bullish market over the data set. So it's certainly going to be a positive outcome here. This is a good trade for sure. The interesting part is that you have the amount of days that you're in the trade relative to the P&L. The ones where you're starting with 5 days, you're getting the average P&L higher, and you're also getting out of the trade sooner, which sort of makes sense because it's a shorter duration trade. It's going to move faster here. The frequency, though, that you have to hold this to expiration, the 5-day expiration, is the highest of the group. So, your winners, you're taking off very quickly,
right?
But there's a lot of trades that you're holding until expiration here relative to the rest. You can see if you're starting this 10 days out, you're not holding this until expiration. And you're going to be further out of the money, so you're probably getting tested a lot less. Your losers are probably a smaller, your deviation of P&L is probably smaller relative to the 5-day, which is going to have a wider distribution, I would guess. So it just goes to show that the shorter duration is going to move faster, but a lot of them you're also going to end up holding until expiration.
All right, good. I mean, this is very encouraging. Now, you can look at it as a buying power being relatively high on a naked put, right? I mean, in a margin account, it's not going to be so significant. But since you're doing this is all in 7 days, right?
Yeah.
So since you're doing this in 7-day, for those who are like in an IRA type account that are using options to try to maximize their return, and you're doing this in 7 days, you could go out and buy that put down below. Because remember, in 7 days, you're going to be able to reduce your buying power on this exponentially because there's not that much time left to the overall trade. And you'll be able to buy that put and not use as much buying power. That would be something to look at for the crowd that has a smaller sized account, maybe even for Johnny trades or something like that next week, if we remember.
For sure. And I think this kind of shows you, too, the 7-day is better than the 10-day. Yeah. The 10-day is going to take a little bit longer in the trade. The relative amount of them that you're holding until expiration is basically the same. You're getting essentially the same win rate, the same average P&L. So 7 days is kind of where you cap out. You kind of got your 5 or 7 day is really the spot here.
Right. Very good.
Next one, please. So we're looking at the $5 wide call spread with 20-point wide put spread. And these, as you widen out the put spread into a bullish move, you're going to get higher numbers for P&L. That's what you're seeing here. Win rate, all about the same. Average P&L increases as you get shorter duration. Your average trading days in the trade gets shorter as you get shorter duration. But the frequency of holding them until the day of expiration is also going to increase. And again, you can see here, the 7 and 5 day are kind of the spot. The 10-day is really not the one to use here because you're going to be holding it a lot longer on average, and your P&L doesn't really change. The P&L doesn't really there's not much to add. If anything, from here, you actually don't add much from your average P&L going from 7 days to 10 days. It just makes sense to do this either 7 or 5 days. That's the spot.
Correct.
When we look at $10 wide call spreads with $30 wide put spreads, so now we're widening out that call spread a little bit, you're actually getting better average P&Ls. It tells you that, the widening out of the call spread isn't necessarily hurting you here as long as you have a wide enough put spread. Win rates high across the board. Again, you actually see a little bit of a flip. But that 5 to 7 day is probably still the spot to be. The $10 extra profit that you get, is it worth holding the trade 3 or 4 more days extra on average? Probably not. it kind of still goes to the fact that you probably want to stay in that 5 or 7 day range. It's where, the numbers are good. And the important part of being out of that trade is the most optimal.
Yeah.
Being able to cycle that capital into something else.
I mean, this supports just about everything that we talk about going wider. This is with defined risk, obviously $10 and $30, but going wider, using a little bit more buying power, less contracts you could add to this because you just went wider, right? Like if people were thinking about maybe ramping up with more contracts on the last 2 slides, because it's such a shorter dated trade, you might think about widening out your strikes. It seems to be a lot better on that. And again, no WDC risk to the upside or anything else like that because you have defined risk trade here.
I'm a glutton for pain. I'm selling E-minis here.
Up at they just traded 7,300. I don't hate it. Volatility actually uptick very, very small here, but there's really nothing that indicates we should do anything but.
Oh, this feels like the stupidest trade of all time. That's why I love it.
I agree with you. I mean, when you have a 50 handle move already and the expected move was closer to 20, I love the play. I think it's something that you'll look to manage quick enough here, right?
Just like everything else.
Just like everything else.
I mean, like you got to manage stuff quick. If it works, you take that money and run.
It's just a trade. It's not a marriage proposal.
No, definitely not.
Mm-hmm. Okay, good job out of you.
I think I gotta sell some calls against my gold position here into this rally. I have some GLD calls in June.
GLD has had itself a nice little rally here. $2.85, almost a 0.75% move.
So, did we look at this one? No. $10 wide with 30-point wide put spread closed at 50% of the max profit. You're obviously going to increase your average P&L. Days in the trade is going to be longer across the board, but you can see again, it's the same story. The 7 and 5 day, that's the spot you want to be on these.
Yep. That's where you want to be. Seems pretty definitive.
Yes. Couple takeaways. So the Jade Lizards held up well, and when the winners were taken as early as 25%, trades could usually be closed and the capital redeployed before they even reached 0 DTE. So that's one of the things with a lower profit target, you're going to be able to cycle through these trades a lot quicker. Staying for 50% of the profit meant staying in the trade, staying active through the expiration of that trade. It's a caveat, right? So you want to be out of these trades quick enough to redeploy that trade. If you're waiting a little bit too much, it's not going to give you as much bang for your buck as it will cycling out of these trades. It goes with everything we talk about of like not trying to take every penny out of every trade that you get, because you want to close that trade and redeploy it into a higher opportunity position. And that's really what we showed here. Using wider legs also brought home more total profits, but about in line with the increase in buying power. So making the two approaches similarly capital efficient. I think the one caveat there is the wider spread. You obviously was a little bit faster moving, and so you were out of that trade a little bit easier. Jade Lizards have long been an effective way to pair a bullish outlook with the belief that implied volatility overstates the realized volatility. So now the efficiency paired with short-term option markets lets traders put them to work in a matter of days rather than weeks. The Jade Lizard, probably an interesting take here. I think I wish we weren't at all-time highs. I wish I was doing this throughout the last month. It would have been quite the trade.
Agreed.
Cool.
Good job out of you, my friend. I think you have a small profit. You'd be the first one to have a profit in selling futures if you take it. Maybe only a point or two, but still, it's there.
No. We'll hold it. We'll see what happens. Volatility hanging in there. This move in oil is nuts. The move in stocks is nuts. We're going into the weekend. Let's see what happens here.
I have a feeling you might be holding us into the weekend. Even the S&P is up 51, NASDAQ up 270 and change. You'll get a chance to take 10 handles on this probably. We'll see. Russell up 9, Dow up 205, bonds up 20 ticks, 113.15. Only true believers there followed me on option trades today. Bitcoin 78.6. It's off of its highs of 79.4. Ethereum up 52. It's about $15 off of its highs. Gold back over. I keep saying gold. Oil back over $100.67, down 440 or so after trading under 100, just slightly over 106. So big range in oil today. Gold up 24, off its highs by $20. You may have caught the top here, son. Silver up $3.77. That's a 4% move there. Nat gas doing the opposite, down small. Let's see what's moving the market across the board here. On the downside, WDC now down 9. So good sale on your. I bet if you took a look at your spread that you had here, it's trading lower. You sold it at $3.30. It's back down to 35 cents, just like that.
Listen, we've been harping on this throughout the whole thing. Stuff is moving, and you gotta be a
both
trader.
Sides sometimes, right? Even you got to take. Go ahead. You were going to say.
Yeah, you got to be trading this. There's a time where, and you talked about it too, with the news-driven market. In a non-news-driven market, you can sell the puts and sit on them and wait and whatever. Today and throughout the last, couple months, you're having realized volatility that is way, way higher than what is implied, even though implied volatility has been high. And so when you get these sort of moves, like, SanDisk was down $100 pre-market, and it rallies back 150 points. You can't sit there and do nothing.
And say, okay, now I got the right direction to sit in my trade, right?
I can't. I look at it, I'm like, you know what? This was a gift. I'm out. You move on to the next one. And, some of them you're going to be wrong on. You're going to miss out on stuff. But you're going to
make less profit.
Less profit. And that's easier to live with than watching a profit go to zero and losing the money, right? Like,
Agreed.
The FOMO is, we are peak FOMO right now. And that worries me.
And it is real, my friend. It is real.
Yeah, it is real. Unbelievable.
All right, let's take a quick 90-second break. We will come back, my son. We've got more Tasty Live. We've got more Tasty Live with my friend Q and Tasty Trade World Headquarters coming in next. We'll be back in 90 seconds with Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nikki, we are back, son, and you know what that means. The market's at its first downtick in the month of May. It's only one day into May, but if you include April, it would be the first downtick in April. You mean the S&P sold off about 10 handles they're 283 from 7,300. Well, that's a little bit more than 10 handles. That's 20 handles or so. NASDAQ up 180 and change. It's off by about 100. Russell up 4. Dow up 170. We're kind of back to where we were at the high end of the opening range of the market. Volatility down 10 cents after trading down to 1920. Bonds are up 12 ticks to 113.07. They're off of their highs. Again, going back to everything has movement. Everything needs to be taken advantage of. You got a little bit of FOMO across the board. Bitcoin 78.6 up $1,800. Ethereum up almost $50 on a percentage basis, just about the same between the two. Oil back up 100, actually 101, up about $2 off of its lows of 99.30. Cancel that last thing, catching the 4 or 5 cent change in the oil price, gas prices at the pump. Maybe go there right now. Seems like things are changing. Gold up $20 after being up $20 higher than that, also being about $80 lower than that. Silver up $280 and change. Let's go across the board here. Still the downside, Carvana $384 after having earnings last couple of days. WDC all over the board, 404 to 446. It's trading 420 right in the middle of that range. Qualcomm down 7. Meta continues to slide from yesterday, down 5. AMD down 4. Google down around 2.5. Marvell down around 2. NVIDIA, which was higher on the day, now down on the day, down around $2. Trade up to 203. It's 197.5. So NVIDIA taking a little bit of a turn. Light still up 50, but $20 off its highs. Lilly still up. Apple still up $12.
Yeah,
S&P's up 32.
If they close red on the day today, what is the
what is the
move on Sunday? What is the move on Sunday if we close red today? Volatility's up. We'll say oil's like basically unchanged. Markets are down. What's the move on Sunday into Monday?
If we close lower today, we probably go lower on Sunday. Again, this is going to be my
Do they buy the dip again?
Yeah.
You think so?
Yeah, you probably make the lows in the overnight session. For the short term, that would be my guess. But let's see what happens because we don't know yet. Let's watch what volatility does. Let's watch what the market does. You're not selling off significantly with Apple up $12.
No.
5% move. I just don't think the market has it in it to do that, to turn Apple around like that. That's my guess again. But I'm optimistic. You taking your profits?
Yeah.
That's probably a very good call right there, my son. Very good call. Good job out of you.
No, I've thought I thought we've needed a downside move for quite some time.
Of course, me too. I agree with you. But again, now you've lost volatility. I mean,
yeah. Unbelievable.
Enough out of you. Let's
Cool.
go to my friend at Tasty Trade World headquarters. That's right, your friend and mine, the gracious one, Mr. Q. How are you?
Fellas, how's it going?
You know what? Not too bad.
It's been good, but my brain is a bowl of mush.
Yeah.
I don't know how else to describe it. The numbers are flying too fast, too furious. I say that but I love the game.
Yeah.
I love it so much, but man, this has been a wild one.
Yeah, I would say we're seeing a lot of that.
It has been a wild one. It's got to be wild on the trade desk too. What's going on there?
Yeah, we're seeing a lot of that on the desk, especially what you talked about earlier, like the FOMO sort of thing. I mean, April was insane, right? Just parabolic, straight up.
The second best April of all time. Did it feel that way for you?
Yeah. So I mean, it's crazy, and I would say when we see a lot of that stuff, and then customers say like, "Oh, I want to get in now," I would really caution to make sure that you're doing the position, you're putting on the positions for the correct reason, and not just because you missed out on something. You don't want to size up when there's no opportunity. There may be opportunity now for your given strategy. That's for you to determine, but you want to make sure that you're not doing something based on missing out on a previous move, right?
Yeah. I
agree.
Yeah, size it appropriately. That was my diamonds diagonal spreads. We took a couple bucks out of that too.
Oh, look at you taking a couple of bucks everywhere.
And I'm taking off this Macy's put that TP gave us. I can't look at it. I have too many pages of positions. I can't look at this $1 put. It drives me nuts. I think it's a 10-cent loser. I bless the gods for that 10-cent loser to be gone from my portfolio. I can't look at it. Sorry, Q. We're
sorry,
we're in banana land right now.
He's venting. The Q that was not directed towards you.
Or TP. I love TP.
No. You directed it towards TP. You directed it towards TP. No. You did.
I love him.
Made fun of him when he put the trade on for you. You made a little fun of him. You did. It's okay.
A little bit. I gave him a little bit of, but he's TP. It's a wealthy guy. Yeah, that's a big time guy. You sell a big old lot of $1 puts, and the number looks nice. I can't freaking do it. I can't do it.
Well, there you go, Q. There you go. We got a little fight here. You want to know something else, Q? He scalped positively from the short side on E-mini S&Ps.
Can you believe that's possible?
Out of you. Yeah, that's a great
Didn't think that was possible, right?
I didn't think it would be possible.
Mm-hmm.
We did it.
Either.
No, very nice. We've got a lot of more active futures customers getting into the markets right now, the way they've been moving. Because even in April, there was still a lot of movement, right? And so a lot of ability to take advantage with the futures positions where you can get a lot more leverage than you can in the equities. But as always, with a lot of leverage comes a lot of responsibility, and you want to make sure you're careful with the size.
Mm-hmm.
You're right about that. No doubt about it. Good job. What's the most actively traded, or what's the most active question you have right now?
Yeah, I would say right now it's probably, I would say, because we've gotten a lot of questions like what am I supposed to do at the all-time highs here, right? And a lot of people that are short calls that are trying to stay neutral. It's what do you do when the calls are getting toasted, right? And so there's a couple things that we typically say. You can always, if you still have a lot of duration to your trade, you can always leave the current trade on. Sometimes the position goes against you, but underlying vol's still a lot higher than I feel like we would typically see at all-time highs. So if you want to keep that position on, stay short premium, there's nothing wrong with that. If you're a little bit shorter duration, like something like 30 to 15 days, the typical tasty mechanics, you can always roll out further in duration, get out to the more 45, 60 days till expiration. Or, sometimes you just gotta, the stock wins, right? Sometimes the market wins and you gotta take it off, look for something new. Even if it's in the same symbol, adjust your position. I always like to say, there's nothing wrong with buying the guts and selling the wings. There's nothing wrong with having to pay a debit and then establish something new, right? If you still want to sell premium, if that's your current assumption on the underlying, you gotta, dance with the girl that you brought, right?
Whoa, you can have both.
Maybe you can. I unfortunately cannot.
You can have one or two. Oh.
I am not getting involved in this. That got me in trouble the first time. I'm not the voice of reason when it comes to that. If you want to trade, I'll give you a little voice of reason, but I'm not gonna give you a voice of reason anywhere else. You're on your own. All right, Q, give us your list, please. See what's going on. Maybe we can find a new trade here while Q's on. We can do that for him. Go.
All righty, let me get that pulled up here. Top 20 symbols going through the system, and their IVR at number 1. Apple, no surprise here, with a 37. Tesla, 8. Micron, 72. NVIDIA, 46. Microsoft, 45. Intel, 104. SNDK, 62. Amazon, 20. Palantir, 33. SLV, 32. iBit, 23. Meta, 32. AMD, 80. Reddit, 24. Google, 35. WDC, 70. MSTR, 38. Oracle, 50. Roblox, 46. And TQQQ, 44.
Good job out of you, I believe.
For sure.
Better job out of all of our viewers. What do you think about that list, Nick? Is there anything in there?
Look at Western Digital is now down 5. I mean, some of these stocks are moving like penny stocks. Yeah. I mean, SanDisk is pinned at 1,100 right now. I mean,
yeah,
I don't know if I feel good about this.
Wait a minute, you mentioned penny stocks for a minute. If I take away the prices on here, that it's a $1,100 stock, you take a look at this and you think to yourself, yeah, that's penny stock movement.
Yeah,
I agree with you there.
I think you got to be careful here. I don't know. I don't get great feelings. Although they just knocked volatility again. I don't know. I don't know what's happening in the news cycle. I'm blind, so I don't know what's happening. But I feel like if there's going to be risk,
why you think if you had a Bloomberg terminal in front of you, you could be as good as Vecchio?
Yes.
Yeah, I feel bad sometimes when customers say, like, what's making the market move this way? I'm like, not gonna lie, like, I'm just so in the market matrix, looking at the market all day. I have no clue what's going on in the news. I'm just like, all right, I know volatility is
more aggressive buyers than sellers, because there has to be one for each for a trade to happen, right?
Yeah.
I mean, you've got trading volume at all-time highs and going higher every day. There's trading going on, and the buyers are aggressive. That's what happens. And that's why volatility actually stays bid. Because remember, volatility /VX, volatility on SPX is measured by the willingness for somebody to pay more for something. That's on both sides, calls and puts. Now, usually in a product like an ETF that mirrors the market, volatility is going to have a little bit of skew to the downside because people are trying to protect the meat of their portfolio, which is basically long stock, long positions. The market, the public leans long. So that's why stocks also, individual stocks, have more call skew to them. Now, when you get volatility like we do right now, we've looked at volatility mean in VIX being over 20, right, son?
Yeah.
And it's
25 is the mean volatility over the last 5 years.
And you've got 17 vol right now. You've got aggressively buying of call options here.
Yeah,
that's what you have going. That's what you have going on. You look at some of these,
and that's why vol's going nowhere.
And that's why vol is going nowhere.
I mean, like it's lower, but the VIX.
It has to be lower at all-time highs.
Yeah, it has to be lower, but there is certainly a lot of speculation.
Sure. And then you get the fewer sellers, so they up their prices. Now remember, everything's a liquidity provider. You've got 15 or more liquidity providers on the option side. They all raise their bids, which means raising volatility, raising that tail risk. And the buyers have to be more aggressive for you to have a trade. That's what this is all. That's what everything is here, in my opinion.
Yeah.
We'll go one more time through the market, then we're going to let you go, Q, and we're going to go Chew. Even the S&P's up 40. You just said a moment ago.
I closed out of a bunch of stuff. I'm leftover call from Tesla earnings. Tesla's up like $8. Closed out some Netflix calls. AMAT was a crab trade. I closed out of that. I mean, there's a lot.
Yeah, Tesla up $8 and change. Back from the dead there, was having a little bit of a hard time getting its wings underneath it. AMAT down $1.50. Not too far off its highs though, but yes, you are correct. Volatility hanging in there, 1930. I thought it would hang in there for the day, just going into the weekend. What do you think about the weekend risk, Nicky? Is it to the upside? Is it to the downside?
I think it's the downside.
The risk is to the downside.
I think it's the downside. And I think, with all these moves and the craziness and the FOMO that we all have, you get a spook, and there's a lot of fuel for that fire. If you've been holding calls, just YOLOing calls, and you got big numbers on the board, and then all of a sudden you have a down day and those numbers go very quickly the other way, there can be some quick profit taking. I don't know. This seems a little FOMO-y, but it's felt FOMO-y for 2 weeks now, 3 weeks.
Yeah, yes, it has on both sides of the coin. Totally agree with you. Apple's hanging in there. It was up 11.5 just a moment ago. It's up $11.80. It's definitely off of its high. It made a high of $2.87. That's $4 higher than where it is right now, but a big monumental move in Apple. I think you can key on Apple for the rest of the market, how it goes today, just because Apple's such a big component of everything, up a little over 4%, almost 4.5%. Watch Apple to watch the market itself. Russell's flirting with going unchanged. This is, I feel like you're going to get your first FOMO trade here in the market. Yeah, well, the top is in, I waited it out kind of thing. We close right around here. Maybe volatility stays bid a little bit. You get a little bit of weakness over the weekend. If we close higher today and we get weakness in the overnight session, that'll be the first hook. We'll go higher after that. Now, if we go down today, that could be a different story. I don't think it's in the cards, though, son.
All right.
Oil hanging in there, 101 and change, down 370. We're going to take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Peace. Thanks, Q. Appreciate your time.
Of course, always.
I bow.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. Did you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Global markets never sleep. Explore them with Forex. Now available on tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies? Excuse me? I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. named best online broker for options trading. Genius loves company.
Everybody, and welcome to the Friday edition of the Liz and Jenny Show. Just adjusting here. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. Oh, I can see him now.
Yeah, there he is, Clarence. Clarence trying to get his 15 minutes of fame.
I couldn't see him when we were doing it because the whole right underneath here was blocked for me. I was like, oh, you can't see Clarence. He's right there. I love it.
No, he's there. He's there, sneaking behind me.
It's so fun. I love Clarence. How old is Clarence now?
Gonna be 11.
He's going to be 11? That went by in a flash.
I know. But he's doing pretty, he's got quite a lot of spunk left in him.
Got a lot of road in front of him. I like it.
I do want to say, shout out to your daughter, Annabelle. I went to see her play last night. She's Velma Kelly in Chicago, and she was amazing.
It was awesome. I'm going back again tonight and then back again on Saturday. So it's four nights only. It's been fun. But yeah, it's coming to an end pretty quickly.
I'm so glad I had a chance to go. She was so good.
I know. It was nice of all of our friends to come last night. It was fun to see everybody. Okay, but that being said, let's get into all that jazz that is the market. Jenny, do you want to jump into the platform?
Sure. Yeah, jump right in. We had some earnings. Apple's up. I can't remember what else was on the earnings list.
Apple, Reddit. The ones that I did in my account were Apple and Reddit. And they were both up.
Yeah, they were both up. So Apple's up $10.
Yep.
Which isn't, it was up about the same after their hours yesterday. And Apple's one that releases late. So 5 p.m. Eastern, 4 p.m. Central. It's an hour after the market closes that Apple comes out. And it was up then probably about $10 and just holding steady.
It's holding steady. It's up, but it wasn't up its expected move.
Oh, really? No, the expected move was about
I did the diagonal. It was about 14. I did the diagonal.
Huh.
So that's the only reason I knew that, and that's my whatever. marker on where, well, I shouldn't say that because I did it earlier in the day and maybe the expected move has changed.
So
that's fair.
right. It was, I think the expected move was only about $9.
Okay, so I did it earlier in the day, and that's a possibility that the move changed. But that's my like litmus test on where the expected move is when I have the diagonal in.
So remember, I said at 255 I was going to buy the straddle, and at 255 I bought the 270 straddle for $8. So I think that the expected move was like eight between $8 and $9.
Okay, yeah. If you did it right at the end of the day, then there you go. Then that'll be your thing. So did you sell out of it, or do you still have it?
No, I sold it. But the nice thing about earnings today is that some of them are coming back. Like our Amazon is coming back. That was a bright shining moment today. Take a look at we did a diagonal in Amazon, and yesterday Amazon wasn't really up. Ooh, it's not as good as it was, but maybe we should probably close it. We did this earnings diagonal 2 days ago. Yesterday was a loser, and now it's made a comeback.
Let's take a look at the Amazon chart. Yeah, so take a look at this red bar yesterday, and then today it went raging right back.
I know, and it was a little bit better earlier, but I would say just take the win.
Oh, I think take the win. It was a loss yesterday. I'm glad we kind of sat on it. Did Meta and Microsoft come back at all?
Microsoft's up a little bit, but not up enough. Meta, I don't know.
Let's take a look. I think we just have them sitting there because they were worthless, right?
And I think we added things, right?
Oh, no, we didn't do Meta in here. We just did Microsoft.
Oh, yeah. And then we added that June Jade Lizard. And so, great. We've got that on. You can put in a 50% GTC in for it.
Hold on. I am closing it for what it's priced.
It made about $100. We put it on for $5, and now it's $4. So we're up $100 in that new position, which if we want to change it, we could take that off and change it. Our other one, we turned into that 425 calendar, which that's making a little bit of a comeback too.
Yeah, those are making a little bit of a comeback. I put in a 25% GTC.
And our short is Monday. So, right? Our short's Monday. So
our short is Monday, and we sold the 225 for Monday. Yeah, that's fine.
Great. And then Monday that'll roll off. And if it keeps going up, we've got 10 days for that 425. So it's not dead in the water.
It isn't. Anything can happen in this crazy up market. It's been crazy. Okay, Jenny, only because it is 10:06.
Okay, 10:06 market for anyone who's watching this and taking a piece and pushing out for market movers. Here we go. We have been doing this Jade Lizard and SPX recently. We did a study on it this week, and we have one that we put on yesterday. Did we put it on yesterday?
We put it on yesterday. The study was done on Wednesday. So, and we can link it. We can link it somewhere too as well. It's been pushed out, but we did an SPX study about 2-day, 5-day, or 7-day Jade Lizards in SPX. Jade Lizard asks, we understand that SPX is a $2,747 product. So we have a wide put spread and a narrow call spread where there's no risk to the upside, making it Jade Lizard.
And I just want to clarify, if you go back and watch the study, it was comparing 5-day, 7-day, 10-day Jade Lizards. There wasn't a 2-day. There wasn't a 2-day. I think a 2-day you'd be way too close, way too tight.
Oh, was it?
Yeah, it was 5-day, 7-day, 10-day. And the winner in our mind, after looking at the results, was the 5-day, putting on a 5-day Jade Lizard.
So, but I would say it wasn't a clear-cut winner. It was kind of like, I like this one the best. That's what we landed on because there's less risk.
I think the 5-day really outperformed the 7 and 10-day, but where we were unsure of as far as what wasn't so clear cut, taking off at 25% or taking off at 50%.
Yes, because those were, and that is actually coming. We're going to get that next week as well. So here's what we have right now currently in SPX. You can see the days open. We put it on 1 day ago, so we put it on yesterday. Now, we were just talking, are we taking it off at 25 or 50? This is only 19 to 21% profit. But, however, there's a caveat.
Honestly, Liz, go to the trade page so people can see this. When we put this on yesterday, the short call was at the expected move. This was at 10 a.m. yesterday. At 10 a.m. yesterday, we put our short call at the expected move. We're already through it in 24 hours. In 24 hours, it blew through the 5-day expected move.
Yes. So what happens with a Jade Lizard-esque type position? So we've got a $20 wide put spread and a $5 wide call spread where we collected. I'm gonna pop this out to show everybody where we collected $4.85. So we have 15 cents in risk. If we stay right here, we will lose 15 cents if it's above there. But we still have 4 days left. I'm going to show this on the curve view.
And if SPX keeps going up, we've got a short $5 wide call spread, and we just barely collected just under $5. So if SPX keeps going up by Monday, this won't be a winner anymore. Right now we have a $90 winner out of this trade. And someone might say, well, it's 3-year call spread. How could it be a $90 winner?
And that's a great question, but remember that the P&L curve you see is at expiration, so that's in 4 days. And right now, what we've got is our long call. So I'm going to go back to the trade page, and we'll look at this, and we're going to put on a new one. Our long call now has a lot of extrinsic value, and that's why it's maintaining some value, and that's where you're getting the $90 in profit from. So we want to take action on this. We want to close this and reestablish.
Right. So if we go to our position page. And I know the study shows close it at 25% or close it at 50%. Well, if SPX keeps going up, this is never going to hit 25%. And that 21% or 18% that's fluctuating the P&L percent is going to, if SPX stays here and keeps going up, is going to dwindle. It might go from 18% to 15% to 10%. So we want to take this $100 out of the trade or the $90 out of this trade, and we can put on a new trade. We can take this one off and put on a new one.
What's great about SPX is that all the expirations, so there will always be a 5-day. No matter what you're doing, if you close the 4-day, you can go 1 day out and put on a 5-day with just new adjusted strikes. So I'm going to ship this. We'll close it and we'll put on a new one. And I'm actually going to make sure that it's bouncing around, but I'm going to make sure that we get filled.
We want to make sure we get filled because we don't want to have the risk of two $20 wide put spreads on at once here.
Right.
So
did you see that, Jenny? I wanted to get filled, so I was going to pay $4.10, but we got filled at $4. So price improved.
Okay, so we sold that for $4.85. We closed it at $4, so we made $85 on that trade, not including commissions. Now we'll go back out to a 5-day, which is just the next day.
It's just a day away. In the words of Annie, it's just a day away.
Because we put this one on yesterday. So, and I wasn't even going to look at it. I didn't realize it was through, but the market must have really rallied between 10 a.m. yesterday and 10 a.m. today.
It had. I mean, it was insane rally yesterday. Okay, so we're going to go through the exact same mechanics that we found from the study. We're going to do a $5 wide call spread on the top with very little risk because we're going to do a $20 wide on the bottom where we'll get almost $5. So each of these trades has approximately $1,500 in risk.
So then we're going back to the downside break even or downside expected move, putting in that $20 wide put spread. Here we're not quite getting close to 5. After the rally we've had, I don't mind bringing the call spread down a little bit to try to make up the difference. Because after this move, I'd almost rather bring the call spread down rather than bring the put spread up.
And 470 seems like an acceptable credit.
Sure. We saw here, it's in a day, it was through it and we could close it for $4. So I think it's fine.
I brought it in one more. So we're at the 7305, 7310 on the top and 7180, 7160 on the bottom for $4.80. I've got it locked there. You can see it's bouncing around a little bit.
Sure. Well, yesterday, same thing. It was bouncing around a little bit. We gave it a few minutes to work and we did eventually get filled. A little bit of a pullback in SPX and we'll get filled on this order.
And so this will look, I can't see the analysis until it gets filled. I can put it back in again though. So hold on. I'm just going to pop this trade in again so we can take a look at it on the analysis page and then that will be it. So we were the 70, 05, 70, 05, 10, 73, 05, 73, 10. And then to the bottom, to Jenny's point, we've been up so much. It was the 71. There we go. It's the 71, 80, 71, 60. Let's take a look on the curve view.
So you could see this will expire in 5 days. At expiration, this is what the P&L looks like. But if we keep inching up or we blow through, we should be able to take it off for our profit if there's still time in this trade. Our risk is to the downside, and we have $1,525 in risk because we have a $20 wide put spread, and we're collecting just about under $5.
Now, once this hits, I'm going to put a GTC in.
I put a GTC in for 25% on mine, but again, it's a good thing to look at it. You can't just blindly put it in and not pay attention because if it goes through it, you'll get less than 25%.
if it goes through it, you won't lose anything. So the nature of this is, honestly, if you don't, it's not something that needs to be micromanaged. Just kind of keep an eye on where the market is, right? Because at the end of the day, if it was up, it's really no harm, no foul. It's set up with little to no risk to the upside.
Mm-hmm. But here it is again, and hopefully this is helpful for people who watched our first video. Here's the second video, how we manage one where it's gone through the call spread, and then take that off and put on a new one. Now we know our put spread's higher, but that we're just following what the market gives us.
And I know, just to answer some questions that we got in the YouTube chat, if you take a look at this, it does say facts. SPX iron condor, because once you buy that last leg, the one that's just making it a wide put spread, that creates an iron condor. It's a skewed iron condor. We've gotten lots of questions on why we wouldn't have the call side just be as equal as the put side. And we are trying to eliminate, which I'm glad we did, because if we had risk to the call side right now, we'd be in the what is he called? The world of hurt from TFM. Because if we had $20 in risk on the top side, $15 in risk on the top side, we'd be through it.
And we're big fans of risk to one side. Then you're going to move, you get out of the trade. If we had both sides on, risk $20 wide on either side, we'd be struggling. It'd be through our call spread. So we like getting out of trades quickly. And usually with risk to one side, you're much more likely to get out quickly than if you've got both sides on.
Hey, so we're looking for in and out in days.
And nothing's wrong with doing both sides. Some people like that, but we prefer risk to one side. And we love the Jade Lizard. So I know it's an iron condor, but because it's a narrow call spread, a wider put spread, we're covering the width of that call spread, or as close as we can. We call this a Jade Lizard. It's a defined risk Jade Lizard.
Yes, and that's why it's a Jade Lizard, because we're eliminating risk to the top side. All right, I like it. We are in there. It's fluctuating. We're going to let this percolate a little bit, and hopefully we'll get filled.
All right. I was going to ask for the percolator.
Well, we haven't done that in a long time, but it's still in there. It is in. Anything else? We are going to be taking live tweets. Put the hashtag LAZJNY. We also have a market measures recap. Kai sent us all the market measures from this week, which we love. We're actually just going to look at the last one, because some of them, they might have done it on Monday where they were looking at something that isn't as it's still relevant, but isn't as relevant right now. So we're gonna take the best of market measures, and we chose the last one.
Can you also take a look at Reddit? I want to see what Reddit did on earnings.
Oh yeah, it was up a ton. Because I did the diagonal on this one too. It's funny, if I don't have skin in the game, I don't know what price it's trading.
Yeah, right. And I didn't put on. I looked at Reddit so many times yesterday, and I just never put a trade on. I just couldn't decide what to do, so I didn't do anything. Oh, good. We're in the new Jade Lizard. It's taking a hit today. You know how you say, like, if you don't have skin in the game, you don't know what's going on?
Yeah.
Clorox. I don't know if Clorox had earnings or.
Oh, they had earnings. They're down like 20%, aren't they?
Yes. Yeah. So I thought it's not a bad product for us to sell puts in. There's a decent amount of premium in Clorox. It's not too high price of a product. But take a look at this. Go to the June 48 day.
Wow.
Yeah. So go to the June 48 day, 250 on the 85 put. It's not bad. It's only using $1,400. You're getting $250. I don't mind these Clorox puts.
I don't mind them at all when I look at this. But here's my question. Wouldn't you put a 3-day rule in charge of this?
No, because it's so. I was thinking of the 3-day rule, but if you think about the diagonals we're doing, and we say, okay, if the diagonal doesn't win and it's down, we sell puts. We're not waiting 3 days. We're still putting in those puts, or we're putting in put spreads. We're changing our trade. We're not waiting 3 days. We didn't wait 3 days.
Agreed, but those are usually very, very, very liquid products that we want a very large upside potential in. Clorox wasn't one where I was like, I need to get into Clorox.
You know what? It's a dividend champion, Liz. It's a dividend champion.
Oh, do you have this in your account already?
Yeah, that's why I said if you don't have it, if you don't have it, you don't even realize what's going on. If you pop out this overview and look at the and I don't know what the news was on earnings, but I do have Clorox. You could see 5% dividend plus a lot of premium in these options. It's not a bad Wheel of Fortune candidate. Not at all.
It isn't. I want to see something just because I want to keep an eye on this. I don't know if it's going to work or not, meaning the buying power. Now, I should use my words. So right now, by selling the 85 put, you're getting 252, and you're putting up $1,400 to do it. I want to see if it goes down by 500. Yeah, look at this. So I might split the difference because we're not in it yet, if that's okay, and just get $115 by using 988.
Sure.
Okay.
Sure. Ship it.
Shipped. It's traded in. It's wide. I mean, it was 20-cent wide market. And we got filled mid market.
You know, this move might look bad, but I've been in Clorox for a while, and if you figure every month getting like 250. I got into it in January this year, and getting 250 every month, you know, that covers this move no problem.
Like, it's interesting. Take a look at this. Take a look at this on this chart. This will make you very, very happy, Jenny, because I know you like to see this. Keep an eye on that 8761 number. Oh, hold on. Let me get rid of that. 8761.
Yeah, I don't know what I don't know what the news was.
Is Clorox going out of business? Because it's never been this low. Okay, here's the last time it was this low. And that is, what year is this? 2014.
Again, I don't know how bad the earnings were or what it was, but it's a good, in my mind, it's a good covered call candidate, decent dividend, decent premium. I don't know what's happening to Clorox.
So I heard that this morning because they were, you know, there's like an earnings report and they said this was down 11%. It was down even more this morning.
Yeah. Well, we've had a lot of outliers. We've had a lot of 10% moves this earnings season.
We have, for sure. It's kind of crazy.
Yeah.
Okay, so that's Clorox is in. I put our GTC in for SPX. Rivian also had earnings and it's down $1. So we had the combo in.
And it's not exact kind of a combo, but our long call is in the 0-day, our short put's in the 14-day. That's still out of the money. We don't need to do anything with that. And if we want to keep
I would actually rather close this. Hold on, I'm closing the call and go to, I would add another short put.
Sure.
Just chip away.
Take a dollar credit, sure.
Yeah, I mean, if we wanted to kind of split the difference and make it so it's one lot.
Oh, yeah.
I could go to the 15.5. I'm totally comfortable with that. So I'm going to close
like we have a little.
Yeah, then it's like we have the 15.25.
Sure, send it. Taking it $1.23.
Yeah. So they had earnings, and wasn't Mr. Knight?
I don't want to put any shade on Tim.
No, I'm not putting shade. But didn't you tell me yesterday he was the Super Bowl in Rivian?
No, I've heard him at least 2 times think that the Rivian chart looked bullish. But
I mean, I don't look at charts. I don't do any of that stuff. I do love Tim Knight, but I'm bullish. Like,
I have a bullish position.
I'm not charting anything. I'm not doing anything. I'm bullish in my account.
And you know what? It doesn't, if he says, oh, this chart looks bullish, it doesn't mean on earnings. He doesn't know what earnings is going to do. So maybe it still is. I don't know. I'll be curious to see what he says. If it still looks bullish, if it doesn't now with this move, this isn't that big of a move. 5%.
You know what's shame on me? I've been bullish Rivian for a very long time, just because I have it in my account, and my son has it in his account too. But I'm long stock. I think I told you that yesterday. I'm just long stock, and I didn't want to sell anything against it. I didn't add anything to it. So I was just like, whatever Rivian does.
Yeah, I don't think
that's bad option trading 101, but I did it. That's what I did yesterday.
It's fine. And that's why I want to move some of those positions to like my Oklo. You know, I just have stock and I just want to move it to another account.
Oh yeah. Move it. Get it the heck out of the way.
Like I talked to my brother and I said, well, you know, what do you want to do? If you know, with long SMR or long Oklo or long this, I said, you know, what price point do you want to sell it? And he said, and again, he's not a trader. He said, I don't just like, I just want to hold it. Like he doesn't have an out.
Well, I mean, I think that's an investor, not a trader. And I think it behooves a lot of people. I mean, I'm only going to Microsoft because this is a common term that is used in the industry and it had been used a long time ago. They called them the Microsoft millionaires. Do you remember how many people, this is years and years and years and years and years ago, where people just bought Microsoft and held it and it created generational wealth.
Right. And so it's funny because when Logan turned 18 and I started his account with him, I kind of thought, oh, we're just going to buy all these stocks and leave it. And when he's 30 years old, who knows what these are going to be worth. But everything we bought when he was 18 is not even in his account anymore.
Well, because he's turning into a trader.
Yeah.
Right. Versus, and I mean, we talk about my brother's account all the time too. My brother's account is identical to what my dad gave him, minus adding a bunch of crypto. Right? So he kept the stocks that my dad had, your Caterpillars, your things like that. And then he loaded the Flotola on anything crypto.
Right.
Which is, did you see IBIT today?
Yeah, crypto is up today. It's a good crypto day.
I bet up 2.5. Look at this. This is how sad I am about this move. I mean how my position is relative to this move. If we could just get little IBIT back up to like right about here.
Yeah, I know. We'll see.
Come on.
At some point, crypto will get another boost.
I think so too.
I don't know. People haven't been interested lately.
Well, there's so much other stuff going on, right? So now, and it was great when I had Shelly on because she was explaining this to me. Crypto changed when they allowed it to go into the big institutions and they could hold them in IRAs and things like that, where you've got your IBITs, your ETHs, because now it's just an asset. So when things rise, they rise together. And when they have to get rid of them, get rid of assets, they unload crypto too. And because it's got a higher implied volatility, because notoriously it had, when it falls faster. When it rises faster.
Well, hopefully it starts rising faster.
So she was a wealth of info. That was when the volatility was so high, but a lot of the volatility has come out of the Bitcoin products.
Right.
So like right now, Bitcoin's got a negative rank. Remember before when everything was up, it had a high volatility. Now it doesn't.
If you go to IBIT and look at the trade page, I'm just curious what the implied volatility is. Not the rank. So 40. Yeah, 43. I mean, it's nothing like it used to be.
Nothing like the heyday.
As far as our positions go, if I glance at those, and I look for anything.
I mean, these are outliers. I know they're different positions. This is a Bob on Fire position that we took in a small credit for, which is why it looks like it's 3,000. We're just entering back into the profit zone. So I'm going to guess same thing with DraftKings. DraftKings. Oh, what do we got here?
Just a combo.
Combo with a short call on it.
No, it's just a combo.
Just a combo.
We sold that put to make a little extra money, and we could sell another put. That put's expiring today. Let's buy it back because it's 17 cents away from being in the money, and we'll sell another put. Just go out to the 15-day.
Can I go 7-day?
Yeah, sure.
I'm just going to stick to the same. We don't need to roll to that, but we're going to collect an additional $1. Yeah. Okay.
DraftKings, they have earnings next week. I hope that has a good earnings.
Oh, your lips to God's ears. Right. It's crazy. Okay. Now I don't know that anything else needs to be.
I want to see if there's any way we could roll our Delta Buster. In SPY, SPY. We have a Delta Buster. I mean, we were at 17 days ago, we were at like after the big rally. And we put that on with our short call again, pretty far away. We are through it, but that's a $5 wide call spread and it's only trading 360. So I didn't know that put spread is, 18 cents.
The put spread's a moot point right now.
So I didn't know if we could roll that call spread at all. And then, so how I will manage some of these Delta Busters is like roll the call spread.
When you say roll, you're going to be changing it completely.
Yeah, let's just see if you can go at the money. See if you do like the 725, 730. So
it's $5 wide.
Yeah. Okay, so it's $1, and then you could easily go to the expected move and sell a $5 wide put spread for $1. It's the only management I can come up with these Delta Busters when it's running through it.
So
but then it's no longer a bearish trade, or
this would for sure still be a bearish trade if you go to the expect. If I put this in as a simple, hold on, I'm just going to put it in without closing the one, right? So let's look at it like that. This is 100% a bearish trade.
Wait, you're buying that?
Oh, sorry, I got to go backwards with it. 290, and then you're going to get. You go down here. It's a bearish trade, absolutely.
Because your call spread's right there and your put spread's far down. Mm-hmm. So that's it. This would be going on for even, but we have no credit collected. Like we put the trade on for even. So
yeah, but a non-loss is still a scratch is not a loss.
Oh, I know. Yeah. So this is just one of the ways, or one of the ways you could.
So I'm just laughing because you and I have said this multiple times. There's a reason we like the Jade Lizard. I'm done losing to the upside. And every time we think we need to put a bearish trade in, I feel like this is our struggle all the time with Delta Busters.
So I will never on the way down, never on the way down am I adding delta busters trying to add short delta. Never on the way down anymore am I trying to add short delta. If I want to protect myself to the downside, you protect yourself to the downside when the market's at all-time highs. You don't protect yourself to the downside on the way down. Unless you're doing downside ratio spreads where you're still taking risk. These delta busters, every delta buster that's ever been added when the market's falling, it has blown through the calls. Now, we put this on, go to the chart. We put this on 17 days ago. So 17 days ago, that was the 15th or something, 15th of April.
Right here.
Yes. So we had rallied back, all-time highs. That's when we put the delta buster on. So it wasn't like a usual delta buster where how do you get short when the market's already down? No, the market had rallied back and it was all-time highs when we put that on.
But I swear, it's just, it is what it is. Sometimes they work, sometimes they don't. But in my mind, every time we try to put on a delta buster, and I think what I struggle with is we never have credit to work with. So when you're trying to manage something where you don't have the credit to work with, we just went through that struggle. Yeah. It's trickier, right? So I kind of agree with you. I think there's ways to get short that are different than this.
Well, no, I think the ways to get short different than this, you're taking risk to the downside. You're taking risk to one side.
No, I would say, I remember TP on the show one time. Hedge is a 4-letter word. I would rather lighten up some of my bullish positions. Yes, that's the way that I'm going to try to look at things. I'm going to lighten up my positions instead of adding something that will win in addition to.
Now we added that VX, same time we added that VXX Zebra, and that came off. That came off for a very small win. Just we needed one little day with a boost in vol.
Let's take a look at where volatility is. Speaking of, and I will roll those too. VIX is in the 16 handle.
Yeah,
that's crazy.
I know.
Okay, so I'll go back to our position. We are going to.
I don't know. Again, it's quite a bit through the call spread. I hate to let that 369 turn to $5.
Well, that's what I'm saying. Like, do we just want to close this and put on something else? So I kind of think if we're going to, it's still got a 34 rank. Let's close this and we'll just look at SPY. We'll look at SPY with a fresh set of eyes. Because the entire market measures recap is why we're using SPY for all of our research. That's what the market measures recap is. So let's do that. Let's do the market measures recap. Then we'll come back in and take a look at SPY.
If we're going to just close it and take the loss, I'd rather leave it on for we only have an extra $130 to lose. I hate to lock in a $370 loss.
Oh, I was going to say, if we're rolling it out in time, just close this and don't worry about putting them in together. If we're going to put something in SPY, I like a bearish trade in there, but a bearish trade where we're selling premium instead of the Delta Buster is saying, it's more like I'm playing for that put spread because that put spread would have been closer to the at the monies, right? And we're financing it with the call spread. So we could do a bearish trade where we're selling the call that's closer and buying and selling a put spread that's down farther.
Yeah, or we could just do we could throw in like a reverse big lizard.
Or Jenny, like to your point, I don't mind leaving it. This is very defined risk. The rest of our account is bullish, so now we've got a bearish trade in there.
We've got that and SMH. That's another Delta Buster. And SMH is something that's been on a crazy tear. Crazy tear. We have 638 in credit.
This probably can be rolled, and we did roll it out. We rolled it already.
And maybe we roll it again. So we have 638 in credit. And let's go to June. So, I think we just close that and go to June with like a reverse big lizard or something. The whole thing. The whole thing.
I do think we close the whole thing. I agree with you, but this is one of those where it's a different situation because we rolled up our put. We rolled up our put spread so we could take in so much credit. And here, it's not through anything. I still think we start with a fresh set of eyes. But here, you're going to take in a decent credit by rolling it. Whoa, hold on. No, it's not a decent credit, but you can at least in the middle of the spread, you can give yourself more duration, but I think we close it too. It's got a 60.
Yeah, that's true. You give yourself more duration. So we could just move it out in time, but.
Yeah, because we rolled up our put spread, I thought.
So this was never this wasn't a Delta Buster. This was a reverse Jade Lizard. Started as a reverse Jade Lizard. So we could close the whole thing, put on the new. We could keep like a reverse Jade Lizard going.
So unlike, and I'm sorry if I know they're two different things.
Yeah, they're two different trades.
But when you look at SPY, to Jenny and to your point, when you brought it up, we only have $130 left to lose. That is not the case here because we have $6 in credit with a $25 wide call spread.
Well, right here at 508, we're it's $150 loss, not an $800 loss.
No, I know, but that's what I'm saying. But it could be you've got a $25 wide spread versus down here we have $100 left to lose. So in SMH, there's a lot more to lose.
Right. And honestly, with these longer term trades, with the 45-day trades, I have been managing them at 21 days. And in my SPX, I am doing that with my long-term iron condors. I am closing them at 21 days.
Jenny, close your eyes. Take the mind eraser shot. Take the mind eraser, cement mixer, whatever you want to call it. I'm closing it. And we're going to do something else in June.
Yeah. So
I'll pay 75. See if we can get filled. Now Smash doesn't get filled a lot. We've had this problem.
I'd let it work.
Okay, so we'll let that work.
It's just crazy that this is an ETF. If you look at the chart, like this is an ETF, not behaving like an ETF. This looks like what was the retail ETF?
Look at this. Look at SPY. That's an ETF.
Yeah, that's true.
And so the problem is the same components that are moving SPY are moving SMH.
But go back to SMH. This almost looks like XRT during the GameStop.
XRT was way worse than
XRT during the GameStop meme.
Yeah. Yeah.
Yeah. Yeah.
But I mean, I think all of the ETFs are kind of behaving like that. Look at triple Qs. Straight up. Like you could cover this up and think it's a smash chart.
I mean, it's kind of a weird market, and I don't really know. I get the ride the wave, but
if you haven't been riding this wave, you're in a world of hurt.
But at what point do you scale back and say, like, I'm just gonna sit back for a little bit and wait. I'm gonna forego the rest of the wave and sit back and wait a little bit.
Well, that was kind of my point. Instead of adding these kind of things on that can hurt me, because they hurt my heart more than they hurt my P&L, because everything else is bullish. They hurt my heart more than they hurt my P&L. I would rather take some of my NVIDIA off, or some of my, I'm gonna start scaling back, because then I've got powder dry for if I do want to get back in. Or even Intel, like when do you call uncle in Intel, right? So that's the thing. That's what I want to try to do, is start scaling back instead of adding.
Well, that's why if you're bullish in these things that have had huge runs, that's why I'll take them off and switch it to a bob on fire, because you're giving yourself way more room to the downside to get back in on a pullback.
I agree.
So
okay, we're letting that smash work. I'm actually going to go to Twitter.
Yeah, go to Twitter, because it's already 10:36.
Oh.
Wait, really going to miss my little Sadie as I head to the Midwest tomorrow. So Sadie's still with Frank. She's just not with him heading to the Midwest. You scared her for a minute, Frank. You scared her for a minute.
You scared me half to death, Frank. So cute. Okay, well, Sadie, we love the pictures of her. And then Florida 7, not to be disagreeable, but SPX trades on Monday and Tuesday do not have 5 days available. Oh, thank you, Florida 7. Also, 72 can be messed up on holiday weeks, not allowing 7 days to expiry trades. Agreed?
Yeah. Every time we said, like, there's always going to be a 5 day, there's always going to be a 5 day. In my mind, I thought, is that true? So, yeah.
I guess the weekends. You're right. We didn't take into account the weekends. We didn't. But I kind of like putting it on. So, Florida 7, I'm glad you brought this up. I kind of like the one that we have on now that's going to get 2 days of decay.
Yeah, right. We'll see. That might be coming off on Monday. All right, Mikey. That could be coming off at 2:55 today.
And we should actually, springboarding off this, ask Jacob what days of the week are the best to do the 5 days on Florida 7's comments, because it makes sense. Maybe we don't do them on, Mondays and Tuesdays because
you've got the weekend risk.
No, I think you do it with the weekend risk. I think that decay is juicy. But I don't know. We'll see what the results say.
All right, Mikey, TGIF again, ladies. So there must be an earlier post. MCL position expiring today. Look at this. Oh, Mikey.
He is in great shape here.
Yeah. Okay, so Liz, you do that voodoo that you do so well. Bonus points if my Polish princess can name the movie. You do that voodoo that you do so well. Mikey, I have no idea.
I'm not going to lie to you. I know it. I know the song, but I don't know the movie, and it's embarrassing.
Is that a song?
That you do so well. Yes, it's a song.
How does it go?
The voodoo that you do so well. Go, somebody tell me what song that is. I'm actually going to Google. You know what? Hold on. I have the internet. What song is the voodoo? I can type.
This is good. This is wonderful, wonderful, wonderful television.
I have the internet, and we can all watch it. Written by Cole Porter, the movie that you just saw. Yep.
But what movie is it from?
Movie. Hold on, watch this. Blazing Saddles.
No way would we. We're not the old Tom and Tony show. That was like they would talk about that movie all the time.
That's funny.
We're too young for Blazing Saddles.
Don't you like that I have the internet live? It was so fun. Thank you, Mikey, and I wish you all the luck that it's going to end at either 103 or 106. That's what you're getting a double.
103 or anywhere above 106. I'm going 103.
I'm going 103 too. Okay, TGIF ladies, Mimi decided to take, you're killing me, Smalls. Mimi decided to take the 50% win overnight on the short Ford, since she can now afford 2 mind erasers over the weekend. Let's take a look at our Ford in honor of Mimi. It's so funny. Okay, so
it's down.
It's down today.
See, it must have been up earlier today. So you see we have those puts, and if you look, it might have been up.
Oh, it was up earlier today.
Yeah. 12:07.
12:07.
Yeah, I guess.
Yeah, I mean, it's up. But thank you very much, Mikey. He's so funny.
If I weren't wearing sweatpants, I'd go get my Ford picture off my wall for everybody.
You're not wearing pants?
Oh, sweatpants. If I weren't wearing sweatpants.
Oh, I was like, I don't think you should say that out loud.
If I weren't wearing sweatpants, I'd go get my Ford picture.
So Monday, you gotta make sure your pants are on, or just get the picture before it starts.
Yeah.
Take a look at this. Tasty Live, our very own Tasty Live show, posted our zebra in TLT.
Yeah, it's TLT is not moving too much today. It's up a little bit.
Do you want to, in honor of Tasty Live, let's assess the situation. TLT, we're up $37 today on it.
And TLT is up 37 cents, performing just like a zebra should.
Performing chef's kiss, as Vanetta would say. But TLT isn't a fast mover, right?
Well, it depends.
I mean, so you take a look at this. If I was going to say this whole chart is only from 85 to 90, I would say, right? 80 to 90s right here. So you've got 85 to 90 in this range. And so it looks like it's a wilder ride than it is.
Yeah, I mean, TLT has seemed to have, who knows where it's going, but seems to have been in this 85 to 90 range. That doesn't mean it's going to stay in the 85 to 90 range, but figure down at this 85 level, we'll get long it again.
No, but I do. I like getting long at a lower range. So that's where we're at right now. We appreciate them posting it. And you retweeted it, didn't you?
Yes, I reposted it. And coming in from the amazing Fazia, on board with your 2-day, 5-day, 10-day Jade Lizards and SPX. Good showing thus far. Thanks for the research. So yeah, thanks to Jacob for doing that research, because it was a lot of research.
And what are we doing next week with him? Do you remember?
We
letting him go.
About if you let him go, I have a feeling it's not going to perform as well, because a lot of them will be through the call spreads.
I bet you're right. So that's what's on deck for next week. We'll see how it goes with that. I'm going to go top down again, make sure we got to everybody, and then we're going to get to our market measures recap. Yeah, we did. So you keep an eye on Twitter. Let me know if anybody else comes in.
So Frank's just leaving Arizona now to head back to the Midwest.
Wow.
Really enjoyed that winter down there, Frank.
Yeah, but he's probably pretty smart, because it's not exactly warm here yet.
Yeah, that's true. No, look, hence the turtleneck.
Jenny and I were talking about this today. We're both going to a party after Annabelle's play, and it may or may not be outside. The wardrobes for girls in the outside, it's tricky.
It may or may not be outside. The invitation says there's a tent outside, but I promise you the tent is heated. So it's a tent with walls and a heater. How hot can that get when it's going to be 43 degrees when the party starts?
Well, and you guys are going to love this conversation. This is perfect for TV, but there's no floor. So that will keep it cold. Like, it will keep your feet cold in the grass.
I know. I'm going to come in my moon boots.
Ooh. Yeah, we have our friend's 50th birthday party tonight after the play. Okay, it is 10:43. I'm going to go to this. We kind of edited it down. This Kai puts it together with us, for us, the week's market measures in recap. We appreciate it. We picked just the third one, why SPY dominates our research. And I know you didn't read it, Jenny. So I'm going to let you see if you can see into the takeaways.
Why SPY dominates our research.
Yeah, give me what you think the takeaways are.
most liquid, most active, tightest markets, strikes, unlimited strikes. I don't know.
Did you ever watch the Johnny Carson show when you were little?
Yeah.
Do you remember that segment where I'm folding up papers as I do this? He'd have the question in the thing, and he'd have to go like this and give you the answer.
Yes.
I think we should. I think we should play that because that would have been fun. But you're right. In this, I think that you are spot on accurate. I'm going to go with the most liquid.
Most liquid, strikes, data. I don't know.
Good. All right.
The Mac Daddy of the ETFs.
That's if the takeaways are it's the Mac Daddy of liquid. You're getting a gold star.
All right. In most of the research we do, we usually use SPY to display different trends, behavior, relationships, and correlation among trades and strategies.
That's why in today's segment, we will explore the reasons behind our frequent use of SPY in the majority of our research. And I will tell you, I know why the research team puts these pieces together, because Jenny and I also, we get emails, we hear from the viewers, and you'll get a lot of the times being like, hey, can you do this in?
Oh,
Apple?
yeah.
Can you, does this work in NVIDIA, right? So you'll get people ask individual questions. And in my heart of hearts, I think the answer is, if it's a liquid product, it's pretty much going to be, a transfer. But this is a basket of stocks. So keep that in mind. SPY is a basket of stocks. It's not an individual stock. So it also takes away a little bit of the event risk.
Well, you would think, but not with the move we've had in the last month.
Well, I'm very curious because this SPY is not, it's not equal weighted. I think I said SRO, whatever that symbol is. The equal weighted SPY. This is not equal weighted. There's some big heavy hitters in here. And those heavy hitters are across the board in SMH and in triple Qs.
Yes. So like you said, a handful of stocks moving these.
Yeah, handful of stocks.
So like my in-laws who have like Clorox and Campbell soup, and they're like, why isn't my account going up when the market's going up like crazy? Well, let me tell you.
You have Clorox and Campbell soup. I didn't put NVIDIA in there. Right.
All right. Even when you consider data for last decade, SPY has the highest daily volumes on average over time, which shows that it is the most traded product on the market by a lot.
By a wide margin. And you know what they did here, which I liked? They eliminated my one takeaway, that it's a basket, because these are all big. These are all big.
That XLF is the next highest?
What?
The financials?
I haven't looked at that in years. We're gonna, Jenny, pause this study.
Right? XLF, the financials. Well, you typed in too fast for me to read it, but I'm pretty
it is the financials. You know it's the financials.
Well, I just wanted to see exactly what it was called.
Financials select sector spider ETF.
Yep. All right. I just want to see the exact name.
So these are all the spiders. I would just like to state that for the record. So the spider SPDR, that was back in the day when these first were created. That was in the super pit. They put all the spiders together, and that was kind of a newer concept. So we
were there when these were created.
Oh yeah, I was in the pit. Yeah. I was in the spider pit. I was so confused why they called it spider, but XLF was in there.
Okay, so take a look. 15 million shares. So this was number 2. 15 million shares have traded in XLF today. And how many have traded in SPY so far today?
I think we might have. I think I would like to put an XLF trade on.
Whoa. XLF is beating SPY today.
I mean, I'm shocked by those results.
And let's see the chart of XLF. See, it doesn't look like the SPY chart. Hey, strangles in XLF, Liz. Who wants a strangle in XLF?
Oh my God, no, it was XRT that we were going to hand out strangles in, but still. Now the problem here is when you open it up, there's not a lot of premium. I'm all the way out.
Calendars in XLF. Who wants a calendar in XLF?
But you could do something in here because it's not a lot of buying power either.
No, there's... for 48 days, 99 cents, no thank you. Just
146.
No thanks.
I think that's why we don't trade it that often, right? So just because, I mean, people, and to be honest, well, so the volume is coming from the stock.
Take a look at a Bob on Fire. Go out to Jan. Go out to March. He is out in March now. Go out to March 19th.
Oh, March 19th. Okay. Bob on Fire. Buy 153, sell 1...
It's 57.
Yeah, 57.
And then sell 2 puts for $1. The 43s. So we'd have to get long XLF at 43, or we could make
43 last time I was there. It was April 1st last year. It's not bad.
not bad. Only uses $1,000.
We were using $1,000 to make 143 in 34 days, and you didn't like it.
No, I mean, I'm not going to do it, but when you're there, it's so tough. It's weird. XLF, why are they using SPY instead of XLF, even though XLF is beating SPY in volume today? Because there's nothing in these options.
I think we just proved it live on air. But that was that was crazy that's number 2. And actually it was beating it today.
I know. Huh. Really? Like, who's trading it and what the heck?
Now, if I would have seen this, I never would have said XLF. I would have said it went SPYs and Qs would have been neck and neck coming out of the turn is what my guess would have been.
I mean, what's out the volume in XLF? Is it just like people's retirement, like 401ks buying it in people's account? Like, who's buying the XLF?
So they're the financials, right? So I don't know. Maybe they have to have you're right. So maybe portions of these things have to have a portion of financials in there.
Yeah.
I don't know.
Shocked by the volume.
Shock and awe. Hold on, I can't get it to, there we go. Now here's the takeaways. Let's see if it says max daddy of liquidity. When we research, we need to satisfy the following requirements for fair study.
Plentiful and reliable data.
And that is coming through in spades with SPY. An underlying that is reflective of a broad selection of underlyings in actual trading activity.
And we, everything is pretty actively, heavily traded. Are we out of SMH?
We're out of SMH. So we'll
we'll put on a new one. We'll have 5 minutes. Okay. An underlying that has a moderately low risk profile to make a conservative best case scenario.
Yeah, that's good. And SPY has ample liquidity, lots of included stocks, and a low risk profile, enabling it to be the perfect underlying to base our studies. And keep in mind, guys, they have to pick something. And I actually think that SPY is the perfect thing to pick for all those research studies.
Sure. I hesitate to that low risk profile. I don't want for people to think that.
I read that as low risk, that the numbers are off because it's such a tight liquid market. I don't think SPY is low risk
profile. SPY has ample liquidity, lots of included stocks, and a low risk profile.
I don't think that to be true of the SPY.
That's what I'm not sure, like what they're saying about low risk. Like, I don't think, I wouldn't just go out and start slinging puts in SPY and think that's low risk.
No, because it's not low risk. I agree with you. All right, let's take a look at our smash. Okay, we looked at XLF and we'll clear that out. SMH, he gone. So we got, it's still there. It's still saying we got 638 in credit. Now let's go to June. And I think we should do you want to, only because it's on my brain. Let's sell instead of buy. Let's do a $5 by a $10. So it's still bearish. Or we can do $5 by $15.
Yeah, I don't care. You're in charge today.
So this is still bearish, right? So take a look at this. It's got a negative delta. I just added the put.
But that's what we had. That's what we had. A jade lizard, a reverse jade lizard. Like, this is a reverse jade lizard. $5 weight put spread. Like that.
It wasn't. I was thinking it was a delta buster. It wasn't a delta buster.
No, it was a reverse jade lizard. That's what we had.
So we did have a lot of we did have a lot of credit to play with then.
Yeah, we had almost $7 in credit.
So,
but we just paid $13 to buy it back.
No, I know, but we can't mind eraser shot, right? So
I would just I don't mind the reverse jade lizard. Throw it back in.
Okay, so but I'm not going to go $25 wide. I'm going to go $15 wide. Less risk. Okay, so I've got 45.60, so that's the bearish portion of it, and then I'm going to do a $5 wide on the bottom. And because I've got 412, I'm going to do the 60.55. So we're getting 514.
Sure.
Right. So it's just reestablishing of it. We passed the 21-day mark. If it was a delta buster, that's got a different rule parameter. But you're right. This was a reverse jade lizard that we rolled those puts all the way up.
And we rolled the puts up. That's why we had 6 something in credit, because we rolled the puts up.
And that filled immediately.
SMH. Huh. Well, that's it. We are just about out of time. Maybe, I don't know. I was going to say, I'm not sure. Did we get to everybody in Twitter? I can take a look.
Take a look and I'll go to it. I have to sneeze. Excuse me.
Hold on. Slow internet. Moving
I'm just going to start to make sure there's nothing we need to do through the weekend. We took off our Amazon. I'm going to get rid of the closed orders, so those are all gone.
Yeah, and we got to everybody in Twitter.
It's good. Anything else we need to manage real quick? OKTA. I'm not going to close it, but I just wanted to look at it.
Wait, that's another one of Dan Pazzarelli's, picks of the.
Yeah, and it's up today, so I'm not going to close it for 11% because I think we could put a GTC in for better than that. What would you say the GTC?
50%.
Perfect. We'll put it in. So that's holding $1,000 in buying power, but that's got a decent. It's $1,000 in buying power for a decent credit.
It's funny, Intel. Like I know Intel's up $5 today, but that trade was up almost $700. It was up like $660, and so Intel has. We changed our trade. I was thinking this was our old Bob on Fire.
No, this is a buffer.
Oh yeah. Then let's take that $377 out of the buffer.
Yeah, we should put something else on. Do we have time, or should that be our first trade?
No, we're out of time. Let's just take that off because that's a short-term trade.
And all you have left to make out of the buffer is $1.26.
Mm-hmm. Yeah.
Yeah, we did a short.
All right, that's it, Liz. We are out of time.
All right, everybody, have a wonderful weekend. I will see Jenny tonight at a 50th birthday party. But everybody, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you all on Monday. Have a great weekend.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
game. I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing. This body totally bussin'.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Jamal. This is Options Trading Concepts Live on a fantastically green Friday. Everything is up. Nothing matters. Send it to the moon. What say you, Jamal?
We're never going down again, Mikey. That's what's going on.
No. I just did an options math check. Paul Jones was saying we're getting a 35% correction. And I was like, I'm not sure how. But yeah, vol futures. The VIX is in the 16 handle now, which tells you everything you need to know. Vol futures are in full contango all the way through the V contract. And Apple is up 5%. Even Microsoft is up 2%.
I haven't looked at that curve. I'm actually shocked to know that those are in the 20s.
Yeah. They're still elevated, but I mean, if the VIX goes from 16 to 15 to 14, like these will go into the teens for sure. But I think they're elevated just because crude is still elevated, which is still a potential catalyst. If crude really rips higher, I think the markets would have a little bit of a correction, but 35%, I don't really see it, all things considered. Apple had a nice earnings trade. That little calendar spread came in nicely and closed it for $100 winner, I believe.
Nice.
So that was fun, and that's all I've done today.
Yeah, I certainly could have left on my diagonal in Apple. I just felt like I was possibly being too greedy with some of the trades that I've had on recently. I closed it ahead of time. I was trying to be prudent.
I mean, I can't blame you. You can't like the market. Like what? There's nothing to say. Look at this. What? How do you not take off profitable trades into a move?
I know. I mean, you know, I'm trying to be diligent.
Like, where are we going? But there is the age old trick. One of my favorite tricks of all time is, you know, you see a chart like this. All you have to do is this. Just bring that down a little bit. And now all of a sudden, 8,000 doesn't seem too far off, you know? Same with the NASDAQ. You can do this, just bring that down a little bit. 30,000 is now in sight. But yeah, I mean, all kidding aside, it's been an absolutely insane rally. But like we said, these tech stocks, like the Mag 7 earnings, all of them were pretty good. Like Microsoft and Meta were the only two that sold off. Meta is still in the dumps, which I think is a bad sign if you're bullish, considering the rest of the market is just going straight up. But at least Microsoft has recovered from the lows of the sell-off here, almost back to pre-earnings levels at like 425-ish. So, yeah.
Heck yeah. Put the new Super Bowl on yesterday. Heck yeah. We loving it.
Love to see it. And then, yeah, Qualcomm just slightly down, but we did have WDC rallying from the lows. This also opened at like 400-ish. It is ripping higher. What was the other one? SanDisk. Net up now on the day. Also closed or opened lower. So yeah, everything is just straight up.
I put a tweet out this morning and I was like, what time do we think SanDisk and WDC are going to be positive? it was like literally 16 minutes later, they were both positive at one point in time. I love it. They just had the look of it. And we've seen that throughout the week. I mean, look, Qualcomm didn't open up $25. It actually opened up, I think, slightly positive and then just eventually kind of took off. And we've seen this like buying as the day has gone on in a lot of these names. You've seen that a little bit with Apple today. Again, with Apple, I had the June 270, May 285 diagonal. And I bought it for 680, you know, like a couple of weeks ago. And I took it off yesterday for $10 and change. So $320 winner. I was trying to be prudent and I'm still fine. I'm glad with it. I mean, again, I missed out on an additional, I think $400 something and change, $455, but that's cool. Like I can live with that because I got other things that I'm managing, and that's just kind of how you got to trade this market, I feel.
Yep. And yeah, I mean, if it's a winning trade, like the market's been so strong, it's hard to imagine it just keep going higher. But that's what we're seeing. So we gotta believe what the market is telling us. Crude oil down $4 now, selling off quite a bit.
Thank God. That's been the best thing to happen today. Oh my God. You know what I mean? Like, because I got this short 98-100 call spread of this iron condor. And again, this thing, it's in May and expires. I would rather be able to close that out before I have to deal with any expiration situation.
Yeah. But yeah, Apple, the calendar spread that I had, I closed it right on the open. I don't believe I posted it, so I'm sorry about that. I see a question in here. But like any calendar spread, you just have to close it. If it's right at the money and the stock's ripping through the strikes, like you have to close it. Otherwise, it can turn into a loser. I don't think this one is a loser yet. It might be a slight loser now because this thing has just been ripping through. Yeah, it's like a 20, 30 cent loser. But yeah, basically with an in the money spread now, you'd have to roll this 0 day to the 3 day and try and get a sell off towards 270 if you still have it on. Otherwise, you can just close the package for 20, 30 cent loser if you haven't closed it already. But I closed it immediately on the open and then jumped on a meeting. But yeah, everything else ripping higher. SPX, yesterday I did last call with Nick and I moved this butterfly from the, I still have the 6,900, 6,800 long put spread, but I moved in this 50 point wide put spread and I moved it into a 25 point wide put spread. And I did that for $1.80. So just creating more and more bearish delta with one contract. So initially started with a 100-point butterfly, moved it up for $5, moved it up again for $1.85. But now if there's a sell-off in SPX, this single butterfly will hedge this entire portfolio, because now the value of an in-the-money butterfly to the downside below 6,800 or 6,775 is 7.5K. And that would, again, hedge any of these positions that I have on, because I've also been taking off risk and some winners into this rally. So I feel good about the position we're in now.
Nice. Yeah, it's probably one thing I could look to do is maybe add a butterfly. I haven't done that.
There you go.
As of now, I have no downside stuff on. Pretty much all of them are gone.
Yep. And yeah, a new butterfly right now. Let's just see if you were to like go to the expected move. 70.50, 69.50, 68.50. It's trading for $500 less. 425 if you went to June. If you go to May, it's going to be a little more expensive. But yeah, I think it makes a lot of sense to throw something on like that, especially if you don't have a downside hedge on into this insane rally.
200 points from here?
Mm-hmm. It's possible.
It's possible.
Feels impossible, but certainly possible.
What would we need to hear?
I don't know. That's what I'm saying. It's like we've already priced in the war risk. We rallied from that low. Like what could be the catalyst to bring us down 600-700 points?
Oh, geez. It doesn't. I mean, the only one. You know what? I do feel in my time of trading, usually the catalyst that you think it's going to be is not the main one. You still need like a wall of worry. And I would say one of the bricks in the wall of worry right now is inflation. Doesn't seem to be a big deal right now, but at some point it'll become a big deal. It will. I just don't know when. I don't know if it's June. I don't know if it's July or August. I don't know, but at some point it will. I feel like that's the only wall in the brick of worry right now. I mean, I don't think the war is even a brick in the wall of worry anymore.
Yeah. But I think at the same time, like if inflation is the worry, I think the market just rips higher. Like if inflation is here, then equity prices, I think, will just continue to rise to account for inflation. So we shall see. We shall see. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to tastylive. You can see this video front and center and throw in your trade ideas and questions along the right-hand side chat. But yeah.
You've done, what'd you say you did? What today?
I just closed that Apple position. Yeah. And that was it.
Okay. I did 3 things. I had to roll up the year-long strangle. It was basically short delta. So I had to roll that up 1,000 points, a little more than 1,000 points on both strikes. That was probably the bigger trade today. And geez, I think, yeah, that was probably the biggest thing that I had to do the day. I also had to roll my EWY strangles. As you can see, the stress in my face. It's annoying. That stuff just keeps going higher. It's actually not that much of annoying. I've benefited on other long delta stuff. This is obviously going higher because it's Korea, and Korea has a strong there's a strong presence of chip names in Korea, and so that's one of the main reasons that market has been running higher. So I just went out to July on these. I didn't feel like staying in June, and I know I'm probably not necessarily helping myself, giving myself more time in those shorts, but I just decided I wanted to do that and collect more credit and hang on these for a while.
Yeah. I mean, that's all you can really do, right? If you have a product that's just moving aggressively in one direction, like all you can do is just delta adjust, roll up and out, pick up more credit. And then if it comes back down, at the very least, you've got a short put that's in the money now as opposed to a short call. Short put in the money is it's a lot easier to mentally manage, I think, than a short call that's in the money. For sure.
Yep. And then Tesla, I had the 400 calendar, closed that one. I still got a couple of others, but
nice.
Again, it's just a Mag 7 play, really, more than anything.
Yeah. Tesla back at 400, huh?
Indeed.
Crazy. But yeah, join us on the YouTube channel. Let us know what you've got for trade ideas and questions. For next week, what do we have for earnings? Anything?
I did see some of that list earlier. Palantir is next week.
Mm-hmm. Oh yeah,
Palantir, AMD, Shopify, among others.
Yeah, AMD is going to be interesting. Oh, look at that chart. Huh. Oh, man. AMD is going to be wild because AMD is $350 now, and earnings represent a $33 implied move for next week. So that is a big implied move, all things considered. We'll definitely be trading it, and we'll see what happens here. But yeah, Palantir as well. Palantir has a $13 and change implied move on a $143 stock. Craziness. Absolutely crazy. But yeah, we will see. And I know later in May, we've got some of the consumer companies. You got Home Depot, you got Target, Walmart, maybe?
Yeah, I feel like
May,
it.
Yeah. Target, Walmart, Home Depot, Lowe's, all in that little pocket. So that'll be interesting to see, like, consumer spending, see if inflation readings kind of play into those numbers. But what a day. What a week, really. What a week it's been.
Yeah.
Yes, happy Friday. I'm going to pop over to the YouTube chat now, see what the people have for us.
The people.
Remember back in 26 when we used to sell calls? I don't. I'm done with that. I'm done with that. I've been done with that for years. Unless it's in like an ETF or SPY or something similar to that where you can manage it easily. Like, it's just hard with the equities that, especially that are just these equities that have been ripping higher. It's just really hard. It's really hard. Don't know what to trade now. Kind of got everything in. Not sure what to sell. Stock or puts or nothing. That's a great question. I mean, it is hard to find new trades in this environment where the market's just ripping higher. That's for sure. Especially like if you're trying to put on a bearish trade. That's why I really like those downside butterflies in SPX, because at the very least you have $500 of risk. That's expiration risk. You don't really have that. They don't have that real risk until you get closer to expiration. You can have a $100, $200 loser on a continued rally, but you have way more profit potential to the downside if it does reverse. But yeah, I'm there with you. I think finding a trade now is tough with everything or most things green. Unless you want to buy the US dollar. That could be a trade, because everything that I'm long in the TastyFX position is selling off aggressively.
Yeah, that's a good point. The dollar, I actually did a couple of long dollar trades in TastyFX today. But I mean, to that end, look, I think if that's how you feel as a trader, you feel like there's not any things that are screaming at you that you love right now, then chill out. Don't have put capital to work at the moment. There's going to be opportunities again in the market like this, for sure. I mean, if you know, we can obviously tell you the things that we got on, but maybe they don't suit you. Like, again, I'm still short GC. That's working. Luckily, once again, as GC bounces back, I'm still short SLV, although that trade might be coming to an end soon. If that thing goes below 30 IVR sometime next week, I'll probably close it out, I guess. Sounds so sad, but it is what it is. But I mean, there's you know, there's things that are I think at a point, I don't know if they're still available, but like Hood, GE are names that I'm short vol in. I think those names are kind of elevated. So there's a few things out there, but I mean, again, that's just me. That's how I'm feeling. That's what's working for me. USO is still one of those as far as selling vol. As far as directional, I don't know. I think it's hard to say to get long some of these Mag 7 names with markets up here, but those have been the ones that have, like, the few that didn't necessarily, like, I guess Google is the main one that went up on earnings. Amazon is still kind of on highs, but you got Meta, you got Microsoft, you got well, not Apple anymore. Tesla still kind of down, but again, those are starting to get a little long in the tooth to try to get long deltas in those. So just chill out, wait for the next opportunities if you want, because they're coming. They're definitely coming.
Yeah, I still really like Microsoft. I think it's if you look at their actual earnings report, it was all very strong. I think their Azure business was like up 140% year over year, something like that. So yeah, I think Meta's tougher because Meta has all these lawsuits and all these like other things that they're working through, which is similar to like UNH, right? Where UNH, kind of interesting to see it. It's a high for the year, but if you go back, can I zoom out? Maybe not. Should we go to a weekly chart? There you go. So yeah, weekly, it's been ripping higher, up 100 points, but same thing, like this is all lawsuit stuff, and now they're kind of getting out of it. Meta, you could see a similar thing, but this is still near highs. But I really still like Microsoft. Like this, do I believe Microsoft will be back above 500 eventually? Yeah. So we're playing for that with longer term positions, and especially since it's rallying from the lows from earnings, it is nice to see on the daily chart, you can see we got down here below 400 and it was immediately bought up yesterday and we're rallying higher today. So still like Microsoft a lot. I think if I were to choose one stock that's a Mag 7 name to be bullish in, it would be Microsoft, just because it has room to run. It's not at all-time highs, and you could see a rotation out of hardware chip stocks into software. It's definitely on the table.
Yeah. Microsoft being strong today, and CRM is up as well.
Yeah, it's another name. So yeah, still opportunities out there. You just gotta find them. I have 4 butterflies in XSP centered around 726. Cool. Whoa. Nice. Hopefully there's 0 days. But yeah, that's a nice trade. Similar to calendar spreads, like your max profit on a butterfly is when it's at your short strikes, ultimately. So if you have a nice profit on the table, maybe you consider managing it or closing it. But if you have more time and you're not seeing the profit just yet, still a nice move to your strikes.
Yeah, it is.
All right. Fighting AMD, tried to barricade myself in an iron bunker. Okay. Short June, 320 straddle. June 320 straddle. And a 6x10x4 broke wing butterfly. Would you invert the straddle to 350? If you have $61 in credit, you're actually not that bad. But yeah, if you have $61 in credit, you can go inverted here for sure. So you could buy back the 320, move it up to the 350, pick up another $12.50 in premium. You'd be at $7,300 in premium on a 30-point wide inversion. So let's just look at this. So your expiration risk here is this. So you'd be, well, even if you made that move, you'd still have another 30, 40 points to the upside before you break even at expiration on this straddle, and then same thing to the downside. So yeah, I don't mind it. It's nice that you've collected this much already. It gives you the flexibility to have a 30-point wide inversion if you want to hedge delta in that manner.
AMD, I mean, I want to do the 400 calendar spread. Talk me out of it. Why shouldn't I do it?
I can't tell you a reason. I just don't. I really don't. I don't know. I mean,
good.
If there's ever a chart you want to short, I mean, wouldn't it be looking like something like this?
No.
Crazy.
And all those names have done nothing but go up on earnings. Texan, obviously, you know the crew.
Yeah.
I might do one today. Just write it into earnings. What day is earnings?
May 5th.
The 5th.
Yeah. Yep. But yeah, you could also see, because implied volatility is so high and AMD's already rallied so much, you could see a situation where they have good numbers to expected, maybe a little better, and it just chops. Doesn't really rally anymore, which would be good for that straddle adjustment and would be good for a calendar spread too. So yeah, I think the velocity of risk is certainly to the downside in AMD. Let's see if it's priced that way. 325 and 385. Nope. Velocity of risk is priced to the upside if you look equidistant. So yeah, I don't know. I think you could see a decent sell-off in here if they don't crush it. But I think they're going to post good numbers. It's just a matter of whether the market likes it a lot or not. Thoughts on long Adobe trades? Have you traded this at all recently?
No, I haven't had a trade in here in a while.
Yeah, I haven't traded this for like a year, I don't think. April of last year. Getting long Adobe. So you're definitely getting a vol spike in the 42-day. You can see these 42% IVs jump to 52-ish. So the earnings announcement is going to be in this 42-day. So I think if you're getting bullish on Adobe, maybe you do a diagonal or calendar spread up here, keep it defined risk. I like selling the week before with the ability to roll into earnings cycle so that you have more outs. But yeah, you can get into like a cheap calendar spread, long June 18th, short June 5th for $4. This 35-day is going to lose all of its extrinsic value prior to earnings, and this June 18th will not. So that's how you kind of, even though the expirations are close to each other, you have this binary event that's you're straddling in between. So it offsets your lack of time between your long and the short, because you know that your long is going to hold on to a ton of extrinsic value and your short's going to go to zero, all else equal. So I kind of like these kind of setups. What say you?
Yeah, I kind of like that. I mean, I get it. The stock is at 7-year lows, and it's an interesting play, I would say. I mean, I've kept most of my software exposure in the CRM, Microsoft, and Palantir sort of tranche, but I understand it. I understand the idea. I would definitely try. I think in this one, I would prefer more of a calendar, I would say. Maybe even a diagonal if you can get one on. I don't necessarily know if I'd love a Super Bowl in this one because there could be more downside. You're just not sure.
Yeah, I think because, to your point, this is a monthly chart. We're sitting at COVID lows here. Kind of crazy to see. But yeah, I think 100% we would be defined risk and keeping it really light here because you could see anything happen here. But upside, I think this makes a lot of sense. $4, not too crazy. And this really won't move all that much because, again, if Adobe sells off 10, 20 points, you're going to get a lot of value out of this 35-day, and this long option out here in the earnings cycle is still going to hold. So I kind of like that as a pseudo asymmetric reward to risk profile.
I mean, look, I do think that there's a situation where I've said it before. Some of these software names that were getting sold off, maybe at some point, some of them struggle more than others. Maybe they're not adapting as much. I don't know how much Adobe is adapting. I think that's the big thing about their earnings. I guess we'll see. If they don't hit it on this earnings, they might be in serious trouble. I mean, AI can easily reproduce a lot of images these days, right?
Mm-hmm. Yeah, we do it every day. Do it every day. Yeah, I think they need to have some kind of like paradigm shift here, or present something new that offsets this sell-off here, because this is from 600 to 250 is a big deal, especially from 350 to 250 just this year is a big deal.
Yeah.
While the rest of the market is at highs. I think that's really the thing to note. How about Oracle? 173, up 7% today. Why? Couldn't tell you. big move here, $11. This is far exceeding the implied move for for next week even. But getting long or playing it to the downside, I think the same thing. I would do the same thing. Like the implied volatility, you see the spike in the 35-day. So we're going to see this earnings likely land in the 35-day cycle. So I think if you want to be conservative to the downside, maybe it's a put calendar or diagonal. Just throwing this up, long the 150 in June, short the 28-day, which is pre-earnings. Same story, $4 downside calendar. If you're wrong, you can roll from the 28-day into the 35-day and pick up a lot more premium, or even the 42-day. If the earnings land in that cycle, pick up a lot more premium. Looks like they're actually pricing it in for the 42-day versus the 35-day in terms of premium. But yeah, I really like, if you're doing a pre-earnings trade, I like the idea of buying in the earnings cycle, selling pre-earnings so that you can roll into the earnings cycle and pick up a lot more premium to reduce your basis if you need to. But downside, I don't know. It's tough. feels like I'm allergic to it these days, unless it's an SPX butterfly. Or unless it's an iron condor that turns into a bearish trade exclusively because the market has ripped up 15% in 2 weeks.
There's a lot of those going around too.
Yeah. Okay. Let's get our brains working here. How about the thesis that inflation will not be a problem until they try to start to combat it? Nominal equities can keep rising with inflation if there is no check on it. Yeah. So I think maybe you're alluding to an emergency hike, something like that. I haven't checked out the FedWatch tool in a couple of days, but
me neither. I just saw the 2-year sometime a couple of days ago. This week rose to 3.94%, which implies a hike.
Yeah, there is actually. So over the next couple of decisions, there's a 10% probability of a cut in June. There's a 12% probability of a cut in July, 15% in September, October, 15%, but there is a probability of a hike in October. December, the hike probability in October is 1.8%. In December, it jumps to 8%, and it's almost equivalent to the 14% probability of a cut. So there's a lot of uncertainty in terms of where we go, to your point in the YouTube chat. But January, this is interesting. January of 2027, higher probability of a hike, to your point, Jamal. 15% that we get a 25 basis point cut January versus a 13% cut. And then March, you're seeing even more, 20% probability of a 25 basis point cut or hike, 11% probability of a cut. So you have a 2-to-1 probability that we get a hike in March relative to a cut in March. And then April and June and July, March, April, June of next year, they're all pricing a similar thing where you have a 2-to-1 probability that we get a 25 basis point hike as opposed to a cut. So yeah, I guess the answer is, if you were to believe that to be true, let's say we get a 25 basis point hike in March, that means the rest of this year we're just coasting, climbing higher. I mean, I don't know. That's always interesting too. Like, what if we rally, volatility's low? What if we just rally to 8,000? And then next year they try and combat it. Where does that bring you to? If you get a 20% sell off, you're right back to where we are now. So it's wild to think about, but those are the probabilities.
And that's the thing that I've seen even the smartest traders get caught up in sometimes, trying to plan for that. Just trade what's in front of you for the time being. I mean, again, I do think at some point this market gets spooked up by how high inflation is or becoming, especially if oil is doing what it's doing. Even with the sell-off today, you've seen a bounce back. So it's hard to try and, play for what you think is going to happen. Just play for what's in front of you.
Yeah. Yeah. That's all you can really do. Let's see what else we got here. How about an SPX put butterfly expiring in 6 days, 69.50, 68.50, 67.50, worthless now? Yes, it is probably worthless now.
Sounds like it.
However, I think what you could do, 69.50, 68, 67. Yeah, so 69.50, 68.50, 67.50. Yeah, so what I would do is these options are all trading for $1. So what you could consider doing is the same thing that I did with my butterfly is just sell out of this 67.50 and you could move it up to the 6800 or the 6825. And you could do that for 35 cents. Like I would do this for sure. So what this does is you have a 100-point wide butterfly, probably going to expire worthless. But if you make this adjustment, you're adding, let's say the market crashes next week. Very low probability, but if you have this symmetrical butterfly on, it's not going to appreciate as much as if you sell out of the 67.50, buy the 68.25, and you would ultimately get into a situation where you've got way more downside profit potential. Yeah. I think we have a Liz and Jenny tweet on the show.
I was like, who put that up there?
Josh, what are you doing?
Yeah, what? What's going on?
But yeah, I would consider doing that. It costs you 35 cents, but if you do get a market reversal, you would have a much wider downside put spread. And it could come in a lot quicker. Or you could just keep it. I have an in-the-money call spread, and rolling for time doesn't work for a credit. Have to widen it or add contrast. Yeah, that's why with credit spreads, you got to roll before it goes in the money if you're trying to do it for scratch or small credit. But yes, you could widen it out to force a credit. You're basically just selling another spread on top of it by widening it out. I only do that if there's a decent probability that it moves out of the money. If it's like super far in the money, I don't like doing that because you still need a directional move just to move the thing out of the money. And you'd be adding risk into that low probability.
Yeah.
If my SPX put butterfly is close to expiring, does it make sense to close it and use the credit to reestablish instead of moving up the long put? I mean, yes and no. If you want to get into a 30-day or 45-day, you can make a new wider one for a new debit. But if you get a sell-off next week, your near-term one is going to be a lot more sensitive, especially if you move up the long put.
Yeah, I mean, it just all depends on how far out of the money your butterfly is at this point, right? But the idea of creating it's an interesting science. I mean, it really is, right? You really want to create them fairly close in time, but not too close, if that makes sense.
Yeah.
Like honestly, right now, just me personally, I am not that keen on a butterfly in the next 7 days. I think 13 is as far. And typically, again, you want it to be a little closer, but 13 is as close as I'll go for the time being. I'm going to give it a little time and maybe go a little bit further down. Yeah.
The 13 days are more expensive, but I mean, if you do get that sell-off, these are going to really appreciate. $9,000 max profit, $1,000 debit. And even if the market rallies, it continues to rally, you're not going to see this max loss until expiration. So yeah.
And I think too, it depends on how you're positioned. If you are, you feel you're a little long and you're a little worried about a downside move, then, maybe it's worth having one every week just to make you feel better, right? But if you're trying to play for a big downside move, With a butterfly, I honestly think you almost wait for the weakness in the market to start before you even have to place it. And then you can still place it at some point and win. I mean, again, going back to when we had our weakness in the market, you go to the beginning of March, it didn't feel like we were going to fall. It didn't feel like much at all. And you had several weeks to go ahead and get your plan out and make different butterflies. So if you're playing for like a real downturn, then wait till you actually see some weakness. But if you're playing for, I shouldn't say playing for, if you're planning for just having some protection to sleep better at night, every night the market's closed, then that's a whole different story. And that determines on where you place it to.
Yep. What makes SLV go up? When will the market let SLV go up? I don't know. Well, I think what's interesting is, so we keep talking about like how the market is telling us certain things about certain markets. If you look at SLV, the volatility has collapsed in SLV. 31 IV rank, and now we're dealing with 50% IV, which is pretty standard for SLV. And then you look at like GLD, same story. IV's collapsed in here. 25% IV is pretty typical for GLD. So I think the story is more about the vol coming out of SLV, and which tells us that we're kind of out of this realm for now, where it went from 30 to 100, and then we were just chopping around here. Like IV rank at 30 and minimal IV means maybe we just chop between 75 and 65 until something else happens.
Yeah, totally agree. That's the way I'm playing it. Like, can you do a 20-year monthly chart?
Mm-hmm.
Kind of, I mean, this is, when I looked at this like weeks back, this is why I am playing the way that I'm playing, why I have not done anything other than sell vol for a while here. When you look back at 2011, that was the last time. If you could ignore what we've seen recently for a little bit, you look back at 2011, that was a hell of a move. I mean, it doesn't seem like much now, but at the time it was a hell of a move. And then it just faded, and vol just kind of came in, and it was a slow fade too. It was the move to the downside was not the same as the move to the up. There was a big dislocation, just like we've seen now, big dislocation. And then eventually it just kind of, trailed off or kind of chilled. And we've just been taking advantage of that high implied volatility that was there when this thing was going crazy. And so I guess I'm assuming your question is based off of when is it going to be moving big to the upside again? I look at this chart and I don't think it's going to.
Yeah. I think the fact that vol's collapsed tells us we shouldn't expect to see this thing go nuts, at least for now. If we had some kind of catalyst and a big move, then of course vol will react, IV rank will go back up. But right now, the vol is telling us we should expect to see this kind of sideways chop. So we'll see. We'll see if the vol is correct. But I mean, over the last month or two, it's been that way. We've had a pretty tight 10-point wide range here. What's your take on buying 1,000-day to expiration leaps? I love it.
Yeah.
So I think it depends on your situation. Like Nike, look at that, 630-day leap. Why? Well, let's pull up a 20-year monthly chart. Nike is at 10-year, actually 45. We're back here, 2014, 2015. So Nike is at decade lows, 10-year lows. So when a product gets down to price extremes that are so extreme from a time frame standpoint, and one thing that we really need to talk about more is the lower a stock price gets, the cheaper the out of the money leaps get also. So this 600-day 60 strike option is trading for $5. I think there's plenty of opportunity over the next 2 years for Nike to go from 45 to 55 or 60. If that happens, if we view this option in a chart, this $5 option gets to $1,000 or $1,500 or $2,000. So if we match this up, like when was this trading for $1,500? Feb 1st of this year. Where was Nike? Feb 1st of this year. It was trading at $60. So this $500 option can triple in price or quadruple in price just on a 15-point move to the upside. So I think if you were trading like SPX or SPY, 1,000-day leap would have been something I would consider down here, like into the sell-off, because that's when the leap options are cheaper because you're dealing with a compressed stock price. So depends on what product you're looking at, but I really don't mind it, especially if you can afford the risk. The further out in time you have for the thing to work in your favor, even though buying an option is a lower probability endeavor, if you have 1,000 days, if you plan on closing it for a certain probability of your debit paid, it's a much higher probability endeavor.
Yeah, and the thing about Nike, last I checked, it's still in the Dow Jones Industrial Average. It's still in the S&P 500, so that makes it interesting. If it were to get kicked out of one of those, all of a sudden it's probably, not as interesting as a long-term buy. But as long as it's still in those, that means there's still belief in it. And again, like you said, certain products doesn't necessarily work for. We have a little bit of out of the money calls, but like a lot of times people will like to buy in the money leaps. And this is one where the dividend is not that high, so you don't necessarily have to worry about any changes or any stuff going on with the dividend being so big that you have to think about what's going on with your deep in the money call. It's only like 37 cents, so you're good.
Yep. Intel Butterfly. Interesting. Let's check it out. Ooh, even a butterfly emoji. Love it.
I'm short balling here. Strangle.
What strikes you have?
I just rolled some yesterday too. I think I am short the 80-115.
Okay. So you're still out of the money.
Yep.
I like it. This butterfly, dollar butterfly to make 620. Does that make sense? No.
Yeah.
What do I have here?
It's because it's 10 to the upside. You got to do 90.
95, 100, 110. Yeah.
They skew it?
I think they skewed it. But yeah, so this is like a broken wing butterfly for credit. That's why. $1.23 credit, broken wing butterfly to the downside. Yeah, I think it's fine. If you get a sell-off, I think I would look at closing this 100, 110 call spread or moving this in. So if you get a sell-off, you could sell out of the 110, buy the 105, create symmetry around that butterfly and leg into a risk-free butterfly. If you can do it, if you can make that adjustment, moving the 110 to the 105 for a debit less than $1.23, you would leg into a free butterfly here. But yeah, I also don't mind just buying the butterfly for 30 cents. You don't use really any buying power, you use 30 cents buying power, and you're kind of playing for this range to be where you end up in June anyways. But yeah, I don't mind it. Yeah. Microsoft?
Question mark?
Microsoft? Question mark? I love Microsoft. 415 June. Long call, 425 May. Let's take a look. 415, 425 for $11. Paying a little bit over the width of the spread here, but I don't think it's going to be that big of an issue. If you look at the Theo P&L, you're paying $11. You only have $10 of intrinsic value here, but your long option just needs to have $1.40 of extrinsic value at the expiration of this short option, and that's why you have basically no risk to the upside still. But yeah, I don't mind this as a way to get involved. I kind of like the idea of pushing both of those options out a month, especially after the vol crush here. We're at 29% IV. I think you could buy July, sell June. This is a $9 option, or you could do the same debit, $11.25, but make it 15 points wide. And now all of a sudden, you have a lot more profit potential to the upside, and you have no risk to the upside here. So kind of like this, you can move this to like the 435 and if you wanted to give it a little bit more juice, and you have even more profit potential to the upside. So up to you, but I don't mind those setups.
Yeah, very nice.
Oracle might be a sleeper play, showing strength today off recent lows, looking for an upside to 185 range, currently trading at 172.
A lot of Oracle lovers on the chat today.
Indeed. Yeah, I mean, 185, I would just go with a straight up calendar spread. I think you could do something like this, keep it really small into this rally we've seen. And again, the nice thing is if you get a rally to 185, you'll have a profitable trade for sure. But if you get a rally to 185 and you want to manipulate this, you could buy back your 185 June 5th option, roll it into the earnings cycle. And as you can see, these options are way more expensive. You could move this up to, let's call it the 195 or 200 strike for a scratch. So you could add 10 more points of upside profit potential by rolling it out 1 week into the earnings cycle. So I think that is another way to play it. But yeah, I think calendar spread, diagonal spread, long the earnings cycle, short a cycle right before it makes a lot of sense. Anything else here? We got a couple minutes left. SMH, Stock Messiah. Hello.
Ooh.
SMH June, buy the 490 put, sell 2 of the 480s, buy a 455, collect $300, free moontime money.
Moontime money?
Moontime money. Yeah, so Broken Wing Butterfly to the downside, 490, 480, 455, $300. Yeah, I like it. And same story here. If you do get a continued rally in SMH, you could sell out of this 455 put, roll it to the 470 put. And as long as you do that for a credit or a debit less than $3, you would leg into a free butterfly, remove all the buying power, and be good to go with a 10-point wide downside butterfly.
Have mercy.
Does TastyTrade have a practice account or a paper account? We do not, unfortunately. But if you open an account, you'll get access to the platform before funding. You just need a login, basically. So check it out.
You can do back testing as well if you want. It's not the same thing as fake account, but you know.
Some people got into Microsoft yesterday. Nice. Yeah, yesterday was a good day for that. If you believed, if you were a Microsoft believer. One last one we can analyze here. Diagonal, long the 230, short the 240, June, July. 430. 430. 440. Yeah.
I like it.
Classic setup. Yeah. Anytime, even with the long-term diagonals here, as long as you are paying less than the width of the spread here, you'll be golden on a rally. You'll have a nice return on capital. This is with no change to time or implied volatility. If this happened today, you'd have a $300 winner if it got up to 440. So, yeah, I like it. Especially, again, Microsoft is one of those stocks that still has a lot of room to run before it gets back to all-time highs. So I like it just in that regard. If you're to believe that the market's going to keep going up, maybe Microsoft is one of those reasons why it does. That's it. We're out of time. Thanks for tuning in, everyone. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. We got plenty more content coming your way on the YouTube channel as well as tastylive.com, though, so stay tuned. Have a great weekend. Some people in the chat calling for some craziness over the weekend. It's happened before. Could happen again. The markets are moving. But yeah, have a good weekend. We'll see you on, I'm actually out Monday and Tuesday. We'll have some outages this May here, but we'll make it work. We'll keep the show running. But yeah, we'll see you next week. Peace.
Later.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
What is going on, everybody? Happy Friday. Welcome back to Risk and Reward. We have a pretty bullish market as we head into the end of the week here.
You could say so.
Yeah, nobody. It seems that there's all these earnings, all these catalysts, so many things that could have slowed us down. We some bad earnings reports out of Max 7 companies. We have the last Fed meeting with Powell at the helm, and the market is resilient and cares not for any of these frivolous things. It continues driving higher. I'm joined as always by my wonderful co-host Earl Coleman. What's going on?
Pretty good. Another very green day in the market. Something I had paid attention to was how it was the last day of May. We put in a low at 22,971 on NASDAQ. And then the first day of April today, we put in a high at 27,838. That's over a 4,500 point move to the upside just within 30 days of the market. I think this might be one of the most bullish markets I think I've seen since the COVID recovery crash. But nonetheless, it's Friday. I hope everybody's doing well. Let us know what you're trading. Let us know what you're looking at. But it's been an extremely bullish day. I'm seeing a little bit of a pullback at the highs, but not giving us much since then, for the most part.
Yeah. We also we had our matching shirts on today, and we got no compliments from production before we started. After they were just complaining yesterday that we didn't have our matching shirts on.
Right there we go.
We're out here working hard. This is a thankless job, you guys. No, we love it here. What's going on, everybody? Agent Per, Ranch, Unknown, Nice Boy. Good to see all of you hanging out. I've caught a nice move in United Airlines here, which is kind of where I would like to kick things off. We can go ahead and jump straight into the Tasty platform on my side. United, you guys may recall I put this on air, 2 days, Wednesday? That's what I was going to guess initially, but I realized I could confirm. Just felt like it was oversold, and I did this with a 30-day time horizon, looking for just a quick recovery. I actually put this was already slightly out of the money, and that's to say in the right spot when I put it on. But we've gotten a nice little move up here as United announced that they are going to raise prices this morning.
Bullish for the company.
Bullish is
more revenue.
Yeah, sucks for the consumer, but is obviously bullish for the company. They cited the rising oil prices as a result of the Iran conflict, which we all saw this coming in the air travel landscape. These prices were going to have to go up as fuel costs increase. It sucks to have it passed on to the consumer, but that's what the companies have to do, and the market likes that. I assume a little bit of this drawdown that we were seeing in United over the past couple of months is due to this Iran conflict and how they were going to manage navigating the rising oil prices. And the simplest way to do it is just to pass that straight on to you and me. So the market
the playbook works. That playbook works, right? Just pass it on to the consumer. It's a strategy as old as time.
And this was not part of my sentiment whatsoever when I put on this trade. I suppose maybe it was sort of in the back of my mind calculus, but frankly, I would have, if you asked me at the time, I would have said that the market was already pricing in the fact that United was going to raise prices sometime, because that was so clearly evident that it was going to happen. But apparently not. Apparently a little bit of meat left on the bone as the news comes through that they actually are going to raise prices. But looking very stable on those now, which I'm happy about. Anytime you're putting on something with a slightly tighter time horizon, 30 DTE is actually fairly short for me. It's nice to get the move that you want right away and be in a good fighting position. Paramount also taking a nice little jump today, up about 8%. It's been a little while since this was at the top of my portfolio. As you guys may recall, I had a 10, 15, 20, all at 259 DTE. The 15 has since been liquidated, so we have the 10, which is in the money. No risk for theta, and then the 20, which is a little bit more of a runner, a little bit more of a gamma play. Looking for some upside there. We're pretty much unched on both of these, which kind of paper hands out of me. Were these both up over 100% at one time? Yes, they were. Probably should have just grabbed profits and waited for it to the premiums to come back down a little bit. But I did on one of the contracts, so they're basically both house money anyway, which is a part of the line of logic here. But they are nearing. There was bullish news today regarding the Warner Bros. Acquisition. Looks like they're getting closer on that front.
I'm getting a little closer. I kind of forgot about those headlines.
Yes, that was part of the reason I actually put this on back here amid this giant run when they acquired the streaming rights to the UFC. And TKO Group moved like crazy the first day, and Paramount just didn't for some reason, and it was 1 day delayed reaction. So I was riding these all the way up, liquidated the 15s somewhere up around this vicinity, and it's been draw down back to the lows, all the way to the lows since. I actually am kicking myself for not scooping more down here because Paramount is just seemingly has bottomless pockets and is trying to take over the entire streaming ecosystem right now. So this would have been an attractive buy, but getting a nice little bit of elevated premiums with that jump that they're taking today on the Warner Bros. Acquisition.
Yeah.
Aside from that, crypto is kind of just the star of the show. Up at the top of the portfolio here, I have MicroStrategy, I have iBit, I have Ether, all loaded. Just various ways of attacking the same product. But we are seeing a nice little run in Bitcoin this morning, testing those 80,000 levels once again, as they were earlier this week. So that's pretty much the synopsis on my end. I haven't put on anything new. United is among the newer positions that I have, so it's nice to see that working out. I put on more meta yesterday. I actually don't know if I ever showed off this meta position now, the way that it looks now on on stream yesterday. But we got some chaos in my portfolio with meta right now. This looks very reminiscent of your QQQ position that you had when you had Iron Condors inside Iron Condors or whatever you had going on.
Yeah, I think I sold some put spreads and then I would buy some puts and then
I think you had an Iron Condor and then there was like two spreads.
Yeah, and they were for different time durations because they were like different ideas, but on the same product.
We're looking for the double doink.
Yeah.
So we're getting into a similar position here, except unlike Arrow, where there was two different sentiments being expressed, mine are all bullish. Am I a little bit overexposed? Yes, certainly. Is it irresponsible? Perhaps.
They define risk.
Perhaps.
They define risk.
Yeah, I mean, we're talking something like, I don't know, 7-8% of the portfolio is being deployed right now into Meta. So it is a sizable bet, but we're looking okay. There are different sentiments being expressed with the time horizons here, despite what's going on. So the newest position here is this one right here in the middle, 231 DTE, 690, 700 short put vertical. Looking for over 700 by the end of the year, basically December 18th expiration. I just added that on the drawdown that they had after earnings, which is this big gap that you're seeing here. We haven't really recovered off those levels at all, but that felt like a discount to me. I'm very bullish on Meta in the long term, and when it runs, it runs. So should be some good opportunities.
Yeah.
I put on this 600, 605 a couple weeks before that. I guess a month before that is a more apt analysis while we were down here. So caught the 600, 605 down here. Those look good, even with this drawdown that we've sustained. And then the other two that are not highlighted right now are the ones that I've had on forever. These 710, 715s are probably dead in the water as we stand right now. So quite the complex position there. But that's pretty much the synopsis on my side. Everything else pretty range bound for me today. Not a whole lot of big movers. But Meta, this one's going to require a lot of TLC and constant attention because I am a little overexposed here. Mainly monitoring this one. I really need Meta to hang over 605 for another 48 days so that I can get this bottom one home. If I do, I'm able to cover this second one, which I think is going to be dead on arrival, but willing to hold for at least until 30 DTE and just see what happens because Meta will move $50 in a day sometimes, just seemingly randomly.
Yeah, and I mean, even just looking at the time that you have on those contracts, that's really nice because to your point, I mean, if it gets down to 30 days, 20 days, 15, like even if we're still hovering around the same spot, probably going to capitalize on some of the theta decay. And then obviously you can change your bind, a week from now, 2 weeks from now. So, a lot of long delta in the position, but definitely manageable for sure.
Yeah. The bottom four here are just set and forget for the time being for the next.
What does that say? How many days? That's like
231, and then these are December 17th, 2027, 595.
Oh, yeah.
So
we're cooking.
These are, these are serious leaps.
If Meta dives into the virtual reality world, or if that comes into fruition over the next couple of years, or whatever they're going to implement with AI, I mean, who knows where Meta's going to be at within the next couple of years.
Yeah. No, yeah. These two are basically, I'm punting to September, and I'll take a look at them then. These two, even later than that, June 2027, I'll start to concern myself with those two. But these four at the top are what I'm monitoring the closest, and particularly these two. So quite the elaborate position, but really it's just Meta go up at the end of the day. That's what we're looking at there. But yeah, that's the action for me today. No major new activity. I did put on something yesterday afternoon that I posted in the follow feed. Oh yes, Joby. Now, this is something that I never touch. These private aviation air taxi companies, Joby and Archer being the two major players in the space. But I sort of like the prospects for Joby in the context that I've played it here, which is a 630 DTE 20 call, just serious leap. And this is as gamma play as it gets because Joby is liable at any given time to do this. It seems like twice a year they get some kind of headline and they do this 100% week, and they always give it back. But this sentiment, you can see it just time and time again. If you scroll through these charts, it takes these big runs. So when I saw that I'm able to go 2 years out and get a 20 call, which is inside the expected move for 2 years from now, naturally this is a fairly volatile stock, at $2. I have to pull the trigger on that. I'm obligated to do so. $2 is just far too cheap for something that moves the way that this does. So the whole sentiment here is just, I'm just going to wait, and I'm so certain that sometime in the next 365 days we get one of these 50, 100% weeks out of Joby, and I'm able to exit these at the elevated premium.
Yeah, that'd be nice.
Through. They also have a partnership with Uber now. Uber is partnering with them.
Okay, that's a big name.
Yeah, to hopefully do some air taxis for Uber in the future.
Air taxis.
Yes.
Okay.
Yeah, Joby. They do. Have you seen them? They're it just looks like a big drone.
The name. Oh yeah.
The name rings a bell. It's like a quad rotor thing.
Absolutely. I've seen people take those into airspaces that they shouldn't be in, and I think I'd seen some videos pop up about the Joby, what do they call it? The drones.
Yeah.
There we go.
Yeah, and I think this company, along with Archer, is kind of fairy dust. I think it's wishful thinking that this could ever really be reality. Just airspace is too confusing of a thing, especially like over a crowded city. You're going to have all these things zipping around, and then you've got to land a bunch of commercial aircraft at O'Hare too. Obviously, they're at different heights, but it seems like a logistical nightmare. I don't know that this happens within 10 years, and obviously these contracts are only 2 years from expiration. But like I said, it's just a hype play. This thing catches the hype swings a few times a year, whenever it does, and we suddenly just get a pop to 15 overnight because they've partnered with somebody new or got an investment or whatever it may be.
Yeah, you got pot odds.
Get out at that time.
You got pot odds, and the volatility is there for sure. And it has 6 rotors.
6 rotors.
Yeah.
6 rotors, by the way.
I think it's powerful.
Yeah,
I think it'll probably take me home.
That's a good note. I saw that Joby long call. I conferred with Claude about it.
I think I've seen some videos of people. It's got to be the Joby where they put the little tracks on the bottom of it and they've tried to lift people up with it. I know that must be a little bit of a larger drone, but it might be Joby, the videos that I've seen.
Yeah. Joby and Archer are the two, but I mean, it is like they're 4 people. That's the idea. It's just a flying car.
Oh, it is 4 people?
Yeah. They're supposed to be.
What in the world are we talking about right now? That's crazy.
It just looks like a big drone, and I suppose it is driverless.
If you're scared of planes, I mean, are you going to get in a Joby? I mean, what are your thoughts on it?
Yeah.
You think it'll be widely adopted?
As a consumer, I mean, I think it would be sort of cool. I mean, it's basically just like the Jetsons or something. Like, just that's the future, right? Like the
Don't
flying,
say that right now, man.
Flying cars zipping all over the
that.
place in your city. I mean, that's like a cool flying cars.
Yeah.
That's the thing we've always said. Oh, in 20 years we'll have flying cars. That's been the joke for like 40 years.
So you think it would be like automated, where it would pick people up? I mean, I'm curious about air traffic control. Is it people going to be able to operate them themselves? Do you need a new type of license that we've never seen before?
Yeah,
I'm curious.
I think it would definitely be driverless. I mean, I think it is a drone. Technically speaking, that's to say a driverless aircraft, whether it's being flown by someone off-site or is just doing everything on its
crazy.
own. I don't know. So yeah, I mean, would maybe be cool. Noise pollution is a concern, and yes, air traffic is obviously the main
noise pollution. I thought the pollution in the air. I think the Boeings and yeah. No, that's crazy. I didn't know that we were actually taking steps in that directions, but it's kind of crazy that we're starting to build out for those things. And I mean, to get a partner like Uber. They have the capital, they have the credibility, the logistics to get those things done. So I'd be shocked if my kids are taking those to school within the next 10 years or something like that.
Yeah, just 10 years like feels too tight for this. This feels like a 2050 sort of situation.
I guess the stock price reflects that a little bit too. Right?
Yeah, I mean, even if you can get these things working to a point that you're confident to deploy them, that's just half the battle. And then you have the regulatory battle, which I think is maybe even the steeper hill to climb.
Right. And then you have, will this actually be widely adopted? Like, how many people are actually going to be taking these things to sustain the revenue to make this thing make sense? That's what I think of, just because of the natural fears of, being in the sky. And I almost feel like you'd be more comfortable on a regular airplane than a drone.
Yeah, and can they get them cheap enough? Also, my thing has always been like, how much time does this really save you? Like, what is the exact use case for these? Because, if I'm taking a conventional Uber on the ground.
This is a great point, right?
Say something, a 2-mile drive in this city will take you 20 minutes.
Right.
These could maybe get me there in 5 minutes. So they're going to save me 15 minutes. That's obviously considerably faster on a percentage. And these are arbitrary numbers. That's obviously considerably faster on a percentage basis. But how much more expensive is it going to be?
Right. And then versus the risk. After we ride this thing 100 times, 150 times, I don't want to be the test pilot. I don't want to be the first round of people trying these new types of technology. That's just what pops in my mind as a consumer right off the bat.
Yes. And I think it was very well put here by Money Wandering. Joby is one crash away from a crash, which I think is absolutely true. I frankly think that this 2-year time horizon that I have is actually too short for that to even come into play. I don't know that we're going to really legitimately be testing these things in any substantial way where one crash could cause a crash, because I think you're talking about having people in the thing at that point. I don't know that we're there.
I thought it was just a drop off packages at first. I know we've seen, I think Amazon started some of those air deliveries, but that's kind of what I was assuming. But then when we had said they're partnering with Uber, I was like, that sounds like a people transportation kind of thing. But just the fact that they got a big name with a lot of credibility like Uber behind them makes this thing have a possibility, at least. So
yeah, it's just for rich people going from Manhattan to whatever airport is by there. Just don't forget to pack your parachute. Yeah, no, I agree. I mean, this is definitely a upper class use case sort of situation. But yeah, whole point is I don't really believe in this company. Maybe it works out, maybe it doesn't. I don't have any passionate thesis about whether these air taxis actually come to pass in the next 20 years or not. I just know that the way this stock moves, it's just once 1.5, 2 times a year, it catches a hype cycle and goes flying for just a second. So when I'm able to get something for as cheap as $2 this far out, January 21st of, I guess that's 2028, I have so much time and so much surface area to let those runs come through. And $20, I mean, that's only 100%. I mean, that's not like this insane. These aren't $50 calls.
Yeah.
Like 20 is realistic to where I could hold these for a year and I'm not just going to get completely eaten alive by theta. And at the end of the day, it's $200 notional value. So it's a very cheap little lotto ticket to keep in my back pocket, forget about, and then one morning you wake up and you say, "Oh man, these are up 300%," and you're able to get out. So that's the whole thesis with the Joby play.
I mean, I like it. The fact that we're talking about it right now, I think creates even, in a sense, volatility for the underlying in itself, but extremely interesting.
Hey guys, can you get us another poet? This was a nice one to short at $15. Thanks for bringing this one to our attention. I don't have another one off the top of my head. I mean, Avis was it forever there, but I was never able to reliably get short. But yeah, I do love these giant runs that just make no sense, and you can just easily get some shorts. Yeah, Avis was the other one I just mentioned, which was even crazier, all the way up to, we almost got to 900, 850. Now it's back down to 181.
CAR was crazy. I forget, did CAR give back most of its gains in an overnight session, or was it during the day?
No, I think it was during the day.
Was it during the day?
Yeah, because I mean, we opened higher.
I'm so surprised we didn't have any halts to the downside with such an aggressive move. I mean, we went from 850 all the way down to 181.
It did get halted once on the way up.
Oh, okay.
But I think that once it was so high,
a halt on the way up is wild.
Yeah, I think once it was so high, perhaps the powers that be just kind of understood that this crash was inevitable and were willing to let it play out.
Yeah,
crash.
Yeah, I've heard of and seen some horror stories with halts, especially with some of the smaller cap stocks. Because I mean, if you put a stop loss in, I mean, that thing gets halted. I mean, it can just open up 10 points higher, just opening up off a halt. But surprised we didn't get more to the downside. Can't even believe we went on a run like that, almost $1,000.
Yeah,
had ACH shares with covered calls for the longest time.
Yeah.
That's the Archer. Yeah. So Archer and Joby, okay.
Yeah, Archer and Joby are the two.
So $5.89 for Archer.
Yeah, and this one does the exact same thing as Joby. You could express the exact same sentiment here if you wanted to. It's just the news-driven pops back down to fair valuation over and over.
Yeah. CAR is so last week. That's so true too. Like, when are we going to be talking about CAR again?
True. They did just have a big showing in New York and have been running in Dubai for airport fares. They've been good for wheeling. Okay, interesting. I wasn't aware. Last plunge for them both did sort of put a dent in my wheels. It's funny. You're doing wheels on an air taxi company. There's irony there somewhere.
Oh yeah.
But that's what I got. What you been doing over there?
Yeah, we can jump over to the TradingView platform. Just take a quick look at NASDAQ before we get into the weekend. We popped to another high, no established levels of value to the highs. So that means we have to wait for price to find fair value. And we started to get a little bit more consolidation over here at its highs. We really have this leg from the morning to the upside. What an insane breakout that we got at market open, though. I mean, I couldn't believe it. At first, we were on the 15-second chart. I was like, this will be good. We might get some opportunities today if we get a pullback. Instant no pullback. So no trade for us on the day. No value, no trade. No value area, no trade. There's nothing really to trade off of. And then again, being at all-time highs, it's one of the most difficult contexts to trade because you have no established level of value. We're in imbalance mode, and that just means that we're in price discovery mode. So with that being said, if you're not already long in the market, it can be really tough to find an entry over here because the risk to reward isn't necessarily in your favor. But we got a breakout this morning. Starting to get a little bit more consolidation over here. If we zoom out to the 1 minute or 5 minute chart, where'd the chart go? All right, TradingView. This is not tasty. This is TradingView. I'm on your head. I'm on your head, TradingView. Let's go. There we go.
Let's just blow you. There you go.
Or maybe the market was way up here. But with that being said, we have about... Josh, I'm going to get you, man. No, but with that being said, we have about 70% of the market or 70% of the trading activity trading within this range over here. So we'll pay attention to see what the market wants to do at these highs. Maybe we finally get a little bit of a reversal. But I'm not going to be too keen on trading anything. Let me know if you were taking any scalps, which you kind of were looking at on the day. But just another all-time high, kind of same day, different story, or same story, different day. There we go. We'll see what we get from there. With that being said, I really wanted to get long on some oil.
I have an oil position that I sold an out of the money put spread on USO. Tried to get filled at like 270. And I think the market was like 15 or 20 cents away. I tried to lower it to 260. Wasn't able to catch it, but that would have been nice just because it seems like, once again, oil and the overall indices are starting to move inversely from each other again. So we're starting to see more volatility on that end. Wasn't able to catch a short. I know that was probably, we had a pretty good run to the downside on oil the other day. But if we could pull up CL right here, we'll take a quick look. I mean, if we can get down here to these lows, maybe an oil around 100, I'm a little bit more interested, or even like 90, but going to be using USO for that product. Yeah, you've been taking a look at that at all?
Oil? No, not really. I mean, I have my existing USO shorts on, which is just pretty brutal at this point. I don't know that anything's going to come to fruition, but I do have a lot of time left on these 231 DTE and 322 DTE. So
yeah, you're big. I mean, if we get a crack in oil, that thing could really send it to the downside. I mean, to be honest.
Yeah, it's basically, the way I'm looking at it, at least in the context of the 231 DTE, is like, we need war to be fully over in the next 100 days, and then there's like probably 60 days after that where it's like the adjustment period where people are still a little skittish before oil really comes back down. But if that all comes to fruition, then I'm still outside 60 DTE at the time that this comes through, and I should be able to get out just fine. But because of those existing positions, I've kind of just been hands off. I've chosen my side, and I'm gonna stand on it.
I think you got to. I think once you pick one side, even if you're in the indices or whatever, I think you got to, or you kind of flip flop in your mind. And I think the market offers opportunity on both ends, anyways.
Yes. Yeah. Exactly.
But
is Josh's birthday this weekend?
Oh, is it Josh? Happy birthday, brother!
Happy birthday, Josh!
Happy birthday, Josh!
Well, we love you, man.
How old are you turning, Josh? I know when I had to tell people my birthday, I got 18 whoopings and 19 whoopings now. Happy birthday, man! But no, just looking at the volume profile over here on oil, just taking it from this swing high all the way down to this swing low, and then to where we're trading right now, you can kind of see the market's been having a very difficult time holding above these levels. And spending about 70% of its time within this level of value here. So as you can see, the market's starting to dip right back inside that level of value where most of the trading activity occurred. So, I mean, again, if we keep selling off to these lows, we'll try to pull the trigger on a long just because the risk reward is in our favor. If we keep selling back off on oil, we'll cut it. There's no problem. But again, tough to get long at these levels because the risk reward is kind of awkward. So, and then to the short side, I don't think the risk reward is that favorable to the short side right now, at least. But it's a difficult one to trade. We'll see what we get over the weekend. I mean, I'm excited. The market is trading at all-time highs, and I know we've ripped about over 4,500 points to the upside on NASDAQ. And I mean, we got to start consolidating, and we got to eventually get a pullback. We had no trades today on NASDAQ, but we will be as patient as possible.
Josh with some choice words for us.
What do you say?
I can't repeat it. Yeah, I see Nice Boy. I see Nice Boy said, all right, I bought a cheap 322 DTE 13 call in Joby. Why not? Sounds fun. I like these WOD bets. Fun to see if they come true. Plus, flying cars is cool. That's pretty much exactly my line of logic, Nice Boy. Yeah, just a fun little lotto ticket. Flying cars are cool. And yeah, I'm reasonably certain that sometime in the next 180 to, 365 days, we just, the run comes through. Every once in a while, it's all just news driven. But the key here is going to be when we get the one look at the exit, we must take it. We can't get caught holding the bag because you're probably only going to see one good chance to get out. But I'm confident that one chance will come. I just don't know when. Gotta monitor that one close.
We got some Grumpy Mike's an instigator.
He is.
What's going on, Brandon? It's like Brandon and Grumpy Mike really level each other out. Time does.
Yeah. Then last thing before we hop here, yeah, Money Mike. I saw this being mentioned yesterday, and this is a good point. To the end of if you're looking for something that's over elevated and would maybe be an easy short, this SIMO SIMO, I have it open on the Tasty platform over here, is incredibly elevated. I don't know anything about this company or the fundamentals, anything to do with it.
Massive gap up. Wow.
Yes. Perhaps this is substantiated. Major asterisk on this. I've done zero research, but this does look like one that's probably elevated to unsustainable heights and might be a fairly easy short. LWLG was the other one mentioned. That one does have the same chart action, but because of the low float on that, it just makes me a little bit more skittish to get involved. But this is a sizable stock that I feel like does definitely have some room to the downside. So good shout on that one, Money Mike.
Money Mike, good shout out on that one, Money Mike.
Mike Jones.
Mike Jones. No. we'll see. We'll see what we get.
Oh, Reds, I'm back home. My phone calls are done. What are we trading today? Silver's up. I just gave a thesis on Joby, Rhett. That's pretty much the only new activity going on for me today.
Forgot about silver. Silver's up on the day. I haven't been paying attention to it. Looks like it's rallied 73, 76. Let's zoom out real quick before we hop out for the day. You know what, Reds Media? I'm kind of glad you brought this one up. Would love for silver to be a little bit higher to get short, but I mean, I'm leaning a little bit, still bearish on these metals. I think they still have the range, a little bit more room to the downside. See what we get. But Brandon, that's going to be it for me. Do you trade any short premium E or mostly future scalps? Yeah. I trade premium a lot, most of the time on QQQ and SPY. And then USO will take advantage of oil and those products as well. But a lot of the similar logic. I'm kind of hands off on the swing positions. I know the stigma around day trading, but I've made more money day trading than my swing positions. So I'm just starting to find what's working for me a little bit better. But I find that having those premium positions on QQQ with that defined risk is a very comfortable way to at least have some directional exposure for a larger time frame. So QQQ, SPY, best buds. Best buds.
They are best buds. All right. Well, I suppose that's all the time that we have for today. You got anything else top of mind?
No, that'll be it from me. I know. Lastly, top of mind, if everybody in chat just wants to wish Josh a very happy birthday. I know we joke a lot, but Josh is a real one. Happy birthday, brother.
Yes, we couldn't do any of this without our wonderful production team. They are all so amazing. They support us endlessly through all of our antics. We appreciate them greatly. And yes, happy birthday to Josh. That'll do it for us today. Thanks so much, everybody, for watching. We dearly appreciate you taking the time out of your day. We never take it for granted. Ariel and I will be right back here, same time, same place on Monday, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power coming up next. If you're going out this weekend, drink them small, drink them often. We'll see you guys next time.
Peace.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're back. It's still May 1st, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. Keys, Ilya Spivak. Ilya, can't believe it's May 1st. Where's this year gone?
Yeah.
Feels like we've done the whole year already, given what's happened in the stock market recently.
I tell you what, if you're bearish in these markets or you're long the US dollar, then it was certainly May Day that you were saying to yourself first thing this morning. Thankfully, the markets have unclenched a little bit, but I digress. It's an interesting thing that we do now because, of course, the month has flipped over, and we're going to find out if what these markets are doing now as we head into the close is going to be a flavor of what comes next. Because obviously, and I know you have this on the front of your slide here, people like to say things like sell in May and go away. And I'm not going to take your thunder, but I suspect I know where you're going with it. And I suspect I'm going to agree with at least the data that you're going to present, if not the conclusion necessarily. So by all means, sir.
I can't believe you weren't going to endorse my statement that people who say sell in May and go away are bad liars.
Well, I mean, the data certainly doesn't support that saying.
No, it doesn't. It does support the saying that these people are bad liars, not sell in May and go away. But that's what I'm hearing again today. I'm turning on financial media.
I think people just like things that rhyme, man.
But there's a better rhyme out there. It's buy through July. So we can go to the slides here, Josh. Many people are saying today, as we start this new month, it's time to sell in May and go away, which for long-term viewers of the show, ever since we started in, I guess the first April, May we had was 2023 here with Futures Power Hour. We've been saying that the folks who say sell in May and go away are rotten, nasty folks who just want to separate you from your money. Why? Because of what happens over the next few months. If you sold in May on May 1st and went away, you'd be missing out on a few things here. We're going to show that in the next chart.
Yeah, maybe.
Get over to the S&P 500 and look at the May months and how it's proceeded over the past 20 years, going back to 2006. But here for the month of May, as we take a look at our major future assets, major future products on the board, there are some things that stand out. First off, for stocks, it typically is a good one. The S&P 500 averages a gain of 0.75% over the past 20 years. It's been positive 75% of the time. The past
huge, by the way, point here. I just want to highlight the robustness of these numbers. This starts in 2005. So all of you people that like to cherry pick things from 2010 onward and go, oh, nothing has happened except COVID, and that was a one-off. This is robust data.
Well, even if you look at the 10-year study, the month of May has averaged 1.46% gain for the S&P 500, and it's rallied 9 of the past 10 years. For the NASDAQ, it's the same story. May up 65% of the time over the past 2 decades, 1.48% average gain. Crude oil seems to be on decent footing, although you see some lopsided performances here, right? Crude oil is averaging a gain of 3.76% over the past 20 years, but it's only up 45% of the time. That's to almost say like when crude goes up, it goes up big, but otherwise it's not usually going up. On the other hand, you see something like volatility. Volatility typically goes up 1.04% on average, but it's only going up 35% of the time. So something has to happen to provoke that type of upward drag right now, Ilya. I bring up the title "Sell in May and Go Away," and I have this, hostile, combative relationship with the folks who spread rumors here. And I'm not going to suggest that May is definitely going to go up, but I want to clarify why "Sell in May and Go Away" is wrong. Here's the month-by-month performance of the S&P 500 going back to 2006: May, June, July, May, June, July here in the S&P 500 futures. July has been the strongest month on the board, up 2.4%, up 80% of the time. So there's a certain contingent of people who say you buy the market after the Jewish holidays, in September, October. You hold it through the end of April, and then you go away basically from, right before Memorial Day through those holidays again, Rosh Hashanah, Yom Kippur, once the school year begins again. That's just not what the data suggests. If there's a bad month,
that's just not how the world works.
Right. And
maybe
if you're going to be a long-term investor as well, timing the market's the most difficult thing. So you kind of just got to get in and keep dollar cost averaging. The only month on the board that has a meaningful loss, Ilya, is September, which is down by just under 0.5% over the past 2 decades in ES futures. The only other month that's produced a negative return in what has been a 20-year plus bull market, right, has been February, up by 0.04%. So unless there's a catalyst, maybe it's an acceleration of the Iran war, maybe it's a Fed hike out of the blue, we never know. But the seasonals and the actual data itself do not support the catchphrase, "Sell in May and go away."
Well, and it's really easy to see how in some years that's not what happens. I mean, look at 08. 08 was down 8.5% in June, whereas June's return is usually positive. So can bad things happen? Yeah, of course. It's what we're looking at here are averages. And when we consider that what we're looking at are averages in what has been a 40-year period of declining inflation and declining interest rates, which of course flatter the stock market, it's not surprising that this is what you see. Only 1 month on average has a negative return. Is that because that month is special? Well, no, it's because generally the stock market is biased higher, and it tends to rise most months. So there's a give and a take here. You have to pay attention to this stuff, because somebody that's going to tell you "sell in May and go away" is pretending that there exists a statistically relevant relationship there that you should pay attention to. That relationship doesn't exist. It's just not in the data. The second thing is you don't want to assume that the opposite is true. So you don't want to assume that you're necessarily going to have positive returns in May. What you don't want to assume is you're definitely not going to have positive returns in May, because that's just nonsense.
Yeah, well, it can happen on any month, right, where you have something that's an outlier that just pushes you off the averages. But just look at that cluster in 06, 07, 08, in June in particular.
I mean, that's like a good 5 years there of just abysmal June performance.
And you know what? That's where this comes from. When you think about the post-global financial crisis years, you have this 5-year look back, this 10-year look back, where if you sold on May 1st and went away until the end of September, you avoided a lot of the bad things that happened in the market. And to be fair, even in the 2000s, in the 2010s, in the 2020s, if you've avoided September's had a lot of red months, a lot of really negative red months. So
yeah, you know,
it feels like it's an outdated
February
is my point.
Is another one. I mean, just look at that cluster in 06, 07, 08 in February. I mean, there's a 10.7% drawdown in there in 09, which, by the way, that was the bottom.
It was the bottom, and if you didn't buy in February moving forward because of that experience, you missed 6 years in a row.
You missed the whole thing. Let me tell you, it wasn't great. I missed it.
We have a market that's sitting close to the highs here. It's off the highs. S&P 500 today kissed 7,300.75. 72.81 right now in the market here, Ilya, after those Apple earnings. And Apple is continuing to hold on to its gains for what it's worth as we make our way through the session. 4.08% higher. And a little bit of a bullish breakout there, even if we are still off the highs. But broadly speaking, it's a good day for stocks right now as we've continued to cycle up. Your NASDAQ's up another 1.03%. Beautiful little bull flag pushing up us towards 28K right now. Ilya, volatility has come in. President Trump, of course, let everyone know that going into the weekend, he's received we'll call it an offer, counteroffer, a response to the U.S. amendments to the Iranian ceasefire deal. And so they're currently discussing things. As we know, the Strait of Hormuz is open Monday through Friday, 9:30 a.m. Eastern to 5 p.m. or so. And we still have that going for us today. But it does seem like going into this weekend, there are folks who are not as concerned about the Iran war. Once again, oil prices likewise off 3%, Ilya. So just we've gone through the Mag 7 week. We've seen stocks push up and volatility come in. What's your takeaway as the dust kind of settles here with a 16.77 VIX?
I mean, for me, there's sort of what I see in the market, and then there's how I'm trading it. And how I'm trading it, we'll kind of back into it, is I'm not putting on any exposure that's new because I'm neither going to try to double down on fighting this market, nor am I prepared to pull the plug on questioning this rally. So for me, this basically came down to trade structure. So I put on the exposure that I wanted to have. It's bearish. Some of it is through selling calls. Some of this is buying put verticals. There's a ton of duration in all of it. All of it was set up with 2-to-1 risk reward or better. And all of it's at max loss for 2 weeks now. And that's exactly why you put risk-defined things on. So, frankly, this is just watching paint dry for me now as far as P&L, because unless these trades unclench over the next 40 days or so, they're gone. And so be it. I mean, that's why you structure the trade this way. If you're going to fight a market that wants to go up, you don't want to lose a bunch of money doing it. So you go risk defined and you go very, very small and you see what happens. You see if duration is your friend. So that's how I'm trading it. How I'm looking at it without wanting to put on any more bearish exposure, because this thing is a runaway freight train, clearly, is looking at the volumes, looking at the momentum indicators and going, okay, since we started to really run here to actually unfurl the war dynamics, and that's about mid-month, April 17th, really, is the break back into the range that starts to erase the war and then extend the move higher. That lines up pretty well with where we start to get the beginnings of the meaty earnings season, and maybe starts to explain why stocks are on an island. Everywhere else, you're still trading the war, the dollar, gold, bonds, everywhere, oil. But stocks don't, and maybe that's because they were like, you know what, maybe the AI earnings releases will bail us out. And so there's a kind of adjustment of the book before you get into things like Tesla, and obviously the batch of mega caps that we got this week. Now those things are over. The entire meat of that run from April 17th onward has come on diminishing volume. Momentum indicators are fading. Momentum indicators. Sure.
Yeah, that's low. 838,000 contracts at this time of day.
Momentum indicators are fading. And so I look at this and I go, right. So the markets took an earnings detour. When you look at equities, everywhere else is not looking that way. Everywhere else is telling you something else, including markets that are much more liquid, like currencies and bonds.
Could stocks stay irrational throughout the entirety of the war, and then the war ends, and then everything else, stocks are like, oh, see, we were right the entire time, guys. Don't worry. Shouldn't have been worried.
You never know, honestly, but I think you have to trade the probabilities in front of you. And again, as ever, those of us in macro land are terrible at timing, especially when it comes to the stock market, because the stock market is a biased market. The stock market wants to go higher. And other markets are more two-way markets. Currency markets are two-way markets. Bond markets are more two-way markets. But you clearly see this thing where when the war breaks out, everything locks in. The moment you hear the word ceasefire, everything unclenches in unison from about the beginning of April until about the middle. And in the middle, everything keeps going back to the war trade and stocks pointedly diverge, which nicely, again, lines up with the start of earnings season for the reports that matter. So now we don't have anything else on that earnings docket until NVIDIA on May 20th. There are no more market caps with a T until then. So is this thing maybe done now? I was expecting that maybe today, and we're getting a little bit of fading. We'll see if it sticks. But I was expecting today we'd get people going, okay, it's a new month and it's new weekend risk. Let's back up. Who knows what's going to get said? And that's not what's going on.
Can't own enough NASDAQ, apparently, still, Ilya.
That's not what's going on here, clearly. But no, volumes are terrible.
That's okay. Money made in a low volume market still counts.
Is money made, without question.
I'm finding myself.
Money made.
That's the goal, right? And you say 100%. That yourself, like the opinion. And I think I respect that your opinion on what's going on is different than how you're trading the market right now.
Well, because you have to trade what's in front of you. You can have whatever opinion you like. I mean, you can think that the aliens are going to land and tell us, you know what, quit this whole thing. This is nonsense. We've gamed it out. It's not good for you. Okay. You still have to trade the market that presents itself. So, sure. Of course, I'm not going to get in front of this thing any more than I already am. And I structured it knowing that this might be what happens because this market is relentless. So, okay, this was not obviously what I was aiming for as part of the game plan, but still net up money shorting stocks this year. So, hey-ho.
We have an achievement here of a measured move that happened that was started a week or so ago. We had carved out that range 70.85 up to about 71.85 in the S&P 500.
Yeah,
and consistent with that, we were looking for a move up towards about 72.85, or maybe even a little bit higher. So here we are, 72.80. I'm still playing for a move up towards the 7,300. Mm-hmm. And like we talked about changing our minds. That's why I started laying up bullish exposure all the way out to 244 days to expiration at the 8,800 here.
Mm-hmm.
So I missed the early part of the move. The bulk of the turnaround was directionally neutral. Before we got through 7K, I started adjusting and getting long and getting some longer duration up out. of the money and some shorter duration stuff that still was out of the money, but more reachable. And now we have started to tag the upside targets here. So just for, the folks who are looking at the bull flag that had formed, we've seen that come together nicely. And we're heading now into a week where volatile below 17 on the VIX. That's so funny. And yet here we are, low volume, low volatility.
I mean, lower volume than Easter Monday.
Yeah, that's okay.
Tracking today.
That's fine.
No, I mean,
it's totally
yes,
okay.
Of course it's fine. Of course it's fine.
Low volume, low volatility, positive technical drift has a very comforting feel, Ilya.
It's why I'm not looking to come out here and say, you know what, I got to jettison these bearish bets, bite the bullet, and get long. And if I thought that this was going to have follow through, if we were seeing these rallies on conviction, then that would be the move. And you know me, I'm ruthless with cutting losses. I do not care. I do not get married to positions. I cut them savagely if I think it's time to go the other way. You lose money, you lose money. It's much better to lose a little than it is to lose a lot waiting. So I would be cutting and I would be going long if I thought that there was a momentum story here. If it looked like this was the next leg of a rally that's going to give us another 20%. That's not what it looks like.
Well, I'm going to go back to an argument I made with you a few weeks ago, which is if I was a bull and I was trying to think of the bull case for this, what would I say? I'd point to the earnings and I'd point to the valuation.
Sure.
The market moved sideways for a number of months. Corrections can occur not just in price, but they can occur in time. You got a few quarters of more solid earnings growth behind you without prices moving up. And in fact, for the Mag 7 names, the prices came in, numerator down, denominator up. All of a sudden, the valuation argument starts to subside. And you know what? Maybe you can say we're due for a run back up higher in valuations. So to
you got to like the GDP numbers then, because what the GDP numbers told you was that non-residential investment, which is only 14% of GDP, contributed more to the headline figure in the first quarter than consumption, which is 68% of GDP. So how fast does that non-residential component have to go? How quickly does that growth have to happen? And how sluggish does the consumer have to be that something that's 68% is contributing less to the bottom line than something that is 14%, right? That little piece there,
but it doesn't matter.
It's surging. That little piece is surging.
Has any recession in U.S. history started with a decline in consumption? No, it started with a decline in business investment every time. And so business investment is surging right now.
This is the thing. So you got to like those Q1 numbers, because at face value, you look at this and you go, right, what am I learning from these numbers? I am learning that you can build your way out of a consumer slump as long as you need more data centers. And boy, do you need more data centers.
Oh, yeah.
So
that's the rebound story right there.
So
how can you justify these
your
valuations?
Bullish narrative if you wanted one. Now, am I going to naysay that bullish narrative? Of course I am, because it makes no sense.
Well, peep the nape for a second. Let me get through this valuation argument. 24 PE a few weeks ago in the Mag 7 names. It's only 26.8 right now.
Yeah.
Only 26.8 right now at yesterday's close. The highs that we had in 2025 were 32. For the S&P 500 large cap, the forward PE a few weeks ago bottomed out around 19.5. It's currently 20.7. It peaked last year at 23. So when I'm looking at what we're seeing, you just laid out the argument in GDP, right? The consumers are slowing down, but the businesses are just raking in the money. So
you can see it working. It's not like this isn't like a hypothetical argument. It's in the data.
It's in the data. It's in the earnings. It's in the numbers. NASDAQ 27,883. This is sitting at an all-time high right now as we talk, 72, 81, 82. The Russell likewise having a nice little bit of a day, and that had a really strong performance yesterday with that bullish engulfing bar Q reversal. We move below the Wednesday low. We close above the Wednesday high. It occurs in that little space right above that 1 month moving average. And now we're cycling
really like
into
the GDP numbers in the Russell.
and the Caterpillar earnings themselves, right? You see, the demand for our products going through the roof because of the data center construction. Look at what's happening right now with the exports in the Gulf because of what's happening with the Iran war. Right, domestic production of energy is going up, but that does speak to a world where deglobalization and higher tariffs and supply chain issues, companies that have domestic footing may be on safer ground than those that have significant foreign exposure, as it were, if you're in shipping or manufacturing. The Russell is highly domestically concentrated right now, even if interest rates are staying up. So this is going to be a cycle high close to the Russell 2000 here today. It could be, right? Not the high print of the year, but the high close print of the year. Where is the occasion when small caps are closing at the highs of the year and telecom is closing at the highs of all time and semiconductors are closing at the highs of all time? And hey, there your industrials are trying to break out, but we're getting close. And seasonally, we're in a bullish period and there's no volume and volatility staying low. Until we get that catalyst, you're standing in front of a freight train.
You need a catalyst. You need a catalyst. By the way, that catalyst does not need to be event risk because sometimes sentiment is its own catalyst. I mean, it's important to remember for those of you that are playing the home game, when the 2008 crisis started, we're not talking about the kind of rolling issues in the mortgage market that we're building since you could already start to see them from the 04, 05 tightening cycle into sort of late 05, 06, stocks topped in 07. You could see that then. But the real kind of holy moly, we're about to have the meltdown of capitalism part of the story, that happens in July of 08 for no reason. There is no event. It's just in July of 08, the market goes, right, hit the fire alarm. And everything just melts. So sentiment can hit an extreme and snap for no discernible event reason, but you do need that to happen. These types of things don't, as you often say, these types of things don't happen gradually. Markets don't gradually sell; they panic sell. It's got to be a panic.
Panic sell. Oh yeah, when it comes, it would be a panic. But right now, I mean, I'm looking at
there is no panic here. Clearly,
this isn't panic. There are more bears than bulls coming out of the AAI survey this week. There was a surge the week before, but
I'm going to invoke the Meisler here.
It's 300 people.
I'm calling it the Meisler now. The Meisler defense, as it were.
Meisler defense. I like that. I'm trying to look through the CFTC.
People refer to the Shaggy defense. This is the Meisler defense.
I'm not seeing anything in the CFTC COT report saying that positioning is overbaked to the upside. So
probably not, because there's no volume in this market. Who's positioned to the upside when nobody is trying to buy this thing? Ooh.
No one's trying to buy it, but there's also no one's trying to sell it either.
That's true.
Futures positioning is very flat. There are places in the futures market where you're looking at, positioning that's like a standard deviation removed from the 10-year average, but not in stocks. Stocks are like right at the 54th percentile still. We'll get an update in about an hour and a half time from the CFTC. But it's just one of the surprises here. The stock market and the positioning, not enough for a big short covering rally, not to say that everyone's too long. You look at these sentiment surveys. In any event, Elia, today, bonds here are a little bit stronger on the session, or at least they were, in part because oil prices have come off. We get that nice little gap open higher here in the bond market. And that's really all we can say about it. That's it.
Happily, they've unraveled. Those of us that are on the short side, we're looking at the price action this morning going, wait a second, you're going to unravel the war trade on a Friday? You need to rethink this whole thing. Thankfully, they have.
Bonds started leaking lower. Notes started leaking lower a few days ago. They lost that traction below the former yearly lows, and they began treating it as resistance. Same thing for the 1 week to 1 month. And, even with yesterday's bounce back and today's gap open higher, you can see here in notes, we're still trading below our 1 week average. In bonds, it's a little bit better, but
we're still holding
below the
that
1 week.
underside. The failed breakout is there on both, to my delight, because I'm short.
It doesn't exactly look like the market's ready to say everything's okay.
Well, of course it's not. Again, stocks are the only place right now, which is why I'm naysaying them. There is no conviction here. Stocks are the only place where you have the AI flavored earnings season and a focus away from the war. Gee, I wonder if those things are connected. You don't have an AI flavored earnings season elsewhere, so everywhere else is like, yeah, this war it's a big deal. Of course it's a big deal. Just listen to central banks this week. Every single one of them was hawkish.
All of them were at the margin, and even the Fed trying to get more hawkish at the margin.
Oh, Powell, despite the fact that he had jokes, which was great, but solid dad joke material from Jay Powell this week. But I'm
glad you clarified that they were solid dad joke material, which we know.
No, it wasn't. Listen,
a good joke.
Jerry Seinfeld, he is not, but solid dad joke material. But you look at this, and what are all of them saying? Yeah, so the inflation impetus is already there. We're not even talking about rate cuts, and all of us are kind of the view that either it's time to hike or it's time to start talking about needing to hike. I mean, somebody at the Bank of England actually dissented in favor of a hike already. The ECB was saying, listen, we're not going anywhere in a hurry. Our economy is shrinking, but if you think we're cutting anything, Godspeed. And the message out of the Fed was, this was a really tough debate. And we got 4 dissents. I mean, obviously, one of them is the obvious. Stephen Meehan, I only like to move rates in one direction dissent. But 3 policymakers dissented, not because they wanted to do something with rates that was different. They dissented because they didn't like that the statement was too dovish in its language. They wanted more hawkish language to tell the markets, hey, you better buckle up because we might have to hike here.
Well, a few days ago, we were asking the question, is it worth it when you look at bonds and notes and try to find something to do right now? The technical direction looks like it's leaning over, so being short call spreads is one thing for a move to the downside. You could also just short ZN or ZB futures. But what if we were saying like, well, oil, I want to express the view here that the war's, not going to get much worse. We're kind of in a steady state right now. Is it even appealing to look underneath the recent lows, right? Should we be looking under ZN, ZB? So 109.
I think actually the bonds make a lot more sense. I think that's a great question. I think the bonds make a lot more sense to express this view than oil itself, because oil is kind of the star of the story.
The pricing's crap. That's the problem here.
It is crap.
You're not getting good risk to reward. Like I can go out, if I go right underneath the recent low, so 109, 109.5 at 56 days, which is the closest to 45 and 21 out, you're calling the low and you're only getting a 3-to-1 risk to reward. I mean, it's a 77% probability of profit. And for risking 3 to make 1 at 77%, that's usually closer to like 4-to-1 or 5-to-1. So there is appeal there, but you are saying that this low needs to work out. Like that is the low. We are not going to.
Oh no, I would be betting the opposite direction.
Right. So ZB,
I would be looking at this as saying an upside breakout has failed. This is a short.
Right. So the selling vol perspective here, maybe you go out to 56.
I mean, maybe you sell calls.
You could sell calls, thinking about just what a short iron condor would look like, 108, 109, going through 117, 118. There's some things to do, but I don't know if there's, do you want to take the big directional swing and say, we're definitely going to break through the lows? What if we have a deal signed this weekend, Ilya, and oil drops $15? Bonds are probably going to stay up. And then the odds of them retesting 111.5 in ZB are smaller than we presumed. So, and then also getting a move back to like 119, what are the odds of that happening if we don't have a recession? Also probably very limited given the backdrop of supply chain issues and inflation. So a lot of chop here I don't see them going anywhere fast. I think yields are going to be stuck for a good while until we get a great deal more information or significant directional course change in inflation or labor market data.
I mean, if you look at ZN, right, and you go, let's say you give yourself some time. So you go 56 days out, right? Because, again, these are choppy markets. And you look, let's say, to sell the 110 to 112 call vertical. You can get into all kinds of upside down situations here. I mean, this is 2 to 1 the wrong way. But is it liquid? Yes. And you do get paid, and vol's not that high. So if you wanted to say, okay, you know what, instead, I'm going to do the long put side of it. And again, it's liquid. So you could say, okay, let's do the 110 to 108. I mean, you can get 3 to 1 risk reward.
But you're playing what? You're playing for immediate drop?
I mean, you're looking, I mean, so you're 56 days out. Okay. And so if you give yourself that much time, what you're essentially saying is, look, take me back to the lows from March. And that's really it. And it's not bad.
It's not bad. It's not bad.
It's not bad. I mean, you
we're
have
not really
better,
going anywhere.
You have better than 2 to 1 risk reward. You're not asking too much. All you're saying is, I heard all these central banks. They didn't sound like they were kidding. That's it.
Yeah.
That's all you're saying.
If the central banks aren't kidding and they start raising rates aggressively, do we get higher or lower inflation and growth expectations at the long end of the curve? Probably lower.
Probably
right?
lower, but
we get a twisting. We get a twisting of the curve, right? We got a flattening of the yield curve.
Yeah. Yeah.
I don't know. I don't love bonds. Maybe the directionally neutral stuff, but here for me, this feels like it's moving so slowly, catching a falling knife. I want to go over to oil here because it's still above 100. Brent went above 110 again today in the early hours. We do see that it does pull back in like we had yesterday, where yesterday in the BZ N6 contract, although M6 would be the front month here, you could see that today we're getting back down to 1. Yesterday was 114 at the close after briefly touching up at 126.10. So now that we're in the N6, back to 107.75, that was at 112.43 today. So that's like the global benchmark, Ilya, that everyone actually cares about. The one that we actually trade is crude itself, CL. Had a nice little bit of a breakout over the past few days. The M6 contract we see here down at 101.42.
This thinking.
This would be the place to maybe buy because one, you have former highs as a breakout point. If you're thinking about this from a technician's perspective, two, you get to close here on April 21st back above your 1 week moving average. We've closed above it every session since then. Today, we finally retested it after running a little bit too far away yesterday. And today, where would we close? 101.32. The 1 week moving average is 101.38. So we're kind of getting pinned there, almost to suggest that the trend isn't over right now. Yeah. I know there are headlines here suggesting that the U.S. and Iran are talking again and exchanging ideas heading into the weekend, which is always good. We don't want to fight. I want to revisit something that we spoke about at the start of the week, how Iran may be trying to pull together an offer. They made their trip to Islamabad. They then go to Moscow.
Interestingly.
They went to Jamal and I spoke about this on First Call on Sunday, right? So they go to Islamabad, the negotiators. They say, we're going to go get a plan in place. They go to Russia, say, you're going to take our nuclear material. They go to Oman, they go to Muscat, and they say, we're going to run this straight together. They go back to Islamabad and say, we have people on board to help end the war, bring this back to the United States. Today, we have that headline. A deal is being discussed, whether or not it actually materializes, but it's following that cadence right now.
Yeah.
And so I'm not necessarily looking at this as something to buy the dip. I think we got our little burst higher, and maybe we should be looking at selling some calls here. I still have some short-term exposure that's working out just neatly in oil. It's been working out really well. I have some short puts down here, got some short call spread over here, 148, 150. Can't believe I was able to sell those, and we'll be able to take them off at a profit. But that's kind of the point where, because we've had this pullback and given the state of the headlines and how we're moving along a prescribed path that would be towards a legitimate off-ramp, I think that we should be thinking about selling the calls up here rather than looking to sell the puts right now, Ilya. But I think you have it differently. You want some long deltas as we get back to our weekly average.
Yeah. I mean, I don't think we're even. Let's say we get a peace deal. Okay?
Mm-hmm.
Let's say we get one today. I still think oil is going higher. Because the consequences of what has been destroyed here and disrupted aren't even halfway to being realized, in my mind.
Sure.
We've burned through almost all the strategic reserves in places like Japan and Korea. We have burned through almost all of the storage that was sitting out there at sea when this whole thing started. And here's the kicker. Remember the pirates, right? Remember the Houthis. There was a deal with the Houthis last year. Traffic through the Red Sea hasn't come back to levels before they started those attacks still. Because nobody knows. Nobody's comfortable saying nobody's comfortable saying this is back. Now, okay,
look
let's
at
say
ammonia futures here on the screen. Ammonia futures. Right. Okay. Yeah. Do those look like the supply problem is dissipating?
Right. Exactly. I mean, let's take a look at our favorite ETF, BWET, the cost of tanker shipping. And you tell me that this thing is solved. Okay?
Yeah.
So
TJP, DBC, anything commodity
you look
related,
at this and you go, okay,
is ripping.
Tankers come out of the Gulf. Great. Who's going to send their tankers back in?
Oh, no one right now. That's why they're all going to the Gulf here.
I'm saying the war is over. It ends right now. All the tankers are able to leave the Gulf. Who is setting an empty tanker back in?
No, not until
for at least a few months.
Till they can do minesweeping operations, until they can guarantee freedom of navigation.
Yeah.
There are IRGC units that are getting, decentralized commands. So who's to say that once a peace deal is signed, that various factions will keep firing rockets off?
People take issue when I say that there is clearly a situation in Iran where the regime is not speaking with one voice. And frankly, those people are engaged in just the most blind exercise in wishful thinking that you could imagine. Because you can see with the naked eye that some parts of Iran say one thing and then other parts of Iran do another thing. And you've been watching this since the beginning of the war. Now, you can have your politics, but you can't have your own reality. And that's just it. It's unclear because Iran has given its commanders a lot of leeway here. Lots of the leadership has been killed. And so the directive from Tehran, it seems, has been figure it out. And some commanders have figured it out one way and other commanders have figured it out otherwise. This is not going to be easy. This is not going to be quick. This disruption isn't going away. So for me, this is a buying opportunity.
Well, from a pure technical perspective, ticker agnostic, former swing highs that we had here in early April, we broke through earlier this week, treated them as resistance. The 28th, got our breakout on Wednesday. Yesterday, got our close through. And today, retesting them. 1 week is through there, and we could be potentially putting a close on the other side. If this was a stock chart, Ilya, if this was the S&P 500, you'd be buying with a stop under today's low. Yeah, and that's how you know you're wrong. But there's also the consequence, Ilya, that because we're heading into a weekend, if you're trying to buy the dip right now, this is also one of my considerations. If I'm trying to buy the dip and I'm thinking about what are the probabilistic outcomes right now? No change over the weekend. So the market kind of just holds around here, maybe comes in a little bit more. There's a re-escalation of the war. Israel news has been talking about needing to rebomb Iran again. So maybe Israel decides the negotiation. Didn't they just declare the negotiation, not even being a party to the negotiations? They're like, well, the negotiations
nobody invited them to the talks. I don't know why we're listening to what the Israelis are saying in this case. Nobody's let them in the room.
They're like Frank and It's Always Sunny in Philly. Anyway, so I started shooting again. Okay, so
I like how the conversation in some of the media has been that Israel pulled America into this thing. Nobody even invited the Israelis to come talk about it.
Well, the State Department did put out a release. The official State Department standing is that the United States engaged in the war at the request of Israel. That's another story. So
that's a whole separate thing. But it's like, really?
What are the outcomes here over the weekend, right? No change, escalation, peace deal. If we get an escalation, this thing's going to shoot up. Are we going to go to 140, 150? No, we're probably going to clear the highs that we had on, just yesterday. If there's a ceasefire, we're probably going to clear the lows today. Yes. So do you really want to lay out a significant directionally neutral position that's tethered either to yesterday's high or today's low, saying that this is the buying breakout point or this is the top that we've got to sell? I don't feel that level of comfort going into a weekend. Oil futures are liquid. You can trade them after hours. You don't need to be tied to the NYSE schedule in order to trade them. And because of all the attention on the Iran war, folks all around the world have been trading oil futures pretty much nonstop. So I much prefer to do something directional if I'm looking at this on Sunday. It's a gamble otherwise. Just going to say it. We're trying to make informed trading decisions, Ilya. Shorting this thing against the high that we had yesterday or trying to buy it against today's low to me is a roll of the dice. Might as well wait 2 days for the market to reopen. And then if you do get your headline that shows that we're bombing Tehran or we're, ending the blockade, a carrier strike group is leaving the Middle East for what it's worth. That headline was announced today. You'll be able to react quickly as opposed to waking up with a $5 or $10 gap on Sunday. So as for me, I got nothing here. Ticker agnostic, this looks like a long narrative-wise, not doing anything in oil when we have such a critical weekend, another critical weekend around the corner.
I am looking at the long side. If I can structure a trade, I'm kind of minded to structure it as a short put sort of thing, basically saying, look, we're not going to re-engage in the war, but we're also not going to have any kind of a breakthrough. We're just going to continue to watch as the market takes on the damage that's already been done. And so you get less vol, but not lower prices. And so I'm kind of minded that way, but it'll have to be the right risk reward structure. And for now, you go 48 days out, the best you can get is something like 1-to-1. And that's not good enough. You can get much better. You could get better than 2-to-1 buying calls, but then you have to buy calls.
Then you have to buy calls, which if the war ends, right? Peace deal agreed upon, President Trump flying to Pakistan to sign it himself. Those calls are going to have no hope of recovering. Whereas if I'm short puts because of the supply demand dynamics, as we've seen so many times in recent weeks, where we get the headline and we get the headline and we get the headline, and yet it's like, okay, but are the molecules moving yet? No. Oil can't move much, can't fall much further because demand's at this level and supply is down here. And just thinking about a simple supply and demand adjustment model, that means there has to be a higher price in oil from where we were before the war by 15, by 20%. And sure enough, treating 80 as a floor relative to where we were trading before oil, before the war started, has worked out very, very well. Ilya, we're going to keep moving along here, though. Natural gas remains on the watch list. In this NGM6 contract, it's a move through 290, where we actually see more liquidity now as we're moving out into time. The N6 contract, the July expiry, it's about 320. In either case, Ilya, what I'm watching for here in a very low very low volatility environment here in natural gas would be some evidence that we're turning a corner and breaking a downtrend. I like the idea of getting maybe an out of the money lotto ticket here on the long side of natural gas, because when this thing moves, it really does move. And with only a 15.8 IVR, how often do we get vol this cheap in natural gas where we could put on a meaningful position that could get some movement here? It's why I'm watching 3.2. It's the low that you have here in January. It's the swing high where we get pinned in April and then get rejected on the 22nd with our 1 month moving average. If we were to get through there, we'd be breaking out of the downtrend over the course of the year. We'd be back to the former swing low. We may have turned a corner of sorts. So this is still watch listed for me, but looking at it like 55 days, looking even further, going out towards the 1 standard deviation move, I like the idea of maybe laying down $100 or $200 or maybe a 4-to-1, risking 1 to make 4 on something if we get a little bit of a turn of corn and a pop here in vol, in price, maybe a bit of both.
As you know, this is not one of those things I like to trade because it moves as rapidly as it does. So it doesn't really jive with my strategy. I think if you look at this thing here and you go, okay, if it's going to pop, it's got to cross some lines here.
Exactly.
And maybe what you do is you look at essentially out of the money exposure. Maybe you look to just say, you know what, if it gets to, let's call it $3.40, maybe I want to own that chunk, let's say from
just a chunk.
3.4 to 3.8.
Yeah, I mean, it's not even that the price is going to go there. It's just that the options are underpriced relative to what the chart says they should do.
Yeah,
and so
that's it.
Give yourself
all
enough
you're
time.
saying is, look, I just want to own that piece of it.
Exactly.
I want to own getting back into that congestion, which, by the way, I'm not going to do.
No.
And it's because I don't like natural gas as an instrument. It's not because it's a good idea, bad idea. That's just not a thing where I'm going to send capital, because my approach requires being more nimble.
Ilya, we had a bounce back yesterday in gold. It was the first time that we had a higher close in 8 sessions. Today could be day number 2 with a higher close, but much ado about nothing, higher by 0.06%. Silver is up by 3% or so, but it hasn't turned a corner yet. Probably not. It's not the way that we've been looking at that corner. It's been 77.5 up to about 79 or so. Not really loving what we're seeing in gold and silver still. Copper's a different story. I still have some long deltas in here vis-a-vis a short put spread. I'm waiting to see if this holds the 1 week, the 1 month, the 50-day moving average down here, 590 up to about $6. In that regard, we are still holding. We are catching this level, and as long as we do maintain that, I'm going to stay on the long side right now. It kind of reminds me what's happening here, by the way, on the chart. In early April, we ran up into the 1 month, into the 50-day, and then we kind of catch as resistance before finally making the decision. Hopefully we don't catch over here for too long, because then it really feels like the market's trying to push back down lower. But yeah, I like this still. Thomas Westwater convinced me to get into it. He laid out an interesting case, so I stick there. I know that you don't have anything going on in copper, and I know that you want to talk FX, so we're just going to zoom ahead to that, which let's talk yen here. Yesterday, we got yen intervention. Today, we have the yen as the worst performing major currency on the board. Ilya, global bond yields are high and oil prices are still elevated. Japan is a net energy importer. In what world is an intervention like this going to stick? As
it's not going to stick.
Yes or no for time?
It's not going to stick.
Okay.
The Bank of Japan.
We've recovered 20% of the move already.
The Bank of Japan is a smart central bank. This felt like it was a chin check, because the Bank of Japan has learned years ago not to fight markets, but instead to wait for the markets to get to whatever level of maximum stupid that markets get. And when they start to unravel, to then kick them while they're down. So what the Bank of Japan does when it wants effective intervention is it waits for the markets to get to an exhaustion point on whatever move they don't like. And then when the markets start to go the direction that the BOJ wants them to go, they help with a nice big dollop of money.
Well,
this is not.
Did you notice yesterday that every time there was a big swing in the yen, there was a commensurate big swing in oil futures too?
Yes.
Like they were leaning on
somebody's algo was acting up.
Like they were leaning on the oil futures, as well as the yen side of things, because
very possible.
The traders wouldn't buy the yen move higher if they saw oil sticking up. So they had to pull both at the same time. Japan's playing a dangerous game. They're playing a really dangerous game.
Well, if they're playing a dangerous game, I think
they're playing the game. I'm going to say it, given what we know in our experience in markets.
No, they're playing the game. I wonder if they're playing it if they're playing it to win, or if what they wanted to do here was to let everybody know what time it is. To basically say, like, look, it could happen. Don't just assume that we're asleep. We might hurt you over a 24-hour period. And
I love that. The Bank of Japan's new operating slogan is "Worse things have happened to better people. Be careful."
That's right. That's right. Like you think this thing is? It's sort of like what Powell did with the October 29th FOMC when he came out, didn't do anything. He just came out and said, "You know how I always come out here and say the same thing? I'm saying more than that now. Buyer beware." And then stocks didn't do anything for 4 months. It feels like the BOJ is doing something like that here, where they're coming out and going, we're not saying we're going to fight the yen. We're saying on any given day, if you are shorted, we might kick you right where you don't want us to. So just, know that.
Ilya, calendar for next week. Not correct image there, so I'm just going to read it off. Monday the 4th. Nothing. It's all about Europe. There are ECB annual reports, surveys due, speeches. Sunday, you're going to have ECB's Lagarde speaking, BOC's Macklem speaking. We go into Tuesday, the RBA rate decision, so we'll have time to talk about that. But this is the ECOFIN meeting that typically takes place, and yada, yada, yada. Their annual reports coming out.
It's all about the ISMs and the jobs data next week, and that's later.
We're done here. We'll be back in an hour. Taking a quick break. Last call is at 3:30 Eastern, 2:30 Central. Until then, good luck trading and keep watching Tasty Live. We'll see you soon.
See you there.
Nikki, we are back, son. And you know what that means? Time for a little bit more Tasty Live with the Fast Market. You were very late.
Really late. Yeah. I'm just looking at things because things are moving. I close off a Micron butterfly that I had.
I saw that $5 and change here.
I did it in all three of them.
That's got to be a good trade because there's no way you're paying $5 for a butterfly.
No, it was a double up. I mean, I debated if I was going to hold it
on a zero day.
Yeah,
that's nice.
I have them. I'm losing on the SanDisk and Western Digital ones, so it's net basically a scratch. But I've got lottery tickets into the end of the day. I mean, the way these things move, SanDisk being at 1,200 at the end of the day today is all but a given.
Let me show you how perfectly priced these butterflies are. Here it is trading for around $5 and change. The expected move is something like $13. Your spread you have here is about $15. I mean, not about $15. It is $15. So it can go to $1,500, and we're about $3 or $4 under your mid strike. It's exactly perfect.
Yeah.
I mean, it's just a flip of the coin, whether you think we're going to rally and sit. Like, remember, if you go to 40, you only make $10. If you go down to 30, you make $10. It's a tough one to hold. That's why these butterflies look so great on risk graphs, and it's a great trade if you manage it and set it and trade it and forget it. Like you can't look at it to the end of the day and say what coulda, shoulda, woulda.
Yeah. That's all I got for now.
Okay. It's okay. We played the music. You got your dime, your dance floor ready to go. Dow's a little bit weaker. Even the S&Ps are a little bit stronger.
NASDAQ just rallied 40 hand. This has been one for the ages.
This has been one for, like we said, I mean, it's one of the biggest, if not the biggest moves in a month. I know we're in a new month now that we've ever seen.
This has been just incredible.
Yeah.
Agreed. Okay, should we do it?
Yeah, I'm ready.
Fast market. Let's do the trades.
Yep.
First one.
We are looking at FCX. Got IV, great IV. I almost said rich IV, but great IV, rich premium, and low stock price. I'm keeping it simple and selling the 55 puts. FCX, also known as Freeport McMoran, a copper play, down 82 cents today. That doesn't sound like a lot, but it is almost a 1.5% move. And they are correct, Jake in Omaha. This stock has gone from 70 to under 60 to 57, where it is right now, without an uptick. What do you think about FCX? Once a beloved stock with a correlation of 0.75 to the equity market. So a high correlation to the market, has not participated. I kind of like his call here.
I like it as well. I mean, it's copper. I'm long metals in general, so kind of fits my assumption. So I did it. I also think, you've got volatility at IV rank of 54, but the options look pretty cheap here.
Yeah.
I think I might do like a little diagonal spread in addition. I guess you would call this a stupid.
Mm-hmm.
But I'm going to do the 60-65 diagonal spread using July and June.
Mm-hmm.
So a long duration. I mean, this trade, I did it at $2.48 debit. If you're in a Johnny sized account and you like this assumption, that's how I would do it. Because the put is relatively capital efficient, but this diagonal spread, cheapy way to get some long delta here.
And look at you going out to 77 days.
Yeah. I mean, you're in no man's land right now.
And you paid $2.46 for it, right? It's got 20 long deltas, 21 long deltas to it.
If volatility was a little higher, I would probably stay in the May. But I'm talking market volatility. I mean, here you got a decent IV rank, but it's not high by market standards at this point.
And what you sold did you do something with puts in FCX?
Yeah, I did the 55 strike puts. They were looking at. I just added a little bit of extra, a little extra
oomph, a little extra convexity.
Yeah, the Super Bowl.
Like to talk about?
Yeah, the Super Bowl.
Perfect. Awesome. Good job out of you. All right, next one, please. Even the S&P just made a new high. They're up 35 right now, about $1.50 off of their highs.
You can't stop it. You cannot stop it. Some of these stocks are moving unbelievably.
Agreed. Highest IVR on the board here, selling the June Iron Condor 70-80 put spread and the 20-30, 120, 130. Never thought I would say that in Intel in my life.
Unbelievable.
For a credit of 337. Intel, go.
I'm not adding to my Intel position. I am locked and loaded. I'm net short delta. That's all I got for you here. Yeah.
That's fair enough. I don't Matt, Atlanta, Georgia, I don't mind your Iron Condor. It certainly fits. You have all the criteria there. I might be a little bit directionally here too, with some sort of trade.
Yeah.
I don't mind the Iron Condor, but I would probably abstain from Intel too. Next one, please. USO, here you go. Bearish. Well, I hope you did this yesterday. Oil.
I mean, something's happening. Oil's moving
Down $4 and change. Market catching a bid here.
Did we get another Axios report? our inside source from the American version of the CCP.
Yeah, you're right. Go back one slide. You touched something, production. Sorry, we got to go to USO. We're on slide 3. Slide 3. Production might be waxing.
Oh, here we go.
There we go. Bearish in USO. We hope you did that. It is down about 4% right now. Oil feels a little heavy. Chris in Austin, Texas, you know your stuff. After that parabolic run, but I'm not pressing the downside too hard. A 120-200 strangle gives it plenty of room. I mean, now strangle's not usually a bullish strategy, but go.
So I am locked and loaded in USO. I'm long June calls, short May against them in a multiple of like 3. It's working obviously very well today. I actually, we're not there yet, but do I take some of this off? Yeah. All right. So I'm going to take some of the tail calls off the table. I don't hate the trade. I mean, oil volatility has come in really significantly, and I'm short volatility here with the front, but I'm not adding to my position here. I'm not adding to my position. So
yeah, OVX CGI, where do you think it is? It was 70 the other day.
65.
Not quite. It's still 73, but it is down almost 3%. OVX CGI is the volatility on /CL oil options.
Okay.
Good job out of you. Next one, please. SPX. We didn't do one. Yeah, PMI came out. My Taiwanese sources told me that didn't move anything. Bonds are 113. Market's rallying. I think more out of oil going lower, although the market didn't go lower because oil was going higher. So maybe the market's just doing what the market wants to do, and oil's doing what it wants to do. PMI comes out at 840. What'd you do?
I just closed out of the gold 30 handles.
Scalpy?
Yeah.
Gold up $6. You horse.
I mean, things are just moving so quick, dude. I don't know. I don't know what to tell you. It's just I'm trying. I'm doing my best. You know,
you've been scalping. Great. What are you talking about?
It's just whew.
No, you've been doing good.
I'm not even reading the slides because things are just moving. I mean, you're looking at stuff that's moving $20 a clip. I got the
and not just the market. Bitcoin, by the way, 79,000.
Oh my God.
Yeah. Yep. Everything seems to be going a little bit higher. All assets is what I'm talking about.
Yeah.
What do we got here? PMI coming out at 845. Then I'm putting on a neutral iron condor. Happy Friday bats. What do you think? We
good luck.
We put one on at 9. What's that?
I said good luck.
Okay. All right. You're gonna hold that.
I'm not touching anything in zero.
You're not ruining your weekend?
No.
Well, let me give you a reason why maybe you don't want to ruin your weekend. Even the S&P's expected move for right now is $20. Remember when we did it yesterday, it was 34. It didn't work for us yesterday. Hopefully it works for our friend here, Ryan in San Diego.
That was the Western
Digital. You're selling your
Yeah, I'm gonna basically hit all these. This market. I mean, it's amazing. I love it.
Digital up $8 after being down earlier.
It's the stupidest thing I've ever seen, though. I love it. This market.
Western Digital has rallied $40 in the last half an hour.
It's unbelievable.
It really is.
I just closed the SanDisk one too.
SanDisk 285 and 350 on both of those. Good job out of you. $5 and change on the other one. You got yourself a little bit of a monster there. So good job out of you. Even the S&P's up 50. Nasdaq.
Why not? They should be up 500. But the market's never going down again.
It is up 500, but that was for the month. A little bit more than that.
It's unbelievable.
Mm-hmm.
I mean, it's just.
Yeah, I mean, listen, you put on a neutral trade like our friend wanted to do an Intel in just about any stock that you have here.
You're getting murdered. You can't sell.
Yeah, because you have short delta. Yes.
You have to be doing diagonal spreads.
Well, you have to be directional, is what it's coming down to. It's just the moves have just been too great everywhere.
You just cannot take the tail risk.
You just can't take the tail risk
in either direction.
You are correct.
It's just you can't do it. Next one here.
Gold GLD up $2 now after being down $1 and change.
I wish I left my oil long on. My God.
Right. Unbelievable.
E-mini is going to be 7,300. Unfreaking real. Unbelievable.
Crazy move here across the board here in the whole market here. Can we interrupt this just to see what's
sure.
not participating in the market for just a quick second? Roblox still down about $10 or so, about $4 off of its lows, down 20%. That's a big move. Qualcomm down 7%. USO obviously down 6% with oil now flirting with 180. OKLO used to be a thorn on your side, down 2 and change. All the oil-related products are lower also. And then you're going to have just about everything else going higher here. It looks very broad-based. SanDisk now up $50. Light has been a lead in the clubhouse, up 60. Reddit up 11. Costco up 12. Apple up 13. Talked about the market not going down when Apple was up 10. Market's not going down when Apple's up 13.
No. This is just incredible.
It is remarkable.
All right, next slide here.
All right, next slide here.
PDD.
Oof, what do you think about PDD? They're Tyler's bullish, no earnings in the way, and I like the medium term setup. July, June, bullish diagonal. PDD, not one of my go-tos. It's actually down 50 cents. Hasn't caught itself a bid at all, ever.
Oh my God.
Correlation is actually negative to the market, so that makes sense.
Bullish June, July diagonal spread. Okay.
Mm-hmm. What do you think? What do you hear? What do you say?
I'm thinking the 100, 110.
Okay. Bang
them out. There we go. I did a 487.
Beautiful. You push that through. You're the man.
Yes, it's going through.
All right. Awesome. Next one, please. Good trade in PDD.
Thank you.
Oracle, kind of bullish here, but I wanted the short put down at 140. June Jade Lizard with the 80-85 call spread could work. Kyle, Boise, Idaho, Oracle, ORCL up around $7, $6.70. Well, I hope you put this on yesterday.
Yes. If you put it on yesterday, it certainly worked.
Yeah.
Give me 1 second here.
No worries. Go. Don't worry about it. Taking a look across the board here. There's no ick anywhere unless you're in the Russell. It's only up 5. Volatility in by 18 cents, about 10 cents off its lows.
Okay,
Bonds are up 14.
They're looking at a Jade Lizard into earnings.
Mm-hmm.
We'd go in June. Okay. 140. Okay. It'll be a pseudo Jade Lizard. I sold the 140. I did the 180, 190 call spread.
Beautiful.
732.
You do.
So you have a little bit of upside risk, but it's more neutral than it is anything else.
Very nice. I like it. Cool. Good job out of you. I closed my Gold diagonal I had on. I needed that rally, so thank you for bringing it to my attention. Made a couple bucks in there. And I closed my bond short puts that I put on from about 2-3 days ago on my option trades today. All those trades every day. Forget about Tuesday and Thursday. You wanted it, you got it. Monday through Friday. EEM now. What are you doing in there?
EEM. I have the most junky position there. I'm right at the money with a call ratio spread, a little tight one. June 58-68 strangle. I can't touch this.
I agree with you.
These markets are just not that great.
Market, I'm not going to EEM.
No. Next one, please.
UAL, betting the airline recovery soon. IV rank is good, but not extreme. So a June, July, 105, 100 diagonal fits the setup. What do you think?
I do have some short puts here. So I am long. These markets stink. Look at the July options. They're $3 wide. I don't know what is. I don't know what's happening here.
I don't know what's happening either.
So I got to pass on this one.
Okay. I don't blame you. You're allowed. Next one, please. CRCL be number 9 of 10 long term. I'm super bullish on CRCL. This is Luke in Kansas City, Mo. 100 covered call. What do you think about that? Capital intensive, relative, but what do you think? Maybe a poor man's covered call if you want to get super bullish with my man Luke, who's less buying power.
I actually am just going to close out of this diagonal spread that I had.
Okay. You can do that.
I want to do covered call in June, long term.
That's right, long term.
I will entertain this with a diagonal spread. I mean, the volatility is there. So I'm going to roll this. I'm basically rolling. I had a short-term diagonal spread. I did it actually as a crab trade. I took like $100 out of that into the rally today. I'm going to roll that, basically the same amount of capital, into a July, June 100, 120 diagonal spread. So basically just pushed it out in time, gave myself a little bit more, more time to be right on it.
Okay. Me likey. Good job, Eddie.
Thank you.
Next one, please, and the last one. We're looking at silver, neutral, trying to stay delta neutral, but leave more room to the upside. Well, you are right there. Silver is up big. It's been up a lot more than gold this morning. It's up almost 4%, 2.79. That's a huge move in silver. All of these commodities have really gotten themselves a little bit of a relief, not a relief rally. They've moved up with the market right now. They haven't been as of late. Selling the June 6078 strangle. What do you think? SLV, smaller product than /SI.
I am going to go to the 6080. Do it a little bit more neutral. I mean, there's still slightly short delta.
Sure.
Because of the call skew, but I'm with you. I did the 6080 at 291.
Okie dokie. Good job out of you. I mean, that's all of it, I believe.
Cool.
I like it. Nice.
Perfect.
Nice work out of you.
Thank you. Nice work out of you.
I mean, this graph or this recap doesn't do you justice. You were on fire. Matter of fact, you've made a bunch of trades already this morning, a bunch of scalps already this morning.
Yeah.
Good trading show. You've made over 20 trades today, taking a couple of profits in different places. Been very nice. Good job by you.
Some things are just moving very, very fast.
It's redunculous.
Crazy.
Let's take a quick 90-second break and come back. We got more Tasty Live as even the S&Ps are up 50 handles. NASDAQ up 290. I'm rounding up by 50 cents. NASDAQ not moving up 2. Dow up 238. Volatility in by 23 cents going into the weekend. Bonds up 16 ticks to 113.11. If you sold puts with me 2 days ago, those have all come to fruition. Do as you may there. Bitcoin up $2,400. Oil down $4.78, flirted with 100. It's $100.28. Got down to 110 cents. Don't fill up your tank today.
Wait till Monday when they adjust it down by 3 cents.
That's right. We'll be back in 90 seconds with Tasty Live. Market measure next. Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with the market measure. Don't look now. Even the S&Ps are up. Oil under 100, 99.74. Don't fill up your gas tanks. I don't know if you guys caught that before you went to maybe go get your coffee or something like that. Don't fill up your gas tank today. It's still going to reflect yesterday's prices at the pump. Wait until Saturday or Sunday when it goes down to 3 to 5 cents.
Thank you for that PSA.
Yeah.
Really good.
Saving your money everywhere.
Amazing.
Saving your money everywhere. But you do you.
God, gold's up 40 now.
Gold up 40.
Jesus.
46.70. It's an asset, all asset.
It is buy everything. You cannot miss today.
No.
How do they keep vol this high? How? Do they smash it into the close today? I mean, like,
probably not going into the weekend is my guess, but hey, who knows? I mean, right now volatility down 20. We haven't even made new lows on volatility for the day.
It's crazy.
Yep.
All right, market measure.
Let's do it.
Yeah. Mm-hmm. All right, so we're talking about short-term jade lizards. It's a little harder to do in SPX, but you can buy a wing and basically make it into a jade lizard in terms of defining risk, but we're going to take a look at that here. So obviously in the morning, you got a ton of liquidity SPX. We've done various strategies from put spreads, call spreads, iron condors. We've covered it all. We're now getting into the spicier trades, the jade lizards here. Jade lizard, it's basically a skewed iron condor. For the most part, nobody's really trading naked SPX short puts. I just don't think it's a very capital efficient way to trade. And there's probably a very small amount of people that even do it, if ever, because you can just reduce your buying power by buying a wing really significantly here. So we're going to be looking at a really wide put spread to a tighter call spread as a jade lizard here. So today we're going to look at the bullish to neutral strategy we call the jade lizard and give you a little bit of stats on that. So let's do it here.
I like jade lizards. I mean, I know Liz and Jenny get credited for
the creators.
There are some Taiwanese sources that say Tony from Mexico was instrumental and didn't have a mic or a camera in creating this too. So let's give him a little bit of props too. But it kind of makes a naked put, which at all-time highs I don't think is scary if you put any on. No. But in past markets where markets go both ways every once in a while, the jade lizard gave you a little bit more of a cushion than just the naked put. Remember, I know you're going to go through it in just a second here, but it's collecting more premium. The only problem with the jade lizard, and it's not really a problem, if the market moves in one direction, if you're putting it to the call side, means short a call spread, short a put, the put's the heavier part. If it moves quickly, you don't get the bang for your buck because that vertical spread starts to expand a little bit. But if it's a slow inside the expected move up higher, it really gives you a nice little boost. And if it goes slower down, it really gives you a little bit of a cushion. I like jade lizards when I'm on the fence for a bullish trade. You know what I mean?
For sure.
All-time highs, I'd be looking at jade lizards if I was still bullish on a stock.
For sure. For sure. Neutral to bullish.
Neutral to bullish. Yeah.
So here we're going to be doing 7-day Jade Lizards with short strikes at the expected move and either 20-point wide for the wings on the put side. We're going $20 wide on the puts, $5 on the call side, $30 wide on the put wings, and then $10 on the call side. So wider, a little bit wider spreads there. For winners are closed at 25 or 50% of the max profit, with trades being checked at the end of each trading day and then every 10 minutes throughout the day of expiration. So we're looking at end of day and then the day of expiration, we're using the 10-minute data. So we're not doing these. There's going to be a little bit of variable here because we're not getting the 10-minute data intraday. It's just too much to look at there. So we repeated the analysis with the beginning trades at 5 days and then 10 days for the comparison. So we're looking at 7-day, 5-day, and 10-day. And then all these trades are assumed to execute at mid-price, which is about as good as we can get here.
Mm-hmm. That's correct.
So the $5 wide call spread with the $20 wide put spread closed at 25% of the max profit. That's what we're looking at here. Very high win rate. Again, this is a bullish strategy in what has been a bullish market over the data set. So it's certainly going to be a positive outcome here. This is a good trade for sure. Mm-hmm. The interesting part is that you have the amount of days that you're in the trade relative to the P&L. The ones where you're starting with 5 days, you're getting the average P&L higher, and you're also getting out of the trade sooner, which sort of makes sense because it's a shorter duration trade. It's going to move faster here. The frequency, though, that you have to hold this to expiration, the 5-day expiration, is the highest of the group. So, your winners, you're taking off very quickly,
right?
But there's a lot of trades that you're holding until expiration here relative to the rest. You can see if you're starting this 10 days out, you're not holding this until expiration. And you're going to be further out of the money, so you're probably getting tested a lot less. Your losers are probably a smaller, your deviation of P&L is probably smaller relative to the 5-day, which is going to have a wider distribution, I would guess. So it just goes to show that the shorter duration is going to move faster, but a lot of them you're also going to end up holding until expiration.
All right, good. I mean, this is very encouraging. Now, you can look at it as a buying power being relatively high on a naked put, right? I mean, in a margin account, it's not going to be so significant. But since you're doing this is all in 7 days, right?
Yeah.
So since you're doing this in 7-day, for those who are like in an IRA type account that are using options to try to maximize their return, and you're doing this in 7 days, you could go out and buy that put down below. Because remember, in 7 days, you're going to be able to reduce your buying power on this exponentially because there's not that much time left to the overall trade. And you'll be able to buy that put and not use as much buying power. That would be something to look at for the crowd that has a smaller sized account, maybe even for Johnny trades or something like that next week, if we remember.
For sure. And I think this kind of shows you, too, the 7-day is better than the 10-day. Yeah. The 10-day is going to take a little bit longer in the trade. The relative amount of them that you're holding until expiration is basically the same. You're getting essentially the same win rate, the same average P&L. So 7 days is kind of where you cap out. You kind of got your 5 or 7 day is really the spot here.
Right. Very good.
Next one, please. So we're looking at the $5 wide call spread with 20-point wide put spread. And these, as you widen out the put spread into a bullish move, you're going to get higher numbers for P&L. That's what you're seeing here. Win rate, all about the same. Average P&L increases as you get shorter duration. Your average trading days in the trade gets shorter as you get shorter duration. But the frequency of holding them until the day of expiration is also going to increase. And again, you can see here, the 7 and 5 day are kind of the spot. The 10-day is really not the one to use here because you're going to be holding it a lot longer on average, and your P&L doesn't really change. Like the P&L doesn't really there's not much to add. If anything, from here, you actually don't add much from your average P&L going from 7 days to 10 days. It just makes sense to do this either 7 or 5 days. That's the spot.
Correct.
When we look at $10 wide call spreads with $30 wide put spreads, so now we're widening out that call spread a little bit, you're actually getting better average P&Ls. It tells you that, the widening out of the call spread isn't necessarily hurting you here as long as you have a wide enough put spread. Win rates high across the board. Again, you actually see a little bit of a flip. But that 5 to 7 day is probably still the spot to be. The $10 extra profit that you get, is it worth holding the trade 3 or 4 more days extra on average? Probably not. It kind of still goes to the fact that you probably want to stay in that 5 or 7 day range. It's where, the numbers are good. And the important part of being out of that trade is the most optimal.
Yeah.
Being able to cycle that capital into something else.
I mean, this supports just about everything that we talk about going wider. This is with defined risk, obviously $10 and $30, but going wider, using a little bit more buying power, less contracts you could add to this because you just went wider, right? Like if people were thinking about maybe ramping up with more contracts on the last 2 slides, because it's such a shorter dated trade, you might think about widening out your strikes. It seems to be a lot better on that. And again, no WDC risk to the upside or anything else like that because you have defined risk trade here.
I'm a glutton for pain. I'm selling E-minis here.
Up at they just traded 7,300. I don't hate it. Volatility actually uptick very, very small here, but there's really nothing that indicates we should do anything but.
Oh, this feels like the stupidest trade of all time. That's why I love it.
I agree with you. I mean, when you have a 50 handle move already and the expected move is closer to 20, I love the play. I think it's something that you'll look to manage quick enough here, right?
Just like everything else.
Just like everything else.
I mean, like you got to manage stuff quick. If it works, you take that money and run.
It's just a trade. It's not a marriage proposal.
No, definitely not.
Mm-hmm. Okay, good job out of you.
I think I got to sell some calls against my gold position here into this rally. I have some GLD calls in June.
GLD has had itself a nice little rally here. $2.85, almost a 0.75% move.
So, did we look at this one? No. $10 wide with 30-point wide put spread closed at 50% of the max profit. You're obviously going to increase your average P&L. Days in the trade is going to be longer across the board, but you can see again, it's the same story. The 7 and 5 day, that's the spot you want to be on these.
Yep. That's where you want to be. Seems pretty definitive.
Yes. Couple takeaways. So the Jade Lizards held up well, and when the winners were taken as early as 25%, trades could usually be closed and the capital redeployed before they even reached 0 DTE. So that's one of the things with a lower profit target, you're going to be able to cycle through these trades a lot quicker. Staying for 50% of the profit meant staying in the trade, staying active through the expiration of that trade. It's a caveat, right? So you want to be out of these trades quick enough to redeploy that trade. If you're waiting a little bit too much, it's not going to give you as much bang for your buck as it will cycling out of these trades. It goes with everything we talk about of like not trying to take every penny out of every trade that you get, because you want to close that trade and redeploy it into a higher opportunity position, and that's really what we showed here. Using wider legs also brought home more total profits, but about in line with the increase in buying power, so making the two approaches similarly capital efficient. I think the one caveat there is the wider spread, you obviously was a little bit faster moving, and so you were out of that trade a little bit easier. Jade lizards have long been an effective way to pair a bullish outlook with the belief that implied volatility overstates the realized volatility. So now the efficiency paired with short-term option markets lets traders put them to work in a matter of days rather than weeks. The Jade lizard, probably an interesting take here. I think I wish we weren't at all-time highs. I wish I was doing this throughout the last month. It would have been quite the trade.
Agreed.
Cool.
Good job out of you, my friend. I think you have a small profit. You'd be the first one to have a profit in selling futures if you take it. Maybe only a point or two, but still, it's there.
No. We'll hold it. We'll see what happens. Volatility hanging in there. This move in oil is nuts. The move in stocks is nuts. We're going into the weekend. Let's see what happens here.
I have a feeling you might be holding this into the weekend. Even the S&P is up 51, NASDAQ up 270 and change. You'll get a chance to take 10 handles on this probably. We'll see. Russell up 9, Dow up 205, bonds up 20 ticks, 113.15. Only true believers there followed me on option trades today. Bitcoin 78.6. It's off of its highs of 79.4. Ethereum up 52. It's about $15 off of its highs. Gold back over. I keep saying gold. Oil back over $100.67, down 440 or so after trading under 100, just slightly over 106. So big range in oil today. Gold up 24, off its highs by $20. You may have caught the top here, son. Silver up $3.77. That's a 4% move there. Nat gas doing the opposite, down small. Let's see what's moving this market across the board here. On the downside, WDC now down 9. So good sale on your, I bet if you took a look at your spread that you had here, it's trading lower. You sold it at $3.30. It's back down to 35 cents, just like that.
Listen, we've been harping on this throughout the whole thing. Stuff is moving, and you gotta be a
both
trader.
Sides sometimes, right? Even you gotta take. Go ahead. You were gonna say.
Yeah, you gotta be trading this. There's a time where, and you talked about it too, with the news-driven market. In a non-news driven market, you can sell the puts and sit on them and wait and whatever. Today and throughout the last, couple months, you're having realized volatility that is way, way higher than what is implied, even though implied volatility has been high. And so when you get these sort of moves, like, SanDisk was down $100 pre-market, and it rallies back 150 points. You can't sit there and do nothing.
And say, okay, now I got the right direction to sit in my trade, right?
I can't. I look at it, I'm like, you know what? This was a gift. I'm out. You move on to the next one. And, some of them you're going to be wrong on. You're going to miss out on stuff. But you're going
to make less profit.
Less profit. And that's easier to live with than watching a profit go to zero and losing the money, right? Like,
Agreed.
The FOMO is, we are peak FOMO right now. And that worries me.
And it is real, my friend. It is real.
Yeah, it is real. Unbelievable.
All right, let's take a quick 90-second break. We will come back, my son. We've got more Tasty Live. We've got more Tasty Live with my friend Q and Tasty Trade World Headquarters coming in next. We'll be back in 90 seconds with Tasty Live.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with tastytrade.
Hello, everybody. Happy Friday, too. Well, we have ended a very dynamic week. Earnings season is effectively done at this point, and Jerome Powell rides off into the sunset as the chair. We got our FOMC meeting out of the way. The war seems to have kind of vanished as an issue, and it's all about lifetime highs. These are definitely the times that try bearish souls. It's funny because recently Tasty's been doing a very good job with the YouTube videos, and my videos used to get 200 views, 150 views, 190 views. There's something like 10,000 now, so it's gotten really popular. But the big splashy captions are often like, "Tim Knight is still short," which must make me look clinically psychotic. There's some nuance to that, you know. I am still, it's much easier for me to short into a market like this than buy stuff, definitely. But I'm not crazy. I try to keep risk sensible. I watched a wonderful Paul Tudor Jones video the other day in which he spoke about how the first job of a trader is risk management. So for example, I'm still bearish on Bitcoin, but my position's half the size it was yesterday because it ain't acting quite right. It's a little friskier and stronger than I like to see. So I'm not just going to put my fists on my hips and say, well, come and get me. If things go against your premise, then you should get out. And if they're starting to look a little on the fishy side, it's okay to trim, which is what I've been doing. So I am still short, but not to the degree I was even a couple of days ago, because this market, this is a phrase I keep using, but it's true. It just seems to keep feeding on itself. And today was a good example of that. About half an hour into the trading day, it just sort of just spinning up. Everything just started really accelerating fast. Now, for whatever reason, since that time over the past few hours, it's been kind of burning off that spin up where we've basically dispensed with that extra goosing the market got. But across the board, it's just, at this very moment, ES, NQ, RTY, all green. Bitcoin, not just green, but green by over $2,000 on the futures. So it's still a very bull-friendly market. Plus, just to add fuel to the bullish fire, now that earnings season is getting behind us, corporate buybacks are going to start to accelerate again because the blackout period is ending. So yeah, any surviving bears out there, you've got my brotherly sympathy, because April was a tough time, and May isn't exactly off to a propitious start either, is it? Well, with that little intro, first day of the month, let's dive into the charts and kind of see what we can see. Start with the diamonds actually down. They got a big goose yesterday from Caterpillar, but they don't have that today. And so the diamonds are in fact down just a little bit, 0.14%. Pretty much open strong and trading weak right now. Still not at lifetime highs, unlike so many other indexes out there. The spider definitely is at a lifetime high. I don't want to make too much of it, but we've got a cute little shooting star at the moment. It kind of depends on where we close. If we close weak, it could be worth noting. I mean, in this market, you don't want to grab too thin of a read for hope about one direction or another. If nothing else, we can see that the day's earlier strength has been diminished, but we are at lifetime highs on an intraday basis, almost certainly on a closing basis, unless things go really sideways over the next 40 minutes. This was all helped, of course, by the big announcement last night, which was Apple's earnings. As I said yesterday, I didn't expect any fireworks out of it. They tend to be boring, which is to say reliably good, profitable, growing revenue, growing earnings. They are up probably more than people suspected, up over 3% right now. It's got a much more pronounced shooting star, I would point out. There's a lot of strength earlier that's been burned off, so that's mildly interesting. Just to get speculative here, if on Monday the high for the day is lower than today's low, pretty nice little island reversal pattern there. That would be more interesting. That's why I'm not too much into candlesticks, unless you see kind of a more complex pattern like that. Complex being 3 days instead of one. But yeah, let's watch for that. See what happens with Apple with respect to Monday. Weekends are weird, as you know. One tweet can change everything. One news event can change everything. but the tension is definitely dissipated, as I'll show you later. Over in Techland, the cubes, obviously helped by Apple and a lot of other things, lifetime high on an intraday basis, as well as a closing basis, up a nice hearty 1.06%. This has just been a sensation since this bottom here back at the end of March. We've gone from around 560 to, we're getting in the neighborhood of 700 at this point. So I can't do the math that fast, but 20, 25%, something like that gain in the span of a month. One item that, semiconductors, of course, continue to be strong. Intel has become like a superhero. It used to be this sad old has-been from the 90s, and that's changed. It's actually a good government investment. They've made, I think I read 30 billion on this and more today. So that was propitious timing there, but Intel is just doing extraordinarily well. As I said, back in the 90s, they were very much the NVIDIA of their day. Everything counted on Intel. It grew and grew and grew. It was like Walmart, is like Coca-Cola, like any other stock that you can just guarantee goes up month after month without fail. And then they stumbled really hard after 1999, and even half a year ago, just looked lousy. But they have been just rocketing. So that a lifetime high now, just about at triple digits. Those of you, I don't hang around Wall Street bets much, but even if you go there occasionally, there became this big kind of trope. One fella had inherited a bunch of money from his grandmother, and he poured it all into Intel. And boy, do they make fun of that guy. All these memes came out, and because it seemed like a really stupid investment. And it did poorly for a while, did very poorly. In fact, what made it so notable was that like the day after he poured all his money into Intel plunged like 20% or something really nasty. Assuming the fellow held on to it, he's like Warren Buffett now. He did great. So he's turned from zero to hero now. Everyone sings the praises of Intel guy. But that was amazing. Other semiconductors continue to thrive. Micron, another lifetime high, never seems to quit. And the PE ratios, all that doesn't seem to matter. They're way into the triple digits, doesn't seem to matter at all. The whole hyperscaling thing continues to feed on itself. So it's not just NVIDIA. All kinds of semiconductor firms. Even, one of the reasons, and this did not occur to me, one of the reasons Caterpillar, because when I think of Caterpillar, I think of like farms and tractors and, things like that. They're actually, AI has touched them in a huge way because they have a big energy division, which is doing gangbusters. So Caterpillar is every bit as relevant to AI as NVIDIA is. Not proportionately, but still. Caterpillar's just printing money. It's doing sensationally well. So with all that said, SMH also at a lifetime high is pushing past the high we saw last week. I've still got September puts on this bad boy at a strike of 520. We'll see. I'm getting a little frustrated with it. This is a very extended rally, to be sure. But these are September puts, but got like 140 days on them, so not going to panic quite yet. Getting more general, emerging markets, EEM, there's those words again, lifetime high. We have zip tire here. This is such a weird bar. I still wonder if this was actually what happened that day. But no, that's a shooting star, and that prefaced the big slog down in March. But we've bested that, not on an intraday basis, but on a closing basis. Looks like another closing high there. A little easier read is EFA, which is worldwide equities outside North America. And in this instance, not only do we have this very pronounced gap, that's marked in red, I spotted another one here just now, right about there. And gaps, of course, can be a lot more common with the likes of EFA because it's based upon outside U.S. instruments. So it's going to be a lot more gappy, just like FXI would be more gappy. But it's still worth noting. And Unlike EEM, EFA is quite below its own lifetime highs, probably more vulnerable to a downturn. And that pattern is still, a lot of patterns have been just wrecked and ruined. This one's still very much intact. So that's worth noting. A component therein is China FXI. And just as with EFA, it might be worth waiting until it pushes toward one of those gaps. Same thing with FXI. If it the closer it gets to the base of this right triangle top, the safer it becomes, the more appealing of a risk-reward ratio happens. Over in crude oil land, getting some weakness there. We're down 3% with oil. The big explosive move was here. It actually terminated early in March, strangely enough. So crude's peak was weeks before stock's bottom. But yesterday and today, we've got some red bars going. I'd mentioned yesterday the prospect of some energy ETFs being interesting setups. XLE was one of them. It closed its price gap nice and neat yesterday, and today it's off a little more than 1%. The one I actually went ahead and shorted, and I'm pretty sure I mentioned this yesterday too, was XOP, which got close to its gap but did not seal it, and it's down not quite 1% today. So I'll just keep the stop right at that price gap and get out should we violate it. Also wanted to mention, we're talking about commodities, gold, precious metals, miners and such. Here's GDX, continues to slip down. I had a little bounce yesterday, but we're down again today. And as you can see, the past couple of weeks, most bars are red. Most days end lower than it opens. The inverse of that, of course, the leveraged DUST, D-U-S-T, is up about 25% over the past couple of weeks as gold weakens, as the gold miners weaken. And I don't see any reason why this should stop climbing. For myself, earlier today, I did short GLD, gold, based upon this price gap like so. So the stop is set just above that gap. I do think gold itself is going to continue to sort of leak its way toward about 4,000 or so per ounce before it stabilizes. As you might guess, as I glance at my screen here, it's funny because my portfolios, I don't design them to have a particular personality or sector or anything like that. It's just kind of a random hodgepodge. There's some days like today where one of them, and they're both full of shorts, one of them is mostly down, which is good, and the other one is almost entirely up. So maybe it's just dumb luck, but one of them's doing pretty lousy, one's doing okay. But there are a few shorts out there that continue to behave themselves, even in this all-green market. AST Space Mobile, we're down 3.14% on that for the day. Carvana, which, as I said, gave me a real scare Wednesday night, down again today. Nice fall yesterday, and then again today. We're plumbing the depths that we were at on an intraday basis. Yesterday was a very strange creature, as I said on Thursday, because after earnings, the stock rallied big time after hours, and then the next day it just fell to pieces. So I'm not sure what changed overnight, but still short Carvana. And also Rigetti, RGTI, down not nearly as much, but about 0.25%. And my puts on Meta still hanging in there. We had our big fall yesterday, lost about $55 or so on the stock, and today we're inching down a little bit more. Not quite another dollar on that. But as I said, these are also September, so I'm going to just sit tight on them. Fear has left the building. We spiked up on the VIX to the mid-30s right here, as you can see, and that's probably contemporaneous with a oil explosion, and it has just absolutely fallen to pieces back to normal times, simpler times. We're down to 16. Wouldn't be surprised to see this at 15 next week. It's just getting pummeled. The last item, and as I mentioned at the top of the program, Bitcoin is acting way stronger than I would like to see. This morning I trimmed back on my short by 50%, and should it cross this gap, that'll be 100% out. But I'm going to stick with half the position for now to see how that goes. On the cash, about 81,200. That's the cry uncle point for me. So, hope you have a good weekend. I will see you here on Monday, and welcome to the new month. We'll see you later. Bye-bye.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are back, final half an hour of the trading day. Trading week here. You're watching Last Call. This is Tasty Live. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, it's mostly a good day here for the stock market, unless you're the Dow Jones. Still can't get back to Dow 50K. But before then, the NASDAQ's playing catch up. 28,000 in sight right here, over 1% gain on the day. We've been more or less stuck for the past hour, slightly lower than where you and I last left off at the end of Futures Power Hour. S&P 500 trading in at 72.73 or so. It's a gain of about 0.4%. That's 30 points on the nose for the session. Ryan, we can go right to those charts here and get into it. We likewise see that it's a good day for Bitcoin, up 2.5% on the session. Futures here rounding out to 78,725. All this on the back of oil prices coming back in by about 3%, down to 101.99 here as we finish up this trading week and we wait more news from Iran over the weekend. Of course, Ilya, we can talk about bonds, we could talk about what's happening in the currencies, but who cares when we have all the Mag 7 names to discuss? Apple.
Yes.
Love the spring. Apple here is continuing to trade higher, up more than 3% right now. Implied move for yesterday's earnings was just right about 1.2%. So an outsized move to the upside here, even though it's off the high, still trading at 280. You have your Google Alphabet this week, which charged up into fresh all-time highs, now 385 here, finding continuation from yesterday. There are some losers, though. Not everything was great. Microsoft's bouncing back, but it was a tough earnings reaction yesterday. Meta, likewise, still down in the dirt. But it was a big week. We had 5 of the 7 Mag 7 names. NVIDIA doesn't report for 3 more weeks. We just got through a Fed meeting. Next week, we're going to have non-farm payrolls. Volatility has come in, though, Ilya. 16.66, 666 there on our vol screen. Is this demonic levels of complacency, dare I say?
Well, here's an interesting sort of thing that I've been watching here. If you take a look at where the big earnings announcements start for this season, you go, okay, let's say the banks are the first kind of real run. That's the 15th, the 14th. The first real name of the mega cap, and not even, but sort of the tech flavored names, is Netflix on the 16th. Where do stocks bottom? 17th. So you get this sense, oh, well, we get the ceasefire news, everything turns, it all turns right there. But stocks conveniently decouple from the war trade right at that moment. And whereas everything else is still showing the war trade, everything else is still, higher oil, higher yields, higher dollar for the most part. It's only pulled back about halfway over the subsequent several weeks. Oil is still more than 30% pricier since the war began. Yields are almost back to their wartime highs. The dollar's a little bit bruised because Japan waded in, but the war trade is alive and well. Stocks, they had their own story. But now, you mentioned we don't get NVIDIA for another 3 weeks. Now there's a pause. And maybe we go back to our previously scheduled programming because the event risk that had stocks decouple on razor thin volume, maybe it's over now.
I'm looking at the stock market here across the board today. While we are seeing some sector differentials play out at the bottom of the pack is construction right now. ITB, you have energy down there, XLE, IYE. On the top end, it's a lot of familiar names. They're tech adjacent, they're AI adjacent. Telecom up another 1.66%. I pulled up Volt before, which was an electrification ETF related to what's happening in terms of the build out here. We could take a look at something like Chat, which is the Roundhill generative AI tech ETF. That's closing up here at highs. The data center ETF here too, Ilya, that is one of the main takeaways of the earnings over the course of the past week. The data center demand is very high. The compute demand is through the roof. I suppose it's a good time, though, as we consider the week's earnings now that they're in the rearview mirror. As we look at an S&P 500, that might close up at 72 or so. FactSet has out their latest earnings scorecard here. And oh my God, I can't believe this number. Okay, Ilya, we got a benchmark coming into the quarter. Coming into the quarter, the expected earnings growth rate for the S&P 500 was 12.2%. Now that 63% of S&P 500 companies have reported the blended earnings growth rate. So that's all of the actuals coupled with the projections for what's left. The actual blended earnings growth rate for the S&P 500 is 27.1% after the past week.
And last week it was 13.4. So check
doubled.
the leap.
It's doubled.
Check the leap, right?
Yeah. So
we started.
What do you mean this isn't? What do you mean this bull market's not justified?
13.4.
And now it's 27.1 after we've gone from 28% of companies having reported by the end of close last Friday to now 63% here.
Hyperscalers are hyperscaling.
So with that kind of margins growth, with that kind of earnings growth, valuations in the market are actually relatively contained despite the fact that this thing has shot up higher here. As it were, the forward 12-month PE for the S&P 500 is now 20.9. The 5-year average is only 19.9. So it's not like we've seen tremendous runaway valuations here, Ilya. When does this stop? This is the best quarter that we've seen for our earnings so far since post-COVID, which of course everyone was like, oh, how can you look at those things? That's all base effect nonsense. Right. We're not going to get 30% earnings growth rate, but now we're looking. This is
or maybe we are.
Or maybe we are. So
one interesting thing here.
Why be a bear then with that kind of backdrop? The fundamentals are so strong.
I don't think you need to think that the fundamentals are weak in order to think that the markets are in the wrong spot. I think you look at this and you say, well, I mean, yes, of course. I mean, we know what's going on. Again, you need only look at the GDP numbers and just put this together. Non-residential investment, as we were saying before, contributed more to GDP in the first quarter than consumption. Non-residential investment is 14% of GDP. Consumption is 68% of GDP. How fast does that 14% need to grow? Like, how quickly to the sky does that little piece of the pie needs to surge to outpace the part of the thing that's 68% of the whole? Just kind of visualize that. The surge in non-residential investment is what? It's data center build out. You don't have to be a naysayer of that reality because it's a reality. This is a fact that there's no debate here. The question isn't that as ever. Because if that kind of logic worked, then every time a central bank cut interest rates, its relevant currency would fall. Every time that they hiked, it would rise. Every time the unemployment rate went down, markets would like it, and every time it went up, they'd hate it. But we know that's not how things work. Markets are discounting mechanisms, and they work on expectations. So it's not that none of this amazingness isn't there. Of course it's there. It's ridiculous to say it isn't. The question is, are we correctly priced? Are we something like fully priced for what's going on? Because all of this existed 6 months ago also and was being extrapolated into markets. And the larger question now really is, we're starting to see these very names creak because demand is so rabid that they can't keep up. And they've announced something on the order of $750 billion in more capex between just the big four that reported this week, not including Apple. Just Meta, Microsoft, Alphabet, and the
Google.
Sort of
Alphabet, Amazon, Meta,
Alphabet,
Microsoft,
Amazon,
Apple.
the big data cloud providers. So Apple aside,
IBM,
right?
Microsoft, Oracle, Google,
Qualcomm,
Baba.
like that piece of it. And not just the big four, but that chunk of the story. What $750 billion in capex is astronomical.
Sure.
But to do that, what do you have to do? You have to have the inputs to do it. Oh, they're stuck in this behind the Strait of Hormuz. You need a gazillion dollars in energy costs, and the price is rising. You need the political will to build in the places that you want to build. 10 states now have various efforts at building moratoriums. And in Maine, the governor that vetoed a moratorium like that just got booted from her Senate race. So what you look at here isn't
she closed it down because it was pathetic.
Well,
but be fair.
It's not like there is an absence of demand. That's not the issue. And that's why these services are starting to throttle performance. Notice how Claude is now starting to say, hey, you've used too many tokens.
Oh gosh, I hate that. It's like 6:30 in the morning and I'm doing something and I get this feedback like, hi, you have one more message left at this this level. Otherwise it's going to revert to the free version. Like, what do you mean? What are you talking about?
right?
What do you mean I'm running out? I've put in 2 prompts so far.
Right.
What are you
OpenAI
talking
has been
about?
open about it. They came out and said, so we had to shut down Sora because it's nice that you all like your videos and all, but we need this compute elsewhere. So yeah, there's tons of demand, astronomical demand.
Astronomical demand,
But
and
you
a
have to-
broadening
you
out
have
of
to
demand.
execute.
And they are executing. How do you get to 60%?
No, sure.
For back 7 names.
You have to, and this is the point. You have to execute from here because the question becomes now that it's in GDP data, notoriously lagged GDP data. Where is it not priced in?
Oh, that's so much fun. GDP is artificially inflated, which prevents the Fed from cutting as much as it wants to because of data center growth. Data centers, which don't bring about any jobs. And I say that's not actually fair. In my county, there was a $77 million, my congressional district, there was a $77 million grant given for a data center. And it resulted in 1 permanent job. 1. $77 million.
The political will aspect of this is a very important
job.
It's a very important thing.
Well, but
right?
you know what, Ilya, I want to point out to
volumes.
the broadening rally here because the rally is broadening out today. And I think one of the most interesting things that's happened over the course of this week, we talk about this, I don't want to say in like a supply side economics trickle down, but NVIDIA here and the strength that you're seeing in the big names, right? NVIDIA is actually weaker over the past few sessions, and yet semiconductors SMH is going to close at an all-time high.
Yes.
Right. There are signs of more broadening out that has been so desperately needed in this market where it really has been a lot of concentration at the top level. It's been the Mag 7 names. It hasn't been the equal weighted indexes that have been moving this thing higher. And now we're going to get the highest close that we've seen in the equal weighted NASDAQ going back to February 3rd, right? The February 3rd open, which, I don't know how we could look at that as a bad thing. Same thing for RSP. You've been seeing advances over the course of the past few days. Today's a little bit red, but all things
RSP,
considered.
interestingly, hasn't broken out past those October highs.
But neither has QQEW, right?
That's an interesting aspect of this, especially given how weak the volumes have been. And so if you were getting
so
this,
unbothered by the volumes compared to
I'm very bothered by the volumes.
Do not give a crap.
Because,
Don't care.
Well, I mean, you can ride a market in a direction in thin volume. In fact, that thin volume probably helps propel you. It also is something that questions the degree of conviction. And so maybe it's easy come, easy go, but that doesn't mean that easy come has to stop at any given point. We'll see. But I mean, I think even just technically, if you look at today's candle on the S&P, that's not what you want to see if you're bullish. But when you look at the equal weighted indexes, to be sure, you see some evidence of rotation. The question is, are you just pushing little bits of money around, and then when volumes rebuild, you're going to get a very different kind of a thing?
Well, when volumes are higher, typically get a pullback, right? People panic sell, they don't panic buy.
We've seen that this week. Volumes have been stronger on the downside than the upside.
But yeah, I hear you on that, but I look at the NASDAQ on the other hand, and NDX is closing strong. That is a close.
Oh, there's no question.
So this is a question of where the tech is right now. The one thing that I saw earlier, though, in the FactSet data, which really intrigued me, not this, which is the bottomless EPS estimate, where if you're looking at earnings compared to where the price has been, this would imply like a 7,600 year-end market or so. Let's go over here. The earnings growth rate for the Mag 7 companies coming into this quarter was 22.4% versus everyone else at 10.1. So we'll call this the S&P 493. The S&P 493 has seen an actual earnings growth rate of 16.4%. So it's actually been better than what the consensus was for the entirety of the market, which includes the Mag 7 at 12.2 when we entered the quarter.
Yeah.
I think this is one of the points that we really you can't ignore right now in the short term. This is not just an AI story, or maybe it is AI that's boosting productivity across a number of industries and sectors right now. that's allowing this to happen, where you're having low hiring, low firing, and yet companies' margins are increasing thanks to these productivity enhancements.
Yeah.
Ilya, that's fantastic news. And not for nothing, the Russell here had that really nice bullish engulfing bar yesterday up against its 1 month moving average, lower low than the prior day, close above the prior day's high. And we are now cycling up to what would be a high close of the year here in the Russell 2000. So small caps are doing it, telecoms are doing it, semiconductors are doing it. Those are all the growthy things.
One of the interesting things you saw in those.
View.
So one of the interesting things, right? I mean, obviously, we can see that the adoption of AI is greatest in tech, and there's some great data on this that kind of breaks it down by industry and shows the depth of penetration. And obviously, tech is frontline. So you look at that in the context of some of the earnings that we saw this week, in particular, those big four. Amazon was not that, but Meta and Alphabet and the rest showed a lot of this. You had much bigger beats on EPS than revenue. And like by significant margins, you'd have something like an 80% beat or a 60% beat on EPS and maybe a 2 or 3% beat on revenue. And you start to get this sense that companies are being more efficient. They're squeezing more earnings out of revenue that's really not too off from where analysts thought. And that may well be some early evidence of AI penetrating and sort of showing what's going on.
Ilya, we're just a few minutes from the close, about 7-8 minutes away here. But before we ultimately get there, I know that we want to splash something up here on the screen, Matt, about the PDT rule, because after 25 years, the PDT rule is gone. The SEC just eliminated the $25,000 minimum trade limits and the pattern day trader label. In its place, real-time risk-based margin. So this affects over 1 million accounts nationwide here. And with the rise of zero DT options and near-term hedges, traders now have a bit more freedom to trade how they want, when they want. We've now seen that we actually have a date here, Ilya, for when this is going to happen. We have a Trader Independence Day coming up around the corner. That's effective June 4th, 2026. Dare I say that with America's 250th anniversary, we may be having some fun here with this Traders Liberation Day, Freedom Day, Independence
you said
Day.
the magic words now.
We're going to get there. Stick around. Stay tuned. Ilya, we have to get back to these markets here. Stocks are slagging off a little bit as we go into the close. Brief reminder that the Strait of Hormuz is open Monday through Friday, 9:30 a.m. to 4 Eastern. And it seems to be closed on the weekends when we actually get all the bad headlines out in the world. Oil's a little bit lower here coming into the week close. We're up at 102.38. So maybe about a 40 or 50 cent bounce from the open outcry close at 101.94. You were talking earlier about 50 cents ago about wanting to look on the long side here.
Yeah.
Let's just work through a Sunday open. First call, which is coming up Sunday. You and I will be there. Are you more concerned with oil gapping open higher or lower given the tenor of the news that we've seen play out over the course of the week? And did you ultimately get long?
I didn't. I couldn't get filled. So I tried to structure something in USO, and I couldn't get filled. And I tried to bid it higher and work the order a little. Market didn't want it. So we'll see. Thankfully, I'm still deep into war trade positioning. So I'm short bonds through TLT verticals. I'm long the dollar. I'm short gold just in the futures. So if there is some sort of an oil spike, I will see it through those vehicles. But I think the risk is, of course, that we get something over the weekend that makes this whole thing look much more war trade-ish. And it need not be news flow even. It could be the absence of it. I think the market wants something to happen. I think they're hanging on to some green shoots here with the new proposal. If nothing comes of it, that might be disappointment enough.
I'm taking a look at the energy complex here, which continues to run higher across the board, except for natural gas. You and I touched on this earlier on Futures Power Hour. There's probably not much to do down here. In terms of volatilities heading into next week, there still has been, generally speaking, a bit of a vol crush in the market. Curiously enough, most of the high volatility that you at least see through the futures lens is going to be seen in the currency space right now. And there's a lot going on in the currency space, particularly when it comes to a Japanese yen intervention. We're likewise seeing a little bit more vol in the grains here, Ilya. Some of the soft ag products have IVRs north of the 40 still. But otherwise, it's beginning to normalize a little bit more. I know ES and NQ are where we look, but if I look at SPX, the IV rank of 37.5, ES has one of 35.3, NDX is down to 9.3 right now, even though NQ is still showing a 47. I think the VIX below a 17. I can't believe that we're below 17 here. Definitely was not on my bingo card 2 weeks ago, a month ago. But this is where we find ourselves right now. I did see that a carrier strike group left the Middle East today. They
where we drifted into the close, if we look at basically the past 5 hours or so of trade,
slow
5-6 hours.
We
look at drift higher in the dollar.
So algorithmic. Come on, look at this wave.
Yeah.
The programs are running the show in a low volume environment right now.
You get a slow pullback in S&P and in gold and in the bonds and a drift higher in the dollar. In fact, the drift higher in the dollar probably looks like the realest of all these moves. Take a look at euro over the course of just the past 5 hours. Yeah,
it's just slowly melting down. But that's the thing. The S&P was at 7,300 ever so briefly today, and we're down at 7,262. That took 6 hours to get 40 points off the board. So we're losing on average, 6.7 points an hour for the past 6 hours. You really haven't felt it. It's felt like a very slow, quiet day.
Grinding it down.
Grinding it down with all this programmatic selling. Look at this market. Look at the euro. So it's a Friday. It's low volume.
It's a Friday.
Close. Next week, because we still have earnings. We've gotten through a bulk of the earnings here, but we haven't gotten through all of them so far. Trading resumes, of course, on Monday, where after the close, the name that folks are probably paying most attention to, Palantir, is due up. And for what it's worth, Palantir going into next week, it only has a 35.8 IVR. We're looking at a $13.60 move through next Friday's close. That's less than 10% here, about 9% or so. Tuesday, you're going to have AMD, which is definitely a name that folks around these parts would be paying attention to, given how AMD has traded here in recent days. Seen a lot of people on Wall Street bets celebrating, which good on them. This was a clean setup that I just did not take advantage of. Just looks fantastic, and others did as well. ARM, which we go into AMD, we go to ARM. ARM's been on a tear. That's Wednesday. Thursday next week, Shell, McDonald's, Gilead, McKesson, nothing too much of a standout. And then on Friday, Enbridge. You mentioned that there are no companies with market caps north of $1 trillion over the coming days. If you're looking for the biggest market cap name, that's going to be your AMD on Tuesday. Ilya, through the end of next week, broadly speaking, the S&P 500, looking at the options chain here, we're looking up 7 days in ES, 96.5 points in either direction. So we could be looking for a move maybe up through 73.50. We could be looking for a drop down maybe below 71.70. With non-farm payrolls on Friday, do you think that the market's underpricing the risk? Because 96 points for a week with these earnings plus Iran plus NFP does seem small. Would you get long a strangle or a straddle here?
No, I think I like being directional. And I also, because my directional opinion does not comport with what the markets have been doing, I'm not going to add any more exposure than I already have. I'm obviously naysaying and questioning this move and saying this looks more like stocks went on an earnings vacation. That earnings vacation is probably over now, at least for a while. And we can get back to the regularly scheduled programming that's been going on in every other market. So I'm not adding anything. I am sitting. Oh, here we go. I'm sitting on my bearish exposure. I'm going to let it unclench with the benefit of time. I still have 40 plus days DTE on it. So with the benefit of time, I'm going to wait and see. But I am positioned for the war trade to continue in virtually every other market.
You mentioned resuming regular scheduled programming. That continues on Sunday, 5:55 Eastern, 4:55 Central, when First Call is on. You and I will be back.
There.
So we get a very, very brief 49-hour, 55-minute break. So hope that you have a pretty good weekend. Other than that, thanks for watching Tasty Live today, this week. Another great week for markets closing up at all-time highs. Thanks to the production team, and we'll see everyone on Sunday. You've been watching Tasty Live. Have a good weekend.
Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, my son. No more knuckleheads, just the two of us. And then there were two.
Oh wow, I feel so loved. I'm not a knucklehead. It's only a knucklehead when Venato's here. I hope she's not listening.
It didn't elevate you to star status when you're the last one left. That's how it works. That's how it works.
I don't know if it's like last man standing, you know, like the last available, the only available.
Best available.
Best available. That's right.
Best available. Well, how are you, son? I hope you had a wonderful night. I'm going to talk about myself for a quick second. Because
sure, I got something for you afterwards too.
Do you?
Yeah. Go ahead. Do your spiel.
I was going to say, well, you know, Chandler, your sister's coming in on Sunday, so wife is in full, do not bother me mode. I got to get the house ready for your own child.